You free, sets you free. Whoa. Cash for gold, the deal's so bold. And death's planes, it shines, I've been told. Call now, 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides, bring them here, unleash their pride. Death's planes, gold deals catch fire, turn old memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides, bring them here, unleash their pride. Death's planes, gold deals catch fire, turn on memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers can fly so high, turn it to gold, the riches collide. Don't hesitate, pick up that phone, 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Oh, dial it fast, the number's your key. Your key, your old treasure sets you free. What's locked in drawers can fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone, 847-376, make it your own. Oh, 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 oh. Your old treasure sets you free.
Cash for gold and coins and death's planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Death's planes, blinging in the fast lane. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, blinging in the fast lane. Cash for gold and coins and death's planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bar, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. There's planes blinging in the fast lane. Cash for gold and coins, desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Hit that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. There's planes blinging in the fast lane. We're number one.
Cash for gold and coins in desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, and desk planes winning in the fast lane. Cash for gold, and desk planes winning in the fast lane.
Kasa za złoto i monety Desplanes. Bo nie has to nie sen. 84737682881. Zrób to deal, to jest plan. Złote statki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za zedło, to nie czekaj, graj. Desplanes świeci, błyski haj. Za złoto i monety w Desplanes. Płonie hajs, to nie sen. Dzwoń 847-376-8281. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za zedło, to nie czekaj, graj. Desplanes świeci, błyski haj. Złoto, nie czekaj, graj, Desplanes świeci, błyski haj. Kasa za złoto, nie czekaj, graj, Desplanes świeci, błyski haj. Kasa za złoto i monety w Desplanes. Płonie hajs, to nie sen. Dzwoń 847-376-8281. Zrób ten deal, to jest plan. Kasa za złoto i monety w Desplanes. Płonie hajs, to nie sen. Dzwoń 847-376-8281. Zrób ten deal, to jest plan. Kasa za złoto, nie czekaj, graj, Desplanes świeci, błyski haj. Kasa za złoto, nie czekaj, graj, Desplanes świeci, błyski haj. Kasa za złoto.
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, bringing in the fast lane. Cash for gold and coins, desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, blinging in the fast lane. We're number one.
Cash for gold, the deal's so bold. There's planes that shines, I've been told. Call now 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Sets you free. Whoa.
Kasa, mam jakiś bezpłynny. Płonie hajs, płonie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
Dzwoń 847 376 8281 zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Display świeci błysk i haj.
Stunned markets, vaulting gold nearly $600 year to date and signaling
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Display świeci błysk i haj.
Kasa za złoto i monety to jest prenes. To nie hajs, to nie sen. Dzwoń 847 376 8281 zrób ten
would
deal,
set
to
these
jest plan.
events in motion. I didn't realize that we would do it to ourselves, but we have. We've pricked our own bubble, and there's a lot of air that's going to come out of it. You know, Donald Trump looked at our huge trade deficits and just concluded that the trade deficits themselves were the problem, and that they must be the result of foreigners cheating us and ripping us off. Well, the reality is the trade deficits are the symptom of the problem. The problem is here in America, and we're not getting ripped off by anybody. Nobody's cheating. The problem is we as Americans, for decades now, have lived beyond our means. We consume more than we produce. Now, how is that possible? Well, we go into debt. We sell off our assets, we outsource our manufacturing, and we borrow money, and we get to live a standard of living that's higher than what we're really entitled to based on our collective productivity. Now, it's the rest of the world that makes that possible. They produce what we don't, they buy our assets, and they loan us the money. And so what does that mean in America? Well, we have more stuff to buy at lower prices. We get lower interest rates because of all this foreign capital, and our stock prices are higher. So we get to be rich on paper because we have a high stock market, and we get low interest rates and low consumer prices. Now, according to Donald Trump, that's the world screwing us over, ripping us off. And he wants that to stop. Well, if that stops, well, now, the ride on the global gravy train is over. We can't live beyond our means anymore. So we have to live within our means, which means we have to consume a lot less. We have to save a lot more. It means that our interest rates go way up because we're no longer borrowing all this money from foreigners. Our consumer prices go way up because we're no longer getting all their stuff. Our stock prices go down because they're not buying our stocks. So Americans are going to see a huge decline in our standard of living and a big drop in their net worth. But I mean, that's liberation, right? That's, I was warning that Trump was threatening to liberate us from our standard of living and liberating us from our stock market wealth. And that's what's happened. And it's just starting. This is going to play out for the rest of the year, next year. This is a huge trend that's just going to get more and more momentum.
Okay, so this is going to continue out for a little while. Before we get onto the economic outlook, I want to talk about gold here for a second because, I mean, this price action has been wild to watch. We're seeing this massive move, rising nearly $600 this year alone. We know some of the basic major drivers. Obviously, we covered extensively here, central banks, what have you. But what's behind this surge here? I mean, what do you think is going to be the next year here on the gold market?
Well, gold's up over $250 in the last 3 days.
Yeah.
Right. So we're accelerating. Last couple days, we were $100 a day, and maybe we'll be up again. Maybe we'll be up another 100 by the time, they close today's trading. But what's happening, and what I've been telling people was happening all last year, as the price of gold went from 2,000 to 3,000, and nobody cared, and nobody was buying it because everybody was, sidetracked by Bitcoin and all the talk about digital gold. Nobody but foreign central banks were buying actual gold. And the reason they're buying gold is because they're getting rid of their dollars. They are preparing for a world where the dollar is no longer the center of the monetary system, where it's no longer the reserve currency. And so if you're going to get rid of dollars, what do you replace it with? Well, gold is the most likely alternative to the dollar. And that's what they've been doing. Although I think recently, central banks are probably also adding euros. My guess is that the Bank of China is buying euros as it may be selling dollars, because I think they need to replace Americans as customers. And the Europeans, there's more Europeans than there are Americans. And now that the euro is at a 3-year high and soaring, the Europeans are getting richer as Americans are getting poorer. And so all those goods that China can no longer export to America, they can export those goods to Europe. And as a matter of fact, China is not going to be importing any more goods from America. And so they're going to import a lot of the agricultural products or other raw materials that they used to get from us. They're going to import them from South America. And so now those countries are going to be richer because they're going to have more export earnings. And now they're going to be able to afford the goods that China is no longer shipping to America. See, Trump really overplayed his hand. He thought he had the cart. He had nothing, because it's easy to replace consumption because anybody can consume. We don't do anything hard by shopping. The hard part is production. Supply is what creates demand. It's easy for China to consume what they produce or to trade what they produce with others. What's impossible is for America to consume what we don't produce. So trade ends, America is stuck. All we have is paper. And that's why inflation is going to go through the roof in America, because we're going to have all this money with nothing to buy. And eventually Americans are going to start buying gold. I mean, they've been selling gold. They've been selling gold stocks. But, I've been telling people to buy gold, for over 20 years. When I first started recommending physical gold to my clients, it was under $300 an ounce. It's gone up more than tenfold. In fact, gold has outperformed the stock market for the last 25 years dramatically. I think the S&P is down maybe 65% priced in gold. So the whole bull market is an illusion created by inflation. Gold lets you see economic reality. But really, for the first time in my career, I'm actually telling people that for now, don't buy physical gold. Just wait. Because even though the gold stocks are at new 52-week highs, and they're up maybe, 15, 20%, they're jumping finally. But gold stocks are much lower than they were a few years ago, or 10 years ago, or even 20 years ago, a lot of them. Gold stocks are dirt cheap. And the reason for that is central banks aren't buying gold stocks. They're just buying the physical gold. But they buy the physical gold that the gold mining companies produce. And their profits are about to skyrocket because oil has never been this cheap in history relative to gold. That is the biggest cost for these mining companies. They're trading at single-digit multiples. Gold mining stocks have never been this cheap, not only relative to gold, but relative to the S&P 500. They're giving these stocks away. When you buy gold mining companies, you're buying gold that's still in the ground. And gold in the ground has never been cheaper in all of history than gold above ground. And so what I'm telling people now is, look, I think gold's going higher. Gold could hit 4,000 this year, but that's not that big a gain from 3,250. But I think if gold does hit 4,000, gold stocks are going to catch up. That means they can go up 5x. So rather than making 25%, make 500%. By buying the gold that's still in the ground. So for now, I mean, I don't know how long this sale is going to be going on. I expect a ballistic increase in these gold stocks. I mean, that's what I've been buying myself mainly. I've been adding to my gold stock position, not my physical gold position.
But are you buying majors? Are you buying juniors here, Peter? Who are you buying in this market? I mean, what are you looking at?
Well, I'm buying everything. We own a lot of the royalty companies. We own a lot of the exploration, the juniors, the big producers. Look, the senior companies are ridiculously cheap. Their earnings, their Q1 earnings are going to be good, but their Q2 earnings are going to be phenomenal. The ones that started in April because of the collapse of the price of oil and the rise in the price of gold. So the analysts are not covering these stocks. Nobody is there. The last major moves were downgrades. I remember in early 2024, like February or March, they downgraded Newmont, they downgraded Barrick, and basically to sells. And the analysts said the reason we're downgrading is because gold's at 2,000 and we don't see any upside. Everybody thought 2,000 was the top. Yeah. And I kept saying, no, 2,000 is the new floor. And so Wall Street has completely missed the gold trade. They don't have any money in these gold stocks. Again, they bought Bitcoin ETFs and all kinds of crap. Bitcoin, since it peaked in November of 2021, is down more than 30% in relative to gold. So with all these ETFs, with Super Bowl commercials, with electing the first Bitcoin president, with the Bitcoin Strategic Reserve, all that hype, and Bitcoin has gone down by 30% relative to gold. And nobody wants to acknowledge that. Bitcoin is in a massive bear market, but that's one of the reasons that gold stocks are so cheap, because people that should have been buying gold stocks were buying Bitcoin, either through the ETFs or through MicroStrategy or any of this nonsense. I just came out with a special report. People can get it for free at Euro Pacific Asset Management, Europac.com. A special report, the best way to buy gold, in which I really make the case that gold mining stocks have never been cheaper than they are right now, and that's how you got to buy gold. Even though gold's going to go up, the gold in the ground could go up much more. And then, when you triple, quadruple your money in these gold stocks, which I think you could do very quickly, then take some profits and buy more physical. Even if the physical has gone up, it won't go up nearly as much as these stocks. So it's like a once in a lifetime opportunity to take advantage of the fact that everybody's been asleep. And, the central banks have been buying gold, and they haven't had any competition from private investors. Well, when private investors wake up, especially the endowments and the pension plans and then the hedge funds, when they finally realize that they've got it wrong. Remember, all the experts said that tariffs would make the dollar go up. That's how little they understand of this global relationship. Everyone, every single economist, every market strategist kept saying tariffs are going to be good for the dollar. Tariffs are going to be good for the dollar. I'm the only one that said no. Tariffs will actually be bad for the dollar. And so when you guys figure this out, they're going to start buying these gold stocks. You got to buy them first.
One of the things that I find interesting is you've been warning about stagflation for years too. I mean, you've been pretty outspoken about it. And I don't know if you saw, but when we had the latest University of Michigan data come out this morning, and it might be confirming this. I mean, sentiment just plunged to 50.8 with expectations crashing to 47.2, the worst since 2022. One-year inflation expectations jumped to 6.7%, the highest since 1981, and longer-term inflation is at 4.4, more than double the Fed's target. Is this the moment stagflation becomes undeniable?
Yeah, well, the year ahead inflation expectations now are 6.7%. And I mean, this is, the Fed keeps saying that expectations, long-term expectations remain anchored at 2%. What are they talking about? Nothing is anchored at 2%. We've been adrift for a long time, and now we're at 6.7%. And you know what? It's going to be a lot higher than that. right? The Fed is completely wrong. You know, it was about a year ago when Powell said he laughed it off. Somebody asked him, you know, people are a little worried about stagflation. And he said, oh, I don't know what they're worried about. I don't see any evidence of stag. I don't see any evidence of inflation, you know. And I said at the time that that statement would go down with subprime is contained and inflation is transitory. It was something that was completely obvious that the Fed was oblivious to. And in fact, they don't even have a plan for stagflation. When somebody asked him about it at a press conference, he just knocked wood and said, well, we just hope it doesn't happen. And that's because they can't do anything about it. In fact, all of the stress tests that the Fed puts the banks through, when they have the most adverse economic environment, has interest rates falling sharply, right? They've never stress tested a bank for stagflation. They've never tried to see what would happen to American banks if we had a recession with rising interest rates. And the reason they probably never did that is because they know every American bank would fail. So we have a completely insolvent financial system, which is another reason that people want to pull their money out and buy gold. Because then, you know, you own something. You don't want to just be a creditor of an insolvent banking system. But rather than buying the gold, buy the gold mining companies. Because that's where, if you want to buy gold, somebody's got to mine it, right? And there's so much gold that needs to be bought. All these central banks, if you look at the dollar reserves, especially in the emerging market economies, how much dollars they have to divest themselves of, they have to take all those dollars and turn a lot of it into gold. The gold's not there. So somebody's got to pull it out of the ground. And the companies that are doing that are going to make a fortune.
According to billionaire Larry Fink, when he talks to CEOs, they tell him that the U.S. is already in a recession. I mean, what's the timing look like on both of these things?
Well, I've been saying we were in a recession for a long time. That's why Donald Trump got elected. The government keeps lying to us about the economy because they're understating inflation. And inflation is masquerading as legitimate growth. But the public was living under hard times. Now, they voted for Trump because Trump promised to make everything better. Now, they're going to be very disappointed because things are going to get a lot worse. As bad as the economy was under Biden, it's going to be worse under Trump. As high as inflation was under Biden, it's going to be higher under Trump. Now, the same thing might have happened if we elected Harris. But, you know, Donald Trump did accelerate this process, right? He really upset the apple cart by, you know, imposing these tariffs. But if Trump didn't do it, the market would have done it eventually. But he's now set it in motion. And now the question is there any way to undo it? Is there any way to stop the air from coming out of the bubble? I don't know. You know, maybe Trump could come out and just call it all off. But it's hard to say that you'd be able to put these worms back in the can.
Yeah. And I mean, what did the Fed do here, too? I mean, if you're Jay Powell right now sitting here watching this, you got this data coming in and you're watching your Treasury market. What's the pivot?
Well, the Fed needs to raise rates. That's what they're supposed to do. But they're not going to do that. There's no way they should cut. They never should have cut. They never should have stopped hiking. The Fed never got into restrictive mode. That was a lie because credit continued to grow to record levels in the government, in the private sector. That meant that credit was too loose. The Fed never had tight money. Also, look at the price of gold. You know, when Alan Greenspan was Fed chairman, he said that he used gold as a way to tell whether he was too loose or too tight. And he said that if gold got up near $400 an ounce, that meant that he was too loose. And if it got down near 300, that meant he was too tight. Now, obviously, at the time, it was trading at around 350, right? So he was looking at gold as an indicator of whether or not he had the correct monetary policy. Well, Powell watched gold go from 2,000 to 3,000 and cut rates. What was that telling you? Gold was telling Powell that he was making a mistake, that rates needed to be higher. But the reason he's cutting rates is because we're insolvent and we can't afford higher rates. But so I think the Fed is eventually going to cut rates and go back to QE. But they're waiting for everything to collapse, right? Because they don't even know that it's going to collapse. But they're waiting for some signs that the financial system is buckled. You know, maybe they want to see big layoffs, which are coming. We're going to have widespread layoffs in the United States because the whole service sector economy is going to shut down because all the imports are going to be cut off. So we got nothing to buy. So all these businesses are going to be going into bankruptcy and laying people off. But when the Fed cuts and goes back to QE, that sends inflation through the roof. So it's high and it's going to be a lot higher. And then it sends the dollar through the floor. And it's actually going to send long-term interest rates higher.
Interesting.
So, we're at the end of the road here.
Hey, get back to that treasury market conversation here, too, because, I mean, it's sending a lot of worrisome signals for the U.S. and the rest of the financial world. I mean, China is holding the second largest stockpile of U.S. treasury bonds. Analysts, investors, again, we're getting into that question whether or not Beijing might start offloading in response to these tariffs. You were just talking about Europe, too. If this happens, I mean, what impact could it have on the U.S. and global financial systems? But more importantly, can the Fed step in fast enough if the confidence of the U.S. sovereign debt collapses, or is the policy window already closed?
Well, I think that there's going to be a massive loss of confidence because it's been a confidence game the entire time. But look, this is going to be a financial crisis much worse than 2008, but it's not going to be global. It is a U.S. crisis. It's not a global crisis. It's actually liberation for the rest of the world, because they're going to be liberated from the burden of supporting the U.S. economy. That means more for them. We've been living above our means. Well, that's only possible because the rest of the world has lived beneath their means. Well, they don't have to do that anymore. They don't have to produce stuff for Americans anymore. They don't have to loan their savings to America. They don't have to invest in the U.S. financial markets. They can invest in their own markets. They can consume their own goods, right? They can invest their own savings. So our loss is their gain. And so this is going to be a global boom. It's like a giant weight has been removed from them. And now the global economy can be a lot stronger without having to drag the U.S. consumer behind.
So if this happens, then, and we're talking about, obviously, these huge moments within the global economy, would you characterize the current move into gold as a long-term shift rather than just a temporary flight to safety? How long is this going to last?
No, it is a long-term shift, and it's been going on for a long time. How do you think we got up to 3,200 and change? So, no, but gold is going much, much higher. I used to think, back in 2009, 10, 11, back when they started QE, I was thinking gold would go to like 5,000, when gold was like 1,000. And it didn't get there. But now that it's 2025 and we've created so much more money and so much more debt than we had back then, I mean, 5,000 is nothing at this point. That's just a pit stop on the road to much, much higher prices because we have to, catch up to all the inflation that we've created. So, now you're looking, gold could be, 20,000 or more. I don't know. But a lot of it isn't gold going up. It's the dollar going down. When the United States, was first started in 1789, you only needed $20 to buy an ounce of gold. And about 130 years later, when we established the Federal Reserve in 1913, you still only needed $20 to buy an ounce of gold. So the dollar and gold were very stable up until the creation of the Federal Reserve. Now, that didn't change until 1933 with Roosevelt and the Great Depression, and he devalued. And now you needed $35 to buy an ounce of gold. But that was the same until 1971. $35. And then we went off the gold standard completely. And now gold goes from $35 to over $3,000. So gold has gone up more than 100x. But gold hasn't changed. It's the US dollar that has lost more than 99% of its purchasing power. Yeah. When the dollar was backed by gold, it didn't lose any of its purchasing power. It was only when we went to a fiat system that the purchasing power was destroyed. So when I'm talking about $20,000 gold is not more valuable. The dollar is a lot less valuable. And so you need a lot more dollars to buy that same ounce of gold.
Yeah. And Peter, if you see the dollar no longer acting as a reserve currency here, what will it be?
Gold. We don't need a reserve currency. Yeah. We just need a reserve. Money needs to back up currency. So all these foreign countries are going to use gold because that's what they used before the dollar. Remember, in Bretton Woods, we got the world to use the dollar as the reserve instead of gold. They were using gold. But the reason we got them to use the dollar is that we said, hey, the dollar's as good as gold. It's backed by gold. You can have your gold whenever you want. So just back your currency with dollars. And in the meantime, you can buy our treasury bonds and you'll get interest because you don't get any interest on gold. So it seemed like a good deal. Have your cake and eat it too. Yeah. Own gold, but get interest. But then, of course, we screwed them because we defaulted, right? Hey, we're not going to give you any gold. You know, you screwed up. You trusted us. But so the world's just going to go back to a gold standard. That's what's happening. You know, and, you know, they may have other currencies in reserve, but the primary reserve asset has got to be gold. Yeah. And that's why there's so much more gold that central banks need to buy.
So this is good now, because now that I got you, I mean, I got to ask your opinion on these developments and on gold repatriation. I mean, there's speculation that Germany may look to withdraw more of its gold reserves from the U.S., citing concerns over this Trump's tariff policy. Germany has already repatriated significant amounts from the New York Fed in recent years, and now there's more voices when its ruling party calling for further action. What are you hearing on this front, and could it encourage other nations to follow suit?
Yeah, I think everybody is going to want to own their own gold, to have it within their own borders, to keep it secure, you know, because if you have gold stored in the U.S., what's to stop the U.S. from just sanctioning you and taking your gold, right? So it's not really yours if, you know, you let the U.S. government control it. So I think most countries, if they have gold stored here, they're going to want to repatriate it to make sure that they've got it. Are
you looking over at some of these energy stocks, anything outside of gold and mining stocks, commodities, agricultural products right now when you're seeing these haircuts? I mean, what is the next big opportunity other than the mining equities, unless you want to give us a couple of tickers?
Yeah, well, you know, I have several mutual funds that are just killing it this year. You know, my foreign dividend pair fund is the #1 fund out of like 370 funds year to date, tracked by Morningstar in the global value. I mean, I don't know, we're up year to date, maybe 14, 15%, you know, in a down market, S&P down 10%. And we're, making money in just foreign dividend paying stocks. But I think there is value in these energy companies, in other mining, because the world traders are pricing in a global recession. It's not going to be global. It's going to be in the U.S. for sure. And it's probably going to be a depression, not just a recession, but it's going to be an economic boom outside the United States, because now the world doesn't have to finance the U.S. anymore. The world can reclaim all that capital and all that purchasing power. The overvalued dollar has been a burden on the world. It's been a boon to Americans. We've lived off the overvalued dollar, but that is imposed a cost, particularly on the emerging markets. So I think those are the stock markets that have the most to gain from the dollar's demise, the emerging markets. And of course, the emerging markets companies, they have a lot of dollar debt. See, the whole world has a lot of dollar debt. And when the dollar crashes, that debt's gone. It's like it's wiped out. So it's a huge debt jubilee, as companies that borrowed in dollars no longer really have to pay it back. I mean, sure, they have to pay it back, but so what? The dollars are so cheap. It's easy to pay it back. So it's a big relief. I'm very optimistic on the global economy and returns that investors will be able to get on global assets. And, people can learn more about that at my website, Europe Pacific Asset Management. I mean, we have all kinds of strategies that have been designed to benefit from de-dollarization and from the process that is now underway. All you have to do is look at what's going on. U.S. stocks are going down. U.S. bonds are going down. The U.S. dollar is going down. It's all being sold. Right. And the money is being redeployed elsewhere.
Hey, we talked about repatriation of gold from, Europe and other countries, but do you think that U.S. is going to add to its stockpile? I mean, any news here if we're going to get back to the gold standard?
Well, where are we going to get money to buy gold? We're broke. We're running multi-trillion-dollar deficits. So how are we going to buy gold? Are we going to just go into deeper debt to buy more gold? No. I mean, it's the countries that have surpluses that are buying the gold. Mm-hmm. We're borrowing money, and we can't even afford to finance our debts anymore. So the Fed's going to have to print all the money now, which means massive inflation. Unfortunately, they were talking about buying Bitcoin for the strategic reserve. Hopefully, at least this puts an end to that nonsense.
Yeah, I thought you had a little bit of a strategic Bitcoin reserve going there too, Peter. I have to ask you though.
I set that up as a joke because, the government said, hey, we're going to try to have a reserve at no cost to the taxpayer. We're not going to buy it. So I set up a reserve under the same, parameters. But I also did it just to prove that it's a bad idea because my reserve is probably down about 10% since people funded it. So it's, whereas if we would have just bought gold, gold's way up.
While we're on this topic, because I know you love talking about Bitcoin, I mean, it has outperformed nearly every other major asset over the decade. And here's a question I don't know if you get often. I mean, if gold were invented today, wouldn't it look more like Bitcoin? Wouldn't it be kind of programmable, borderless, and censorship resistant? Is it possible here?
Well, gold wasn't invented, it was discovered.
Yeah.
And it wouldn't, Bitcoin is just a digital pyramid scheme, Ponzi, chain letter. It's not gold. It's not digital gold. And by the way, Bitcoin's peak price in 2021, in terms of gold, it's down 30% since then. That's 3.5 years. So I think the air is already coming out of the bubble. Bitcoin has been in a stealth bear market. It's going to be a lot more noticeable when it collapses. Mm-hmm. But, Bitcoin is 82,000, something like that. Yeah, you can always go. It's had a great return since it was created.
Right.
That's true with every bubble, right? From the point it starts to, it was a great, but it's going to collapse. And then all those paper gains are going to be wiped out. So at some point, it won't be the best performing asset over those time frames because it's going to collapse. But I already think that it's headed down and it's probably seen its highs, and so it's just going to keep going lower.
Okay, I got to end here on your outlook. I mean, is it going to be stagflation? Is it going to be dollar losing reserve currency? Is there any hope to save us, what you were just talking about here in the U.S.?
No, well, the day of reckoning was long overdue. And again, we ended up pricking our own bubble. But yes, the dollar's reserve currency status is going to come to an end. How long that process is going to take, it's hard, but it's underway right now. Yes, we're going to have stagflation, but not like the 1970s, much worse. We're going to be in almost like a depression, and inflation is going to be much higher than it was back then. So very high inflation, a horrible recession. So the worst possible stagflation. Now, in order to get our economic house in order, that pain is necessary in order to correct all the imbalances in our economy that produce these trade deficits, that produce these budget deficits, that resulted in the hollowing out of our industrial base, things that Donald Trump rightly points to, right, as problematic. In order to get to the root cause of that, yes, we have to go through a huge austerity. And so we have to go back to work. We have to stop spending. We have to start saving. We have to build factories and supply chains. And it's going to be a hard work. But, there's a big payday at the end of that if we do it. But if we don't do the right thing, then we're going to have a lot of pain, but it's not going to be constructive. It's not going to lead to long-term gain. It's just going to lead to long-term more pain, worse pain. And so, it all depends on what we do. But right now, the people who are advising the president are giving him very bad advice. And he has a grave misunderstanding of the U.S. economy and our place in the world and what we need to do to actually address the concerns that he has and that I share.
Peter Schiff, Chief Market Strategist at Euro Pacific Asset Management, joining us. With gold at record highs, dollar under pressure, traditional safe haven starting to crack. It's clear we're not in ordinary times here, Peter. Thanks for this.
My pleasure.
Appreciate it. I'm Jeremy Savin. For all of us here at Kitco News, thank you for watching. We're going to have some great content coming up all week long. Thanks for watching. We'll see you next time. Hey everyone, I'm Jeremy Sapin. Welcome back to Kitco News. Well, there's an undeniable shift happening in the U.S. and global financial system, one that ties directly to gold, the United States dollar, and of course, the future of economic stability. In recent months, record amounts of gold has been moving into the U.S., fueling speculation that something bigger is at play. And the sheer volume of gold transfers, more than 12.5 million ounces since November, is creating tightness in global supply, particularly in London, one of the world's largest gold hubs. Now, this raises urgent questions. Who is buying all this gold and why? Is it private institutions, foreign governments, or is it even the U.S. Treasury itself? One theory gaining traction in the U.S. government is preparing for a full-scale audit of the gold reserve in Fort Knox, an event that could reshape global monetary systems here. Now, high-profile voices such as Elon Musk, Senator Rand Paul, and former presidential candidate Ron Paul, who we recently had on this show, well, they've all demanded a full independent audit of Fort Knox, which has not been inspected for more than 50 years. Now, Musk even suggested live streaming the audit to ensure full transparency. Well, with all these developments, what does it mean for the future of the U.S. dollar, global trade, and of course, gold itself? Here to break it all down is Peter Grandich, a veteran in financial markets. Peter has managed hedge funds, advised major institutions, and authored Confessions of a Wall Street Whiz Kid. He's also the founder of PeterGrandich.com, a leading voice in the gold and commodities space. Peter, welcome back to the show. Great to see you.
A good time to be interested in gold.
Yeah, you're not kidding. And it's funny because there's still a lot of news outlets that are not covering the moves in gold. But of course, let's do it here and start with something a little bit critical. Right now, the U.S. government officially values its gold reserves at just under $45 an ounce, a number that hasn't changed in decades. Meanwhile, spot gold trades nearly $3,000 an ounce, making new records in the open market. Why hasn't the U.S. adjusted the book value of its gold holdings here, Peter?
Well, I think it's part of the fact that finally business people are at the helm at the moment at this country. Let's face facts. Donald Trump was a business person first, long before he was a politician. And Musk, I think, to me, Musk is the Einstein of business for the 21st century. And just a phenomenally man with such brilliance and, be able to do so many different things. I still can't believe they land that rocket back onto the pad each time.
Yeah.
About that takes. So I think that's the one reason. And I think also there was a plan to monetize as much of the asset base that they can because the debt is so huge. And obviously, with gold being valued at the books at $42, it doesn't make any sense to keep it at that level. So I find it interesting. I will say this, when you talked about an audit and even having it live, as long as it's not Geraldo Rivera going to open it up, because the last time he did that, nothing was there, and we don't want to see that nothing is at Fort Knox. Yeah,
we definitely don't want to see that. We will revisit this one, but I'm curious. There's a lot of this talk. We've seen it this past weekend, on X. Elon Musk obviously giving a lot of attention to it as well. Could we see an official revaluation of gold to reflect real market prices at what's making new highs this year?
Yeah, I think that's coming. I think that's part of it. I don't think what people should do, Jeremy, is confuse what's been transpiring up to a few weeks ago. Mm-hmm. The serious purchasing by central banks to a few weeks ago had nothing to do with what's happening. This is a separate issue that's taken transpire. Those banks were buying because they were preparing for what they view as an eventual change in the world monetary system, partly because of what's transpiring with BRICS. And as much as Trump wants to threaten that he's going to break their kneecaps if they continue, I think they will. But this movement is more, I think, related to the U.S. and what it plans on doing with its gold holdings. And therefore, I believe we will get that revaluation. And it makes sense because it does kick in almost $1 trillion of paying down some debt by the higher level of our gold holding. What I don't think is what people should be concerned about, and every once in a while I get an email still about it. Does this mean they're going to sell the gold? I think that's the last choice of theirs, to sell the gold. Look at countries that did and how they're hurting now. Unfortunately, your country, Canada, did it, and I think they would like to have the gold back that they had sold.
Yeah. I think a lot of politicians wishing that they could go back in time here. Okay, let's stick on this theme, because if gold were to be revalued, as you just mentioned, and we talked about this overpowering debt problem in the U.S., could it help stabilize America's debt to GDP ratio, perhaps? Is that part of the plan?
My opinion is this is just a pause. When I hear there's a lot of good things Trump has done. One thing you can say about Trump, whether you love him or you hate him, what he says he was going to do, he does. Very few politicians after they're elected, percentage-wise, do as much as he's already done for what he said he was going to do before he was elected. But one of the comments that he's made continuously, that eventually this and other things and a Bitcoin reserve, strategic reserve, will somehow eliminate the debt. To the amount of discretionary income we would have to suddenly make as Americans to meet all our necessary bills and have extra money to pay down 36 trillion is beyond impossibility. That's why the eventual reset in the world and what central banks are doing, recognizing not just our debt. This is not just a U.S. problem. Large-scale national debt is throughout the Western world and even in China. So it goes to us, it at least makes those of us who pounded the table about gold for the last 10 or 20 years proven correct all along for much lower prices, that it would prove to be the number one asset that people would look to as the debt would get worse and worse.
Yeah, you mentioned that national debt problem there, and it's surpassed its $36 trillion mark. I know the Congressional Budget Office warning that by 2031, almost every dollar of tax revenue could be consumed by interest payments and mandatory spending. Now we're seeing from this last meeting with the Fed, they're now signaling concerns over another debt ceiling crisis. Some officials are suggesting a pause in balance sheet runoff, currently allowing $25 billion in treasuries, $35 billion in mortgage-backed securities to mature monthly. Adding to the uncertainty, Donald Trump has backed a plan from House Republicans to raise the debt ceiling by $4 trillion. But again, negotiations could take months. Peter, how do you see this debt ceiling standoff playing out here?
Well, I wish they get rid of that wording. There's 120-something times it hasn't worked. The ceiling has gone through. The problem we have is, you make a very good point, Jeremy. The Congressional Budget Office says that we are going to hit $54 trillion in debt at the rate that we're going at. Well, if you just put a 5% interest rate at that point, we'd be talking over half of what we took in as a nation in our best year 2 years ago, just going to pay interest. We could not operate the rest of the country as we've grown accustomed to. So we also must say that one of the negatives that I find about Trump at the moment is just about everybody is not going to pay taxes, just no matter who you are. Well, how are we going to do all of that and not pay taxes and yet be able to pay this all off? And no one's really asking about that point, because we're in a sense, we're somewhat stunned. I think people are really, some are happily stunned to see how much waste and potential trillions of dollars that has gone out the door. But to believe somehow all that's going to be stopped, put on the right side of the ledger, and then be able to pay such a huge amount of debt off anytime soon, I think is a falsehood.
Yeah, it's fascinating to watch these numbers continue to climb on the debt front. And we're also seeing it when we get back to the gold and silver front. We're seeing unprecedented movement of gold from London into the U.S. The numbers are staggering, Peter. We got 12.5 ounces of gold, 40 million ounces of silver have been delivered into COMEX vaults since November of 2024. JP Morgan is reportedly set to deliver $4 billion worth of gold for February COMEX contracts. Meanwhile, in China, banks are continuing to sell out of gold due to overwhelming demand. South Korea Mint has temporarily halted gold bar sales. What do you make of this massive transfer of gold into the U.S.?
I think it's part of this strategic use of gold that Trump plans, but I think it's bigger than that. Now, I must tell you, I've been part of a group for 20 years, and for a lot of those years, a certain person used to call us tinfoil hat folks, because not only did we speak about the manipulation that was going on, which subsequently was proven, but we talked about how much gold has been lent out multiple times, to the point where if ever that gold was originally called back, it could cause a domino effect. And I believe that's part of it. The good news in all of this, which gold bulls like myself should be well satisfied, is we no longer have the manipulators in the paper market that were basically in London and New York. They're done. They recognize they can no longer just short the paper market and keep it down in the press. Look, even when we have a $30 or $50 down day, years ago, Jeremy, it took weeks, sometimes months to make that up. Now we make it up in hours or a day or two. So the physical demand and the physical gold market now has finally overridden the paper market once and for all. And I think that also is bullish for long-term gold. And the thing that shocks me still is the general financial service industry, at least in the US here, yawns at gold. There's real no interest or holdings yet. And that's why I think the market still has a much further way to go, because we haven't seen the general public involved in the gold market in any major way. No disrespect to what Kitco does and those who are smart enough to be getting people in hundreds of dollars lower, but the vast majority of people in the United States have little or no ownership of gold.
Yeah, go back to this massive transfer of gold for a second, because, as we talk about these hypotheticals, Peter, I mean, who's buying it? Is it the private institutions, foreign governments, or does the U.S. Treasury itself? I mean, it almost feels like the retail investors are sitting this one out.
Oh, they're sitting it out. We know that. We've seen statistics, the GLD, we've seen even the GDX, GXJs. We saw net selling of that through much of 2024. You can still go, and no offense, but if you do waste your time and turn on one of the financial networks here, you'll fall asleep before you see a mention of gold. So I don't believe there's real ownership, certainly on the retail or significant institution. I think this is a combination of gold coming back to be used in a big way through the government, and people who have been short have some real serious problems here, who've used derivatives on the gold market on the short side. And I have to tell you something, I'd be less than honest, Jerry, if I didn't tell you that I somewhat enjoy it after all the years of pain that they caused. And now they're starting to feel a little bit what it feels like to themselves.
Yeah, the paper market. Okay, well, there's also, let's go back to this Fort Knox theme. I mean, Peter, there's the growing speculation about an audit. It hasn't happened since 1974. And what you were just talking about now and what we were discussing on the paper market, I mean, is the U.S. reshoring gold that may have been leased out? Could this be part of a quiet plan to backstop the dollar?
Yes, it is. And I would tell you, remember, that audit also wasn't a full audit. They kind of looked in one area and grabbed a couple of bars and said, okay, let's go grab lunch. I think a real full audit of an actual accounting may surprise people. I mean, it always gave the conspiracy people some concern, the fact that you wouldn't want to have people just come in and get it over with. Here, if you don't believe us, here, look. Go take a look, add it up, and see that it's all there. So I don't know if we'll get to that point, but I'll tell you, if there was ever two people that could get us to that point right now, it's President Trump and Elon Musk right now.
Yeah, they're going fast. Peter, you should try covering it. Every day there's a new story to cover. I want to bring more about this analysis, because there was this new thread on X that we found really interesting. It's from financial analyst Matt Smith. And he suggested, we'll show it here. He says, quote, someone with deep pockets is scooping up gold like the U.S. Treasury or Fed. The theory, they're preparing for a full-on gold audit, meaning they're reshoring gold that might have been leased out. Once audited, that gold could form the backbone of a new monetary system. This could signal a seismic shift in the dollar's status and value. We heard you kind of tease about this, but really bust it open for us here. What do you make of this theory? Could an audit lead to gold playing a greater role in the financial system?
Well, we already know this, Jeremy. The central banks who have been major buyers have been buying it on that basis. They weren't buying it for a trade. Who are they going to sell it to? This accumulation that's been going on for several years outside of North America was going on because they were prepared for recognizing that de-dollarization is here. It's great what Trump says. I do think he's making a mistake, threatening to break people's kneecaps, basically, if you don't deal with us. That's the very reason those groups have formed, because they felt that that's what's been given to them. I believe he created a great marketing card for the BRICS, but nevertheless, I believe they recognize that. Now I think the U.S. has come to that conclusion, and I concur with a lot of good people who, a lot smarter than me over years, said that they demonstrated that gold had been lent out 3, 4, 5 times more than we had. And I think this is a shoring up, because let's face it, the people that were doing that was not mom and pops. These were significant financial institutions and players, and they have a huge problem here now if that's the case. Listen, gold's up tremendously in the last couple of years. They haven't had a chance to shore up those shorts in any real manner. And I think this is all coming together, and it be described as a near perfect storm for gold.
It's a hypothetical, Peter, but if a full audit does happen at Fort Knox, there seems to be two possibilities here. You know, the gold is there, which could be used to revalue the reserves and strengthen the U.S. financial credibility, or the gold is missing, which could send shockwaves through the global markets. What happens if the Fort Knox audit finds that the U.S. has far less gold than officially reported? What would that do to the trust in the U.S. financial system?
Well, I think it would be tremendous, but I can tell you, all those people that used to talk about 5,000, 10,000, you know, people's crazy numbers on gold that were crazy when I was buying at 1,300. People couldn't believe we can get to 2,000. But that would be, it would be probably one of the biggest evers, something far worse than the 1929 crash. If the United States, remember, world's largest supposedly holder of gold still, doesn't have it or doesn't have anything as nearly as much as it does. I can't even believe, as much as Trump wants to be forward and all, that somehow they have to not let it get to that view, because it would ruin everything else they're trying to do. But seeing is believing. I mean, if there was ever a chance to have a real audit in my lifetime, this is it right now.
Yeah. And I mean, you know, we're seeing this shore up, as you mentioned. I mean, if all the gold is accounted for, what impact could that have on monetary policy?
Well, I think they're going to just go forward with what they hope they're going to do. They're going to remonetize it. He's a smart enough businessman to know why keep an asset on our books that we're only carrying it at $42 when we can carry it at current prices, which would give us room to work and use other means to help pay down the debt, or at least pay down deficits to where, you know, we haven't had a balanced budget since Clinton, and even that was a fudged balanced budget. I always tell people this, Jeremy, if you want to start solving problems, pass the constitutional amendment that you can't spend more than you make. If you and I continued like the government does, we'd be out on the street a long time ago. But by and large, that will help ease some of the near concerns about the debt. But the major concerns that all of us had and spoken about these last several years are still here. In fact, if Trump doesn't do some austerity and stop promising almost everybody isn't going to pay taxes, he could actually make the debt worse than it really was.
Yeah. I think about Warren Buffett. I think it's him that says, if they can't balance the debt, just don't let them rerun for government. It would kind of solve it fairly quickly. Okay, we'll switch over here, Peter, because while this is happening in the U.S., Russia and China is also making major moves in the gold market. Russia's central banks have dramatically increased its gold reserves, adding over 100 tons in the past year. China has aggressively been buying gold for 15 straight months, adding 225 tons to its 2024 reserves alone. Chinese banks are experiencing extreme shortages with demand outpacing supply. Let's talk about the moves. Are we witnessing a global shift towards gold-backed monetary systems?
Well, we kind of knew that, for those that paid attention, when the BIS made gold a tier 1 investment. That really opened the door for these central banks. And if you think about it, since that time, they became major not only buyers of gold, but they've been divesting themselves of U.S. treasuries. They have sought other alternatives for their reserves. It also plays a role in the BRICS. And whether the BRICS stay a small offshoot group that works among themselves or grows much larger, as some of us, like myself, believe it eventually will, they will have to use something other than a fiat currency in order to show that they're trustworthy and be able to deal with. They've kicked around a couple ideas that will include about 40% in gold and using the other currencies of the countries. But nevertheless, what I think we need to come back to, and I know Bitcoin has stolen the financial media's attention and gold was pushed back to being a relic, but this is what gold has done for a couple thousand years. It's doing the things that a lot of people, including Kiko, have said for years. It's a store of value and a protection of wealth. And that's what it's doing. And now it's being done at a time when people are scurrying to get as much as they can of it, recognizing how useful it really is.
Yeah, you're talking about that scurry. I mean, we just talked about China, Russia. They seem to be kind of front running this. So, I mean, with all this information, could the U.S. be positioning itself to compete with Russia and China in this regard? Are they a little late to the party, or is that what we're seeing?
There's that talk of that they might do it, or they may recognize that part of this is, listen, I got to take this, that Trump is a shrewd businessman, whether you like him or not. And there's days I like him and there's days I can't stand him, but he's a shrewd businessman, and he may be recognizing that in some way we have to be tough at the moment, but we'll have to not try to beat them, but join them. And maybe there will be a world movement back to a gold-backed currency or some way. But one thing it's demonstrated again and again and again, it's worked for a few thousand years, and that's why people are going to choose something like that versus something that's only been around a dozen or a couple dozen years, is too volatile and too, swings too much, and doesn't have the representation that gold has. And that's what I think is transpiring now. The people with real big money, they recognize that gold is going to be their way out and not something else.
Yeah, and some analysts even believe that China is preparing to launch a gold-backed currency for international trade to challenge the dominance of the U.S. dollar. We've seen the de-dollarization trend for the past year. If these movements start to signify, are they going to happen? And could this threaten the dollar's reserve currency status?
Well, we'll find out a few months from now, Jeremy. The BRICS will meet again in the fall. Right now, they're still having more members join. Yes, Trump had said a few things. He said a lot of things about tariffs and taking over countries and all, which I think he's really out of place to do that. But a lot of his art of dealing, that's what he does. He blusters. He sets up a worst case scenario, so that way when you do settle lower, you feel like you got something. And he was glad to get that little part to begin with and all. But I do think gold is showing what we've all said, and it's paid to own it. Lost in all of this, Jeremy, in this millennium, which is now 25 years old, since the millennium began, gold has outperformed stocks and bonds. Yet if you went into the typical financial service firm anywhere in the U.S., you wouldn't find gold in more than 1% of the people's holdings. Yet the things that they own the most, gold has outperformed both of them.
Fascinating. To your point, Bank of America recently projected that gold could hit $3,500, if central banks and institutional demand increases by just 10%, Peter. 10%. U.S. household debt hit a record $18 trillion in the last quarter of in the last quarter of 2024, according to the New York Fed. Credit card debt alone hits $1.2 trillion, the highest ever. Let's talk about this, because given the debt crisis, the dollar's volatility, the global gold shortages that we're seeing, should individuals be increasing their gold holdings now? Is it too late to get in, or is there still room for a substantial upside?
I think a lot of people will act when there's a fear of missing out. I think when it becomes clearer what will be transpiring with this gold and why it's been moved here, even if the price is higher, people will be more comfortable about buying it because it will become more of a general talking point. Most people are followers. Most people don't lead. And I think that's what it will need. But understand this, and this is a very good point. When I entered the business 40 years ago, and 40 years ago, the stock market was viewed as one of the last places you should invest. For 27 years, it was stuck between 700 and 1,000, Jeremy. And a guy named Robert Prechter Jr., who no one knew at the time, came out and predicted that the Dow was going to go to 3,700. And people were scratching their heads in the early 80s. 3,700. It's never been over 1,000. No one could imagine it could go to 3,700, yet to 40-something thousand 40 years later. The same is about the gold price right now. Most people can't imagine, it really can't go much past 3,000. It used to sell just 800. We have no idea what that could be about because there's not as much of it as much as what people could want of it. Look what the buy-in has done so far to it. So I wouldn't put any top number on it. Yeah, you can pick numbers for short term, and 3,000's a round number. But remember, this is all new all-time highs. There's no real significance because we've never been here before. But don't think it just can't go higher because just things can't, because that's what people thought about the stock market for a few decades. And yet it went up, 30, 40 times the level that it traded for a lot of years.
Yeah, you mentioned it. I mean, even a year ago at $2,000 gold, we were excited. Here we are edging towards 3,000. I know we don't have a crystal ball here, Peter, but where do you see it at the end of this year, considering all the things we talked about today that's happening in the market that's still being underreported?
Well, Jeremy, if you use a crystal ball, the only thing you end up with is a lot of broken glass at the end of the day. So it's a best educated guess by us. I think this is really powerful. I think it's two different forces, both going for two different reasons to own the same thing. And that's why that price still has some substantial upside over the rest of the year. A lot of things could impact that. A big hiccup would suddenly be if Trump can't have the free leg that he's basically having now to do these things and all. But I also think, like I said, I think we're going to see that the bricks are real. They weren't damaged, and their combination and those part of the world buying gold. Asia, with reports of people in stores in China on weekends are shopping for gold like you'd be shopping for food. So I just think there's still a lot of good things happening, and we don't have neither the general public or the so-called mainstream financial service industry behind it. It's when those people are talking about it on a regular basis, that'd be a good time for you and I to talk again about maybe it's time to take our profits.
That's what we'll be doing. That's what we'll be doing. I have to ask you before we let you go, though, Peter, I saw your latest post. I was watching your latest interviews. Fairly bullish on the mining industry. I mean, again, an industry that hasn't gotten a lot of eyeballs with the shiny things out there giving larger returns. But with all this free cash flow some of these large miners have, any tips for viewers on where to put some money during this ride?
Well, they're printing money. That's the way I can describe some of the gold producers. And for their future growth, they're going to use their currency, their stock. I think we're going to see a dramatic increase in M&A, not only among themselves, but as they go down the food chain to an industry which is still hurting, still struggling to get into a bull market. It's not there yet, the junior resource market. But I think once that starts, and one of the ways I think it's going to start is when a couple of these fairly big companies merge. I'm speculating just an IM Gold, Agno Eagle type of merger. Yeah. I think that's going to open the door, and suddenly people are going to look and see these juniors that is, a lot of juniors right now, their gold in the ground is still being valued only between $10 and $40, and gold's hitting $3,000. Once that turns and the people look at it in a meaningful way, then there's going to be a rip-roaring bull market. I don't think we're too far away from that. But if you asked me that 2 years ago, I would have told you that same thing. So I have to point that with caution.
Right. Yeah, no, makes sense. That's interesting. So M&A starts kind of taking play. Are companies just using their free cash flow, or are they using their paper, their stock for some of these deals?
Well, they're going to, the free cash flow is going to create their values of their stock. I mean, right. Look at IM Gold, just as an example. 24 months ago, people were counting 8, 9, and thought 10 they were out. Now they've made a dramatic turnaround when their key mines have turned around, and now their stock has gone up 3 or 4 times from that. Those type of moves at a time when they pay down a lot of their debt, not just them, but a lot of others, and have so much free cash flow, they're going to look around, and quite frankly, it's a shopping list for them. There's so many smaller, mid-sized companies as well as juniors whose valuations are so incredibly low. It's just going to be too hard to pass, and that's when we're going to see them step up. And once it starts, it'll roll real fast. It's not something that's going to gradual. It's just like a log jam. When they pull that one log out, then the rest of it's going to flow with it.
Yeah, I mean, the market's cyclical for sure. So we're going to see, some of these juniors, some would say that some shouldn't exist. I mean, we've seen a lot of them come to fruition in the past few years, hoping for that bull market. The ones that are, out there succeeding, going to be an interesting year for them, Peter?
Yeah, if I had my wish, there's a lot of these juniors that are lifestyle companies. They're really just a way to live for the people running it and all. I've heard it said, and I don't disagree with it, if hundreds of these little juniors disappear, to be better for all the rest of us. But it's still such a small market cap that any real money that flows into this is just going to drive that whole market dramatically higher. And it has every other ingredient it needed now. Everything but the juniors have moved. And now with the next few quarters, think about this, Jeremy. You're going to see very little earnings increase on General Wall Street. One of the areas people are going to see suddenly is, wow, these gold mining companies, look how much better their earnings are. That'll flow money in that normally doesn't play that market, and that's what will kick it off, in my opinion.
Yeah, wild. Well, we're looking forward to it. Peter Grandich, of course, author, commentator, analyst, joining us. Thanks for this, Peter. Always a pleasure to see you. And as you mentioned, when we have a little bit more on these stories, we're going to have you on for a little update.
Thank you, Jeremy. God bless you and Kiko.
You too. Appreciate your time. And for those watching, what do you think is really happening? Do you believe the U.S. government could be preparing for a gold reevaluation? Or is this just another cycle in gold's long history? Drop your thoughts in the comments below. For all of us here at Kiko News, I'm Jeremy Safford. Thank you for watching. We'll see you next time.
Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc.
Hey everyone, welcome back to Kiko News. I'm Jeremy Saffron. Well, we're watching gold hit a major milestone as it trades above the $3,000 an ounce mark, and it's a headline-worthy moment, but the real story lies in the economic forces driving this rally. In just 210 days, gold has surged from $2,500 to $3,000 an ounce, pushing it 3 standard deviations above 200-day moving average. Now, that's a powerful momentum move. But what's next for these underlying drivers pushing gold prices higher? To help us break down, of course, is one of our friends, Joseph Cavatoni. Of course, he is the senior market strategist at the World Gold Council, joining us from New York now. Good to see you, Joe, as always.
Great to be here, Jeremy.
We got a lot to get into. You heard that. I mean, prices still pretty steady here on the gold front. And, you know, it's rose 3 weeks in a row, 15% year to date. Now it's facing some resistance around 30.40 to 30.50. So far, it's struggled to break through those marks. Analysts say the market looks overstretched at these levels, and a healthy pause or maybe even a little pullback in gold's core uptrend could be on the horizon. I got to ask you, Joe, what are your thoughts on that?
Well, I think that they're all very interesting comments that are being made about the price. I think you hit the nail on the head, which is the rapid rise in price that we've seen over the last year has been quite telling that post-COVID, post-risk assets having some attention paid to them over those periods of time, moving interest rates, that people are gravitating back to gold to manage and mitigate increased levels of risk, whether it's geopolitical or directly political here in the U.S., but also having implications on economies on a global scale, trade and economies. So people are moving back to the asset. We've seen the price move through 3,000. I think you've hit that again. It's a great moment for gold, but the case remains really strong for 3 of the 4 cases that we often talk to: central banks, investors, and to a lesser extent, technology. And it's really seeing what develops on the consumer side, particularly emerging markets and their desire to have gold in the form of jewelry. So I think a lot continues to be strong in supporting the price. But like we've seen a lot over the last year and a half, range bound when we get through certain risk levels and through certain price levels.
Yeah, and I mean, you brought up trade there, and obviously April 2nd is approaching quickly. That's the date that the U.S. is set to unveil its plan for reciprocal tariffs on countries it believes are treating American exporters unfairly. Safe haven demand for gold may continue to rise here. And at the same time, of course, you mentioned those elevated geopolitical risks that we have going on, and it could add to more fuel on the fire with I guess, if the tensions remain high. Talk to me a little bit about how this will impact the gold market.
Well, unfortunately, for every good soundbite we get on geopolitical risks, it seems to be met with the one that's challenging. And I don't think anybody's having an easy go at trying to figure out how this is all going to play out. When I say all of this, really just very aggressive moves by the U.S. administration to really level set and deal with a big challenge that we haven't talked to just yet, but we can probably talk to more so later in the program, which is the U.S. debt levels and a need for it to raise money. So back to my point around risks and geopolitical and political risks, if you hear that there's potential for a ceasefire in Russia and Ukraine, it's really exciting and very encouraging news. but offset by, yes, that date of April 2nd. What's it going to mean for Europe? Now there's pressure on Europe to spend, there's pressure on Europe to build up its own military stocks. It's basically could be a good thing for Europe, it could be a bad thing for Europe, but I think it still all needs to be digested by the market. Money moves quick, and actually keeping risk on our headline and keeping confusing challenges on our headline, and that's really what's basically keeping gold as that safe haven asset that you've referenced in their portfolio and actually bringing back flows to ETFs. You know, we're looking at a near $20 billion of inflows into ETFs worldwide year to date, which is a big change in what we've seen over the last couple of years.
Yeah, you're not kidding. Western investors finally coming back to the market too. I got to ask you, let's go back to those tariffs, because are you hearing about this tariff threat on gold? Is it still a threat? And can you remind the viewers if it's ever happened in the past?
So look, tariffs are definitely things that have been implemented over the years. We actually have come into this administration with actually existing tariffs on pharmaceuticals and other products for China. So it's nothing new and it's nothing different. But I think the challenge is that they're coming at us in a way that's just super difficult to assess. So when you think about the tariff implementation, clearly it's coming in a very aggressive pattern. And I don't think that at the heart of everything we're hearing and seeing about what the administration's concerns are primarily focused on. I think base metals are more interesting and more concerning. Critical minerals are more interesting and concerning to the administration. Things that are directly linked to industries and in areas where the U.S. feel it needs to basically protect itself. So I think you're talking more along the lines of critical minerals that might be linked to defense, national security.
So nothing on the tariff on the gold front then, Joe? You're not hearing any of those types of rumors?
Correct. We haven't heard anything directly or specifically focused on gold. And I say that it's actually interesting because gold in many ways is a monetary metal, and we all know that. And it actually plays a very key role in investment portfolios. It plays a key role in technology. But again, that's a small component of our demand. And ultimately, I think what the administration's on about is figuring out where risks and challenges exist with critical minerals or other base metals and how they can level set income streams, tax revenues, costs that go along with these different imports and exports. And those are the targets that we see mostly coming up in the headlines. Now, one point I will make is that the administration has just put forward, President Trump signed an executive order last week that was basically targeted at really looking at agencies to spend. You know, this is happening too. Like, while we're looking at cuts, we're looking at spending as well. The agency's looking at critical minerals and other assets, including potash and gold, as an area where we could look at permitting onshore in the U.S. or development of industry onshore for production onshore. So it's in the mix. Gold is in the mix, but I don't think it's the subject of primary concern as it relates to import-export. And you can see from our historical numbers, with the exception of what we've been seeing flowing into the U.S., the import-export levels are low for U.S. and the gold market. It has plenty of gold to satisfy its needs domestically, but I think at this stage, not really the focus and target of what the concerns are of the administration for tariffs.
Okay, I'm curious about this. Then let's stay on that theme, because I wanted to get your thoughts on President Donald Trump's recently invoking this emergency power to boost domestic production of critical minerals. Just to give a brief background to our viewers here, the executive order signed last week taps into the Cold War era Defense Production Act, of course, framing America's reliance on rival nations like China as a national security threat. Now, this is the latest effort by Trump's administration to ramp up U.S. energy and mineral production, especially as trade tensions with China, Canada, and other key suppliers continue to rise. But what I wanted to bring up with you is that Trump's order includes support for gold production, even though it's not officially classified as critical minerals by the U.S. Geological Survey. Why was gold included in this order?
I think it basically signals pretty clearly that the administration understands the value of gold, and I think they understand the fact that it might not be critical as defined by the official terminology that the administrations, both the Trump administration, the Biden administration, and now back to the Trump administration have identified. What it does signal is they understand it as being strategic, and they also understand that there is a bigger game afoot when it comes to production, mining, etc. for gold. It's not one single thing sitting out on its own, nor are any of these different minerals that come out of the ground. You have to understand that mining is a complex business, and actually opening up the ability for permitting and mining of gold could get you access to other assets as well. Antimony is a good example of that. And I think that you could look at this order and understand that the president, the administration are understanding the interlinkings of different mining activities and production ideas, but also understanding, again, and signaling the significance of gold as a strategic mineral in the big scheme of things. And it's really quite important.
Yeah, well said, Joe. We got to talk a little bit about the flows from the UK to the US. I mean, obviously, we've been hearing about that. And we recently heard from your colleague at the World Gold Council, Krishan Gopal, that Switzerland's gold exports remained strong in February, keeping up the momentum from earlier this year. And the US once again led the way as its top destination, with a noticeable pickup in exports to the UK as well. And year to date, gold exports have hit 449 tons, the highest level that we've seen since 2012. Anything you can comment on these recent flow trends?
So everything we're saying about tariffs not necessarily being the target of gold, or gold being the target of tariffs. What I can say is that whether they come down or not on April 2nd, and they are broad-based, gold will get caught in that net like everything else. So again, the futures market in the US is a market that has to rely on physical backing and an opportunity for that physical delivery to take place at the expiry of a particular contract. Therefore, those that are trading over dates that are critical, futures contracts go out 30, 60, 90 days. Those that are trading for longer periods of time need to ensure that if they have a risk or an opportunity to deliver the physical, they need to have it in New York, and that way they can price the instrument and the trading that they're doing appropriately. So continue to see those flows come through until there is absolute clarity on exactly how tariffs will play out. This European deadline of April 2nd, very important. That's why you're seeing the flows coming in still. But I think ultimately it's coming in at a slower pace. Again, people are getting their head around the fact that we're not necessarily the primary target. However, it's still important to make sure that your risk is managed. Therefore, the gold needs to continue to come to the US market. So expect it to continue.
Okay, so it hasn't slowed down. I mean, it almost feels like it sure hasn't.
Well, I think it's coming in at levels at paces that are slower than what we may have seen in the earlier stages of this phenomenon coming into play. So I think it's definitely continuing, but I think it's coming in at a slower pace.
Okay, well, the World Gold Council also reported the global gold ETF saw a major boost last week, with net inflows, as you just mentioned, hitting $3 billion US. That's roughly 31 tons of gold, and it marks the 8th straight week of inflows, with North America accounting for nearly all of that demand. So far this year, total net flows have topped $19 billion, or around 207 tons, putting us on track for the strongest quarter since 2022. Joe, what does this tell you, my friend?
Risk abounds, and investors are actually at the point where they're saying it's time to put money back in risk protecting assets as an allocation of our portfolio, including in the US market. So of the 19 billion roughly that we've seen, about 12 billion has gone into the US. But again, we're seeing flows in Asia and flows in Europe. Also, people understanding, investors understanding it's time to continue with the allocations to maybe look to increase, which is what is new for us this year. Over the last few years, we felt that most investors were holding allocations for gold. I think the risks are high enough now, and they're understanding that the economy is looking to be maybe stalling a bit. And I think that they're looking at gold as that hedge that they need back in their portfolio, whether it's for inflation purposes or risk that just continue to put shocks to the system. If you just look at what we've seen in terms of risk assets over the last 2 weeks, really exciting, but really risky, and really moving fast, and actually having something that holds its value. Gold's performed exceptionally well when we've seen risk assets coming off, whether it's equities or whatever the case may be. And you actually can use that as your safe haven to buffer that bit of risk in your portfolio, but also use it as your cash pool for a quick move when you want to buy a dip. So I think it's actually front and center for people, and I think that the allocations look likely to continue over the course of the year. I think that Europe will probably pick up pace over the next 6 months as well in terms of the ETF flows.
Okay, so I mean, the Western investor is back, and let's just zoom out a little bit. I mean, historically, if the Western investor continues to come back, historically, what happens there?
Well,
is this
I
just
think
the beginning?
Yeah, I think that it is the potential for the beginning. I think people are digesting the fact that with tariffs, with the changes to the economic outlook, that maybe this is a time for a weaker dollar, maybe this is a time for a weaker U.S. economy. The numbers that we're getting out right now are actually signaling that may be the case, but they aren't necessarily the key critical data points that we want to keep a close watch on. I think right now people are trying to assess whether or not this strategy that the administration is using will be good or risky for the economy. And I think we just had a Fed that came and went with respect to a rate cut potential. They didn't move. We don't expect them to move. Now they're signaling maybe even less than 2 cuts, maybe 1 cut over the course of the year. So I think what we're watching carefully is what this implication will be on the economy for the U.S. I think that's why the U.S. are leading, and I think that's why Europe will probably be looking at it next and make additional allocations to gold to manage risks that are going to potentially develop in their region as well.
Interesting. I mean, we've seen that $3,000 price level. How important is this for the gold price? I mean, we're talking about investors coming back from Europe and from the West. I mean, can this be the biggest driver here?
I think it's a really interesting point, and I think what is really critical for people to take into this consideration is that when allocations are made, they are made on the basis of how much percentage of portfolio should I basically put to work. So I don't think people are hung up on the fact that 3,000 has been reached and therefore they can't move beyond it. I think investors are saying, what's the right percentage for my portfolio? I think why they're asking and what they're looking at and what they're trying to gauge right now is that we're really up almost 15% year to date. Is there more headroom to go for gold? Will it continue to be continuing to raise in terms of its overall performance year to date? Will it continue to rise? And I think that the case remains strong, and that's the messaging we've gone out with, which is investors are continuing to see the value. Central bank paces of gold purchases are continuing to remain strong. We'll have more color when we come into the end of first quarter and we get our demand trends report out on what's happening on the consumer side. Probably looking to see that continue to wane a bit in terms of China, India, and global demand for jewelry. But again, these 2 key case studies, or these 2 key use cases for gold, investor and central bank flows, continue to push the price higher. So like you said, while we might hit a bit of a flat spot on the price right now, the case remains strong for it to continue to be strong. So I think people are looking at the price that way. So we're through the 3,000 mark. We look like we're staying there. And I think at this point, we're now talking about what's the next level and how much more appreciation can the asset garner in terms of the look forward.
Yeah, let's get into it. I mean, you know, our viewers want to know, I mean, what kind of price targets are you looking at for the end of the year? Because we have people like Bond King, Jeffrey Gunlack, calling for $4,000 gold, of course, citing central bank demand. But what levels are you watching at a major resistance in this rally? I mean, is there a new price floor here?
I think that we're probably looking at levels, and again, as the World Gold Council, we're careful not to call the price. We have a view on demand trends, and that's really where we spend our energy and our focus. But there are industry professionals, Goldman Sachs, for example, putting a 3,100 level out. I think others are reaching for 3,450, et cetera. I think what we need to see is a next catalyst for the market to really kind of make a big move up forward. And I think that 3,100 level is probably the one that for me is most interesting. If we reach that number and we reach that number before the first half of the year, that'll be actually a really strong performance for gold. That might be the next resistance level that could develop over the next 6 months. And I think that really that'll be putting us up near 20-25% return on gold year to date, which is actually pretty extraordinary in terms of what we're looking at. But again, right now, we don't see a lot of factors on the horizon that are looking to put downward price pressure on gold. That's, I think, the most important thing that we can share with people is the case remains very strong for global investment, very strong for central banks, as I've said repeatedly. But then again, consumer side, really having less impact on the price, less impact on demand. So let's see how that starts to develop.
Yeah. Okay, I want to get into the retail demand too, but before we do it, I'm curious, going back to the central banks. I mean, with so many people citing central bank gold demand as a key factor driving gold prices higher, can you comment on the latest central bank gold purchases? I mean, what have you seen year to date? How significant are the moves? And more importantly, which countries are buying the most right now?
Well, I think China remains strong in terms of their involvement. I think also Poland and other nations are actually out in the market making purchases. I think Bolivia is also another nation that's actually talked about adding gold to their reserves. But I think it really continues to be an emerging market trend. I think it continues to be pretty wide ranged in terms of those that are continuing to be active. And actually, interestingly enough, we're seeing some that are actually talking about making use of their gold reserves to also just ensure that they have the right kind of economic conditions on shore. So right now, I think that the trend is continuing to see that these banks are actually purchasing, stepping in and buying. The Eastern developing nations are definitely at the game. But they're also reporting, which is actually encouraging because sometimes they may choose to not report or they may not necessarily report in a timely fashion. But I think that signal alone tells us that they're comfortable and they're actually very active in their involvement at this stage.
Hey, Joe, are you keeping a track of any repatriation moves here at all?
Yes, we do keep a track of that, but I haven't seen anything in the headlines, and we haven't noticed anything in the headlines that have been that substantial since I think the last time we spoke was possibly the Reserve Bank of India was doing the most to move its gold back home.
Okay, let's get back to that retail demand. I mean, in Asia, it's slowing down due to these higher gold prices. Reuters is reporting that jewelers across Asia and the Middle East say that more customers are rushing in, but not to buy, but to cash in their old jewelry and coins. And yet, retailers and experts warn if this selling spree continues, it could mean fewer imports into the market. That eventually maybe cool down gold's rally here. What are your thoughts?
Yeah, I would agree that higher prices tend to pause purchasing with respect to consumer spending on the jewelry side. And actually, we should qualify that there's retail demand in the form of bar and coin, which actually is interesting for us to watch and keep a close eye on as well. But as it relates specifically to jewelry, for sure, higher prices tend to be stop the purchasing, and then the next move is actually look to move into recycling. Something we've already seen. It developed into the fourth quarter and throughout the course of 2024. Not going to be surprised if we see that trend continue into the first quarter. And it's kind of signaling what we've been hearing so far, particularly in two markets, China and India. But again, those markets are moving not only in the jewelry space, maybe a little bit of a slower demand, but they're moving more along the lines of into more of an investment demand that's picking up some of that slack. So again, we're keeping a close watch on how much slowing we're seeing from jewelry, how much that's making its way into the recycled supply channel, and how much demand is picking up in each of those markets. An interesting soundbite for China is that they've recently announced that the insurance companies, 10 top insurance companies onshore, are permitted to engage in a pilot program of investing in gold. And 4 of those insurance companies had actually just announced that they've gotten membership at the Shanghai Gold Exchange, which is super exciting stuff. So you're looking at a shift from jewelry being the real key driver. And now you're looking at investment really taking on a lot more momentum. So you have to keep both in mind. Again, slowing in jewelry, hand in pocket buying less jewelry, hand in pocket saving a little bit more.
Okay, let's end on a positive note here. You know, we're talking about catalysts and this thesis behind gold. We've been talking about these inflows. I'm curious what you're watching. I mean, everyone's been talking, they don't want it to go up too fast. Obviously, that's a little bit scary. But what catalyst is the most likely one to get higher prices here?
I think we need to see something very definitive coming out on the impact tariffs on the U.S. economy. I think that those monies that are coming in the form of ETF flows in the U.S. are giving us a signal that investors are back to the game. I'd like to see a little bit more clarity around how the economic conditions are going to develop, not only domestically in the U.S., but how it's going to impact trade and the economies that are heavily reliant on it, Europe and the UK in particular, and actually see what that can mean for the outlook for risk assets and actually really how much flow is going to continue to come back, not only in ETFs, but in the physical market, the OTC market, which we know is much more substantive, but actually trades OTC. So it's a little harder for us to see it until the end of a quarter.
Right. Yeah, well said. Well, we're watching April 2nd here very, very closely, as you can imagine. Joseph Cavatoni is, of course, the senior market strategist at the World Gold Council, joining us from New York. Thanks for this, my friend. Always great to see you.
Thanks for having me. It's great to be here.
Thanks, Joe. And thank you for watching. If you found this conversation valuable, don't forget to subscribe and turn on your alerts. We bring you the voices shaping the gold market and the global economy only here on Kitco News. I'm Jeremy Saffron. We'll see you next time.
Gold declined for the 3rd week in a row following hawkish statements from Jerome Powell at the last Jackson Hole Symposium last week. What is the future of gold on a both long-term and short-term basis? Well, that is the theme of our discussion with our next guest, John Butler, author of the book, The Golden Revolution, How to Prepare for the Coming Global Gold Standard. John is also an editor at South Bank Investment Research, and prior to this, he's had over 25 years of experience in senior positions at top investment banks, including Lehman Brothers. Welcome to the show, John. It's your first time. Pleasure to have you.
My pleasure, David. Thanks for having me.
John, I want to talk about your book and the coming global gold standard and what this means for our global monetary system. But first, let's talk about gold as it relates to the Fed. So as I mentioned, hawkish tone from the Fed. How do you see this playing out in the medium term for gold?
Well, I believe that gold is under pressure for entirely understandable, normal, macroeconomic reasons relating to expectations for where we are in the rate hiking cycle. And you've cited recent rhetoric out of the Fed. That's absolutely a key component of that. But let's face it, right? We did see this huge spike in inflation, which is not simply the effect of the unfortunate war in Ukraine, but was building throughout lockdowns, which gummed up all manner of supply chains. That's a negative supply shock. And yet, on the other hand, you had governments throwing all sorts of money around to try and buffer the negative impact that would all have on households and businesses. And so you ended up with the classic mix of a lot more money chasing fewer goods. And the only way markets clear under those conditions, as Milton Friedman, among others, taught us, is prices have to rise. And so I was expecting a very substantial rise in inflation, even back when the initial wave of COVID was coming through and lockdowns were being imposed. And the pressures only built. And sure, now we see it, right? Now we see all this pressure coming to bear. And of course, it is exacerbated by the unfortunate war in Ukraine. So I predicted already at the very start of the year that we were going to pass through what I called at the time a hawkish moment. And I use the word moment for a reason, because I wanted to stress that it's going to be hawkish for sure, but it's going to be very short term. And the reason I felt it was going to be short term was because I believe the underlying structural weaknesses of the US and global economy, and this includes China, the world's second largest economy, are much greater than generally assumed. And that even small baby step increases in interest rates, God forbid much larger ones, would have a disproportionately negative impact relative to market expectations. And indeed, central banks would be surprised just how much negative impact they would have on the outlook for economic activity. They would therefore pause sooner rather than later, shift from very hawkish to more neutral rhetoric pretty quickly. Hence, it would just be a hawkish moment. I think we're approaching that moment now.
Okay, but this hawkish moment hasn't really been conducive to higher gold prices so far.
No.
There's going to be a pivot,
and it won't be. It has to pass. The moment has to come and go. We're in it right now. It's taking place right now. But I believe it is going to go. And when it goes, and markets reassess, I believe in a very substantial way, that central banks are far more powerless to act on this inflation than they thought. I think gold is going to recover all of its losses this year and indeed reach new highs. Now, that will take time like anything else. But I think when it does happen, it's going to happen asymmetrically. That is, the recovery will be asymmetric relative to the decline, in my opinion.
Now, let's talk about inflation very briefly. Several gold analysts I've had on the show have made various theories or speculations as to why the gold price did not respond positively to higher inflation this year. What's yours?
I believe, first of all, to some extent, higher inflation was priced in, but to some extent, the spike that we saw absolutely was not. I believe central banks realized that this could be problematic fairly early on, did begin to adjust rhetoric a bit. And I think central banks have been trying to build this confidence and credibility that they've still got it and they can deal with this. They know how to deal with this. And so gold, I believe, for those sort of natural reasons, has struggled a bit. But keep in mind, this is as much or more a US dollar story as it is a gold story. If you look at gold in sterling terms, pretty unchanged for the year. If you look at gold in euro terms, pretty unchanged for the year. In yen terms, gold's pretty unchanged for the year. So it's really a dollar story as much as anything else. It's as if the dollar's the outlier and not gold. Now, of course, that begs the question, why is the dollar so strong? And I believe that has to do with perceptions that the US is still a safe haven, that the US is the so-called cleanest dirty shirt, and that the US economy is therefore better able to absorb higher interest rates without causing serious economic damage. I fundamentally disagree with that. And I know that's a controversial view, but I think the dollar is overvalued here and has a lot of exposure to the downside when we pass through this hawkish moment, as we discussed a moment ago.
Okay, well, let's talk about the dollar. So, yeah, you're right. Those are excellent points. Another view that I've heard is that the dollar has been strong because of the differentiation between interest rates here domestically and abroad. The U.S. central bank has been more hawkish thus far than other central banks. The U.S. interest rate has risen faster than other interest rates abroad. And so the differentiation is higher, and therefore more capital flows into the U.S. dollar. Do you think this differentiation between interest rates is going to last? In other words, will the Fed remain the most hawkish central bank for long?
No, I don't think it will. And as I did suggest, I think these perceptions about the relative superiority and flexibility of the U.S. economy, first of all, I believe they're already basically priced in, and I also think they're simply overblown. That is, let's keep in mind, the U.S. has gone through tremendous structural changes over the past couple of decades. It's got a far higher average tax rate than it used to have. It's got far higher household, corporate, and public sector debt to GDP than it used to have. It's got a far more expensive and difficult regulatory burden to comply with than it used to have. And this idea that the U.S. is fundamentally a more flexible, dynamic economy than others around the world it's increasingly hard to make that case today. And I believe that will begin to show up in the data that the U.S. economy is unable to last with strength if interest rates continue to rise, and the Fed will blink sooner than most people believe.
One more question about the Fed, and I'll move on to long-term structural problems with the dollar. So the Federal Reserve hinted that they would raise an unusually large amount by September, the next meeting, which is actually in a few weeks. So that's coming up. First of all, do you think they'll follow through with that? And second, long-term, by long-term I mean the next couple of months, do you think they could pivot, potentially stop raising interest rates, maybe even cut interest rates? I've heard that position before from some people.
I think the Fed is good for one more sizable rate increase. And I believe they're going to follow through with that because it is a credibility restoration exercise. I believe they want to build that credibility. And let's face it, even though you've had a very modest amount of stock market weakness so far this year, it's the order of magnitude is very, very small. Where there's more concern is in credit markets. And the Fed is also very concerned about credit markets. So that is something I'm sure they're watching. But nevertheless, I think they are good for one more large increase. After that, I think it's very likely they tone down the rhetoric almost immediately and see what happens. Step back a bit. And then I think what you'll find is that the general global economic downturn, which of course includes the US, which is technically already in recession, I believe that the numbers will start to force the Fed's hand towards a more explicit acknowledgement that the hiking cycle is probably over and that inflation is going to trend downwards of its own accord back to something in the low single digits, say on a 1 to 2 year time horizon. That's where I think they're going to end up. That will weaken the dollar, that will strengthen the gold price, and start kicking off, the general sort of picture that I have going forward.
Okay, we will come back to your gold price outlook towards the end of the interview, so if you're watching, stay tuned for that. Let's talk about the future of the dollar. And offline, you're telling me about the bifurcation of the global monetary system and the end of the golden age of a unipolar world in terms of the dollar hegemony, and the beginning of what's possibly a multipolar monetary system. So I'm just going to read a paragraph from an article written by my colleague at Kitco News, Anna Golubova. The headline is, Putin's BRICS new currency could benefit gold and Bitcoin, says analysts. Earlier this summer, Russian President Vladimir Putin said that Brazil, Russia, India, China, and South Africa are developing a new basket-based reserve currency. He says the issue of creating an international reserve currency based on a basket of currencies of our countries is being worked out, Putin said at a BRICS business forum at the end of June. We are ready to openly work with all fair partners. From a broader picture, John, what is going on right now?
Well, the BRICS have not been silent about their willingness to work towards some sort of restructuring of the international monetary system, which is, in their view, a bit better balanced and a bit fairer for all parties. And indeed, you have had formal statements made in BRIC summits going back over a decade to the effect of saying explicitly that they thought the way the current system worked, with the dollar at the center, of course, did not really serve their best interests nor the best interests of the world more generally. So this has been a rhetorical talking point for an awfully long time. But if you look where we now are with the, let's face it, quite heightened degree of geopolitical tensions around the world, not only in Ukraine, right? There are multiple hotspots here. I can see why the BRICS are moving perhaps from rhetoric to more practical action to try to catalyze some sort of restructuring of the system. And indeed, the BRICS as a whole comprise a substantially larger portion of the global economy than the United States. It's roughly double. And if they decide to somehow come up with a way to trade bilaterally and to use each other's currencies as reserves, or to create a basket of their own currencies and use that as reserves, and then to create their own sort of IMF to manage it, as it were. Look, I'm not saying that's easy. I'm not saying it's going to happen tomorrow. And I'm not even saying if they try it, they're going to be able to pull it off. And it could be hugely disruptive, and it might simply not work. But it's looking like they might well be ready to try. And if so, that would be a world historical event in terms of its impact on the international monetary system.
People have been talking about the decline of the dollar on a long-term secular basis, perhaps even the end of U.S. dollar hegemony around the world, and perhaps even more catastrophically, an explosion or an implosion of the dollar domestically, and that could be very bad. But people have to remember that currently the majority of global trade, or a large percentage of global trade, is still done in U.S. dollars. I'm just going to quote a figure from the European Central Bank's paper that they published in July 2021. They wrote in this paper that the dominant role of the U.S. dollar as an invoicing currency in global trade is well established. Roughly 40% of international trade transactions in goods are invoiced in dollars. Now, this is very high. I read other reports that it could be high as 65. So depending on which source, unequivocally, the U.S. dollar is a very important currency in global trade. So I don't think it's going away anytime soon, though. Let's talk about how this may change over the long term.
Look, I don't think the dollar's going away either. I just believe that the relatively unbalanced monetary system, or unipolar monetary system, if you want to call it that, which has prevailed post-Bretton Woods, notwithstanding the formal ending of gold backing for U.S. dollar reserves. I'm just saying that has a sell-by date, and I don't believe it's compatible with a general shift of economic and, for that matter, other forms of power around the world towards a more multipolar structure. And indeed, if you look at history, and my book looks at a lot of history.
Yes.
If you look at history, for unipolar monetary systems may be normal. Reserve currency-based systems around a single currency may be normal. But historically, with the one exception of the unbacked US dollar, they have all been backed by a very, very specific weight-measured amount of gold and or silver that is fundamentally different from a currency issued by a central bank without any restraint or constraint imposed on it by the structure of the international monetary system. Nature restricts a gold standard type system, even if there's a single issuer of the dominant coinage. Mother Nature does that because she determines how much gold there is around. Okay. Whereas today, there is no natural constraint on money creation. In my opinion, when you're in a unipolar world, yes, the monetary hegemon can impose its monetary preferences on the world at large. We've been experiencing that for decades, ever since the 1970s. But that is a historical anomaly, and I believe it is fundamentally incompatible with a multipolar world, where countries will demand a more equitable distribution of the power of money creation. And indeed, and this is the real crux of the argument in my book, this is where it comes together. The classical gold standard itself arose out of a lot of monetary mayhem. There were a lot of disputes about exactly how the international monetary system should work. And indeed, a gold standard can be best understood as a system or a structure that arises out of a failure to agree precisely how money should be created. And so if we're going back to that sort of level of dispute, competition, disagreement at the international monetary level, gold solves for the game theoretic monetary equilibrium for a multipolar world that is nevertheless hugely dependent on international trade.
This multipolar world, is this going to come because of changes in the global monetary system alone, or is this going to come because the U.S. will lose its hegemony as also a global military and political power? Usually in the past, a global reserve currency was backed by a country that was also the world's superpower at the time. So the dollar has enjoyed superpower status for the last 70 years. Is this going to change?
Absolutely.
Yeah.
Now, look, absolutely, and you're absolutely right. This is far more complex than I've been able to get into here, although in my book, I do touch on political and military aspects of this. Now, I would argue that ultimately all power derives from economic power. It may derive over long periods of time, and certainly in the short term, military power can be hugely important in international affairs, as anyone who has studied major wars would know. But ultimately, it's economic, and in my opinion, it's just not realistic for the United States to rely on purely monetary dominance to somehow reverse what has been actually, at this point, nearly a 70-year trend of a gradual erosion of relative economic power on the part of the United States. At the end of the Second World War, the U.S. economy was roughly half the entire global economy by activity. Today, it's only 20%. That's a huge relative decline in U.S. economic power. And I just believe that don't get me wrong. I mean, I'm not dismissing military power for 1 second, but if you just extrapolate this trend, ultimately it's going to tip the balance regardless of whether the U.S. retains military superiority or not.
Well, in this multipolar world, John, which currency do you think will most likely challenge the U.S. dollar?
Well, this is the thing. This is the thing. In a way, none of them do. Let me explain. If you've seen the film A Beautiful Mind, that film goes through an example of explaining John Nash equilibrium game theory, the concept of a Nash equilibrium. And there's this wonderful scene that takes place in a bar where a young John Nash, PhD student, is sitting around chatting with his mates over a few beers. And in walk a group of quite attractive young ladies, and naturally they're inclined to go over and chat them up. But one of the young ladies is, just don't take this the wrong way, but one of them is particularly tall, particularly blonde, particularly stunning and attractive. And all of them are sort of thinking, hey, I'm going to go approach her. But John Nash realizes the problem. If they all approach her at once, they're going to not only put her off a bit, but they're going to put off her friends who get ignored. And as a group, the girls won't feel comfortable. They won't want to talk to them at all, and they might even leave the bar. And so John Nash realizes, wait a minute, we must agree amongst ourselves. No one talks to the blonde. And that way we get to chat up the ladies. Genius. That's a Nash equilibrium. It's adopting the strategy that best satisfies all players' interests, including your own. That's the gold standard. That, the blonde, right, agreeing to avoid her is the gold standard. In monetary terms, the blonde represents the printing press, who doesn't just want to print their own money, who doesn't just want to devalue their currency for competitive advantage. Everyone does, but if everyone does it, no one benefits. Whereas, if everyone just agrees, nope, we're going to agree on gold, which none of us can print, none of us can manipulate, none of us can control, then we have a level international monetary playing field that does not favor any one player over any other player. That's the Nash monetary equilibrium. That's the thesis I put forward in my book.
I'm not discounting the Nash equilibrium, which ultimately won the Nobel Prize for economics, but my friends and I discovered this theory a long time ago, even before we watched that movie. So
okay.
there is some truth in that in the real life.
Very good.
That I've observed. Yeah, don't compete for resources, otherwise you're going to be left alone. Okay, let's talk, but just to rephrase my question. Again, 60% of global trade is currently done in the US dollar. If this ratio were to fall, which other currencies could pick up the slack is what I'm getting at.
Okay. Oh, look, I mean, in theory, all of them. What I'm saying is that I believe that whole process catalyzes itself into a new gold-backed global monetary system.
All right.
But in theory, what that means is it almost gets to the point where it doesn't matter which currency you're invoicing in, because if they're all gold-backed, then in a way, they're all going to be stable relative to each other, and you get much more certainty at the international level regarding the stability of your assets, of your cash flows, of your trade, regardless of whether it happens to specifically be yuan denominated, dollar denominated, yen denominated, euro denominated, so on and so forth. So in my opinion, kind of all of them, right? I believe all of them at that point competing on a level playing field will be used. And indeed, when it comes to bilateral trade, presumably the dominant currencies will be the ones that are issued by those two countries engaging in that bilateral trade. When you look at the scale of exports from countries like China and Germany, or the euro area more generally, you can make a strong case that the dollar is not going to be any more dominant in invoicing if you move to that sort of system than either the euro or the Chinese yuan.
You did write in your book, with no single BRICS economy in a position to dominate the others, it is far more logical for them to move toward the use of an objective reference currency that can be trusted and accepted by all. A gold-backed currency of some sort would be ideally suited for that. Okay, so let's talk about some of the assumptions behind that paragraph. So first, why do you think gold is still currently, in today's environment, a trusted source by all parties? I mean, it was in the past. Is it still going to be trusted to the same degree now?
I believe it is, and it goes back to what I mentioned very early on. The fact is that nobody can print gold. Nobody can create gold. You only can come up with more gold either by exporting more than you import, and then, of course, you accumulate gold, or, of course, you find a way to dig more out of the ground. But that's expensive, takes time and money, and you only do it when the price of gold is sufficiently high to make that economically worthwhile. And so the supply of gold becomes kind of a self-regulating system vis-a-vis the demand for gold. And that, to me, is a much, much better basis for international trade and growth than the system we currently have, which is one where nobody can really agree or know. It's nice to know that Mother Nature determines how much gold is available, as opposed to the country across the way with which you do trade, but you don't necessarily completely trust to honor its commitments. Maybe indeed you'll fall prey to economic sanctions at some point. Do you really want to be holding assets denominated in that country's currency, whereas gold is no national asset in that sense? It belongs to the planet, and it was created by Mother Earth. So to me, it kind of solves this problem of mistrust, distrust, competition, and yet also cooperation at the international level. It facilitates all the good things about international trade while mitigating the potential bad things about monetary manipulation.
Let's assume, I'm not saying it will happen, but let's assume a gold standard is inevitable for many countries around the world. If that were the case, John, why would I invest in gold today? Because keep in mind, during the Bretton Woods system, the gold price was fixed. It was very flat. And so, if you assume that the same system would reoccur, the gold price would be managed, it would be flat. I wouldn't gain capital appreciation as an investor. And there's also a possibility that my gold might be confiscated by the government. Those are cases against investing in gold now, are they not?
Well, the confiscation concern is theoretically always there. Let me discuss that in a moment and first answer your first question.
Right.
The fact is that we're not going to, no one's just going to wave a magic wand and somehow get us back onto a gold standard. It's not going to happen that way. It might be quite disruptive. It might be only mildly disruptive depending on how it's done. But you still have to go through a transition period. The transition period will have to reprice gold to a level which allows it to be valued vis-a-vis the global asset base and global trade volumes in a way that implies equilibrium. What I mean by that is that today the gold price is too low to allow markets to clear because assets are overvalued vis-a-vis gold, and you need to rebalance the global economy such that you don't have these imbalances, which are huge, right, as a result of all the dollar accumulation as reserves through the decades of Bretton Woods. So the gold price needs to rise by an order of magnitude in order to allow that system to work. So you go through this phase transition when the price of gold has to rise by an order of magnitude. In my book, I go through some calculations what that order of magnitude would be, and indeed they're based on calculations that have been made before by other economists, including under Bretton Woods. I mean, would you believe, we take it for granted today, we think, oh gee, Bretton Woods is a stable system, it just worked, nobody questioned it. That's not true. There was lots of debate and discussion during already the 1950s, but in particular the 1960s, that the US money and credit supply was growing too quickly to be credibly backed by gold anymore and to allow Bretton Woods to function. And so there was already this dispute going on that gold was going to have to be revalued at some point. And indeed, gold was revalued before Bretton Woods broke down completely. They tried to go through a revaluation process, but it just wasn't enough. It didn't properly rebalance international trade, and it all blew up in the end when the U.S. basically lost patience with the rest of the world. So, that's how it happened then. But back then, the world was still very unipolar in political, economic, and military terms. It's far less so today. So I think today, the reevaluation that gold would have to go through to imply a stable international monetary equilibrium is huge. And by implication, according to my calculations, you're talking something in the region of about $50,000 per ounce being a reasonable market clearing price for gold if you fully go back to a gold-backed international monetary system.
Okay. 50,000. Yeah, that was my question for your long-term, not outlook, but a figure for gold that would make sense based on your calculations. Okay. Well, I've got to ask you, why can't a Bitcoin standard be appropriate? Some would argue that Bitcoin shares similar properties in terms of its limited supply. In fact, it has a cap supply. Gold has limited supply. It doesn't have a theoretical cap, but Bitcoin has a hard cap. It can't be printed by the governments. It's outside of government control. It shares many similar properties as gold. So can Bitcoin replace gold as a standard of currency?
I regard Bitcoin as a fascinating monetary experiment, and there's really much to admire about that. I've been watching it from very early days, and have truly been fascinated by it. And I truly respect the effort behind it, and the effort to develop an ecosystem around it. But as that development has taken place, it has become evident to me that Bitcoin, while very elegant in its maths, is less efficient than is generally assumed as a monetary base. Now, I stress the word base. I'll elaborate on that in a moment. Basically, the issue here is that information theory, which was pioneered by Claude Shannon and others already back in the 1940s, and is the basis today of how internet protocols work with respect to sending bits of information around, and all computer storage, zeros and ones, basically. It has to do with energy. Well, how much energy does it take to switch from a 0 to a 1, or back again, or transfer that information from point A to point B? The maths behind that is very, very, it's fascinating and very complex, but it reduces to this. Bitcoin, sadly, is too energy efficient to allow for information transmission at global scale. It's just not efficient enough. It consumes way too many BTUs, as it were. Now, people are trying to solve that problem and make it more efficient by layering on top. They're stacking on top of it things like the Lightning Network, say, or Taproot, and these sorts of protocols and everything else. Well, that sounds nice on paper, but understand that undermines one of the original selling points of Bitcoin, was that it was fully decentralized. But if fully decentralized, it's too inefficient. So, okay, centralize it, but then you're creating points of failure. You're creating points of potential regulation and interference and potential points of fraud. And so a lot of the benefits of Bitcoin are lost as you try to come to terms with its energy inefficiency. Now, why does that make gold somehow better? Well, guess what? As a monetary base layer, gold requires zero energy to maintain because Mother Nature simply created it. It's non-reactive. It has essentially zero entropy, and it cannot be destroyed. Okay? I mean, it can be dispersed, it can be redispersed, but it can't really be destroyed in a physical sense. Bitcoin sadly lacks all of those immutable properties. And so as a monetary base, gold is superior. And therefore, if gold's the superior base, that's what you want to stack on top of. Go ahead and take a technology like Bitcoin, back it with gold, and build your monetary system on that. Hey, more power to you. I think it would be a great idea. But to have Bitcoin itself be the monetary base, hugely inefficient. I don't think that could possibly work. And people would realize that. It would just become too expensive and it wouldn't work.
Yeah, I think you were referring to the blockchain trilemma problem. No blockchain could have currently all three properties, scalability, decentralization, and security at the same time, and those two. So yes, you're right, people are working on this problem. Some claim to have solved this problem, but that's debatable. So John, you're advocating for maybe a gold standard that is digitized would be the ideal hybrid system.
Absolutely. Look, I'm a huge fan of technology. Technology is behind all human progress, okay? I'm not going to sit here and say that we should go back to the coinage of the 19th century. Absolutely not. But why not take advantage of whatever latest, greatest information technology is out there and use that to transmit title to gold from one place to another in exchange for goods and services, or to purchase assets or whatever it is? Why not do that in the most efficient information theory way possible, which hopefully is also secure and all of that, but back it by gold to remove the entropy of the base layer. That to me is the holy grail. And indeed, I'm very confident someday we're going to get there.
Okay, I just want to end on this point. Well, 2 points actually. First, let's talk about confiscation very quickly because you mentioned that. You said that it's always a risk. Why is that?
Look, it is a risk, and there are examples in history of governments confiscating gold. Now, what's interesting, in more cases than not, it ends up bringing down the government. And the history of the UK is very instructive in this regard. King John tries to confiscate gold, and they send him packing in short order. Charles I does confiscate gold and loses his head. Not too long thereafter. So at least in the UK, there may be a risk of it, but it tends to result in very bad outcomes.
Roosevelt did it. He didn't lose his head though.
No. But he didn't. He confiscated it. Yes and no.
Yes.
It was one of those. It was kind of a don't ask, don't tell confiscation. Okay. You could hoard it if you wanted to, and indeed, households that did hoard it ended up being, finally relieved of that burden in the 1970s when it was made legal for U.S. households to own gold again. So, but Roosevelt did devalue the dollar very, very substantially versus gold to try and relieve the deflationary pressure of the Great Depression and make the U.S. more competitive in export markets once again. So that was still a form of wealth confiscation, for sure, absolutely. One that was, arguably unconstitutional, and I personally believe it was. So look, the risk is never going to go away, but I would say this. Physical gold, if you do own it in your possession or have it stored in a very safe jurisdiction with strong property rights and protections for private property, if someone's going to try to seize that gold, they're going to have to give very good reasons for it. They're going to have to give evidence of criminal wrongdoing. They're going to have to give evidence of, something which will be accepted by whatever legal authority is in place in whatever jurisdiction this is taking place. That means that gold is kind of a monetary habeas corpus. You can only confiscate physical gold by actually taking physical, potentially violent action to do so if you're doing it against someone's will or another country's will, if that country, for example, provides a neutral jurisdiction to hold people's gold securely. So you have to make a very public issue out of confiscating gold, and that tends to make the government doing so look pretty bad. If you purport to be a free, open, progressive democracy and you're behaving that way, it undermines your credibility and legitimacy. It wakes people up to possible tyranny. And so actually, I think this is one reason why, among other people, Alan Greenspan argued back in the day that gold was essential to both economic and general personal political freedom.
A final point, and I'll let you go. We talked about the future of the global monetary system, but let's talk about the value of these fiat currencies themselves. I've heard the argument that in the past, historically, most fiat currencies have devalued by at least 99% if you trace the history of the entire currency. Is this going to continue happening?
Well, look, the way the system is currently being run, it has to happen by definition. It's the only way you can keep the banking system afloat. That's the problem we have here, right? We're in this terminal phase. We've crossed the Rubicon. We've crossed the event horizon. There is no way to keep the current system functioning without continuing to inflate. Inflation is endemic now. There's no way to come back out of this. And therefore, you either inflate to oblivion or you eventually reset the system. I think there's a lot of acceptance now that one of those two has to happen. Of course, if you're if you're a policymaker, you're an economic official and you're in charge, you prefer a reset. That's easier said than done. But all the discussion about CBDCs, central bank digital currencies, all the discussion about, potentially creating a new currency basket, be it for the BRICS, be it for the world at large, all this discussion, which is very open and active now, about various forms of monetary restructuring, I believe all of that is based on concerns that we actually have to reset the system in order to not just inflate into oblivion. They won't say that that's the choice we're making because it sounds kind of embarrassing to suggest, gee, our policies have led to this awful dilemma. But that's where we are, in my opinion.
All right, very good. John, excellent analysis. I thank you very much for your time today. I learned a lot. I hope you return to the show.
Oh, my pleasure, David. Thanks for having me.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more.
Kitco News, special coverage of the Vancouver Resource Investment Conference is brought to you by First Mining Gold.
I'm Michelle McCory, and we are back at the Vancouver Resource Investment Conference, where one of the big themes has been the challenge to the dollar-dominated monetary system. And my next guest says a global monetary reset is already underway. Andy Schechtman is the president and owner of Miles Franklin Precious Metals. He has 3 decades of experience in the precious metal sector and is a very well-regarded expert on monetary history and political economy. Welcome to Kitco, Andy.
Thanks for having me, Michelle. It's great to be here.
It's great to have you, although, as I said to you earlier, it's a little bit terrifying hearing what you break down for us. And it all hinges off this idea of de-dollarization, which seems to be gaining momentum following Russia's invasion of Ukraine and the way the dollar has been increasingly weaponized, taking Russia off the SWIFT system. The BRICS taking notice of this and saying, well, perhaps we should have our own currency backed by commodities. We've seen those conversations happen and develop following the withdrawal from Afghanistan, which arguably was a disaster. We had Saudi Arabia question whether they want to be part of the BRICS and question their relationship with the United States. And we've also got Russia, for example, offering to help Iran with a gold-backed stable coin. So we have all of these pieces falling into place. And perhaps not coincidentally, we've also seen central banks buying gold at record rates. Now, you say all of these are just data points that if you connect them together, you see a narrative that points towards a global monetary reset. And it all started for you in 2017 when you saw that the Bundesbank, Germany, was repatriating its gold. So why don't we take it from there, Andy? Break down your thesis joining those dots for us.
Sure, thank you. That's well done. That's a good roadmap. So it's true. You know, at the end of 2011, as the bull market started to head down into a bear market, by 2017 we saw capitulation on many levels, not only with the retail investor, but also the central banks. Central banks were selling their gold. It really never made a whole lot of sense to me. And by 2017, we were at really at the peak of the bear market in precious metals, and this was when Bitcoin was taking off. And there were a lot of people selling their gold, and talks of central banks divesting of gold and investing in treasuries or income-producing assets. And then out of nowhere, a story popped up that the Bundesbank had been trying to repatriate their gold for a few years, but started to really make a big deal of it in 2017. It caught my eye. Why would they want to repatriate their gold from the New York Fed in the midst of what seemed to be a movement away from precious metals and into other forms of investment? It was very interesting they made such a big deal, and within a few weeks of that you had the Bank of Turkey and the Bank of Austria and the Dutch National Bank and the Czech National Bank and the Bank of Poland, and all of these banks, the Bank of Hungary, they were all saying, send us our gold back, not just from the New York Fed, but also from the Bank of England. And so it began a movement that really caught my eye. And now in 2018, the following year, this really accentuated when those same banks bought more gold as a group than they did in the 60 years previously combined. Now I'm starting to get really interested and really aware of what was happening. 2019 comes along, those numbers jump by almost 100%, north of 90%. The accumulation of gold by these central banks, which was out of nowhere, really, if we look back over the previous decade. And then the Bank of International Settlements came out with the declaration of revaluing gold as a high-quality liquid asset. Now, there's been some dispute, is it a tier one or is it a high-quality liquid asset? In the end, they're the same thing. It's as good as cash. When it's a hedged position, it is viewed by the Bank of International Settlements as good as cash. And I think if you look at that and realize that the acquisition of gold and the repatriation of gold, which was almost two and a half years prior to this admission, you wonder, were they clued in on the revaluation of gold or on the reclassification of it? Were they told, get your house in order, repatriate your gold? You might want to stop buying it because we're going to reclassify it as good as cash. So this really started to get me interested in what was happening. And
so just to interrupt you there, would the U.S. have been left out of that conversation?
No, they were not. This was all part of the Basel III.
Right, but I'm saying if they were telling central banks, you should start repatriating gold, this is what's going to happen.
Whether or not they were left out of it or they just decided not to do it or accumulated other ways is, I guess, debatable. And, you wonder where Gaddafi's gold is, where Saddam Hussein's gold is. Just saying, the Ukraine sold at $25 billion worth of gold to fund the war. Where did that go? So I don't know where the U.S., if the U.S. was accumulating gold or if they weren't, or if they were getting it in other ways. But the U.S. certainly wasn't part of the narrative. These were all the Eastern European banks. And ironically, most of the banks that were doing it were either part of the European Union or in that general region, but most of them did not trade the euro. They traded their own currency within the European Union. So these are the banks that I believe ultimately will shift towards the BRICS nations. I digress. 2020, I start to notice the second very interesting piece of the puzzle, and that was the Chinese Belt Road and Rail Initiative. And this is the largest infrastructure project in human history, and it's connecting Asia and Africa and parts of South America and Europe, the old Silk Road.
But that's been developing for, over a decade now?
It has been, but it really started to gain traction in 2020. And I'm looking at it and realizing that all 13 OPEC producing countries are on the Belt Road. Almost 70% of human population and 40% of global GDP on this growing group of countries, and it's all void of US dollar participation. Most of it settling on the new Chinese digital yuan. And so it started to get I started to get this feeling that, look, a lot of the countries that are part of the Belt Road, China and India and Russia, and these are countries that are accumulating all of the gold. And and producing all of the gold. And you start to see this growing group of countries and kind of the isolation of the dollar. Now, this really didn't all fit into what I was talking about until shortly after 2021. 2020, the banks are still buying gold. And 2021 rolls around and we see the day that we leave Afghanistan in a very unharmonious way. Saudi Arabia, I think, at that point, signed the death warrant for the end of the petrodollar the day we left Afghanistan or the day after, and I think there is no coincidence in the timing. Saudi Arabia announces a joint military cooperation agreement with Russia. You know, I often ask...
And just to recap, leaving Afghanistan, deserting weapons, deserting allies, deserting personnel.
Leaving our own servicemen and women behind enemy lines was something that would have been considered inconceivable in the United States that I grew up in. And I think that really signaled something to our allies and certainly to our foes. And, you know, I ask people what makes the dollar the world reserve currency, and most people don't know. But in 1974, 3 years after we closed the gold window, Kissinger went to Saudi Arabia and struck a deal with the Saudi kingdom and said, hey, we'll protect you, but for that, you'll denominate oil globally in dollars. And they have through OPEC. And this has created a massive synthetic demand for the dollar for the last 50 years. Signaling a change in that by a joint military cooperation agreement with Russia was a huge, huge move that really got very little, if any, attention in the Western media. But now things are really starting to click in for me, and I'm starting to see not only global de-dollarization, but also groupings that are growing together, like all 13 of the OPEC producing countries on the Belt Road, like shortly thereafter, China and Nigeria, who also signed the same contract with Russia, selling their gold to China for the Petro-Yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange. And this is how countries like Iran have sidestepped sanctions for quite some time, selling their oil to China for a bond that is immediately convertible into gold, and they take possession of it right off the Shanghai Gold Exchange. So these things are starting to speed up at this point, and I'm really starting to notice that there's a growing group of countries that are formulating around the BRICS that are, I think, coalescing against the dollar, the hypocrisy, the hegemony of the dollar. And you could see it, you could feel it, and you could watch all of the gold that was being sent eastward and the accumulation and the de-dollarization. 2022 rolls along and the weaponization of the dollar, as you mentioned, where I believe it's not the prerogative of the West to say who can and can't use the world reserve currency. It should be more for public opinion, not for the administrator of the currency to decide who can and can't use it. And it was that moment, and I often ask people, do you think this was intended? You know, we have 130 trillion in debt, 31 trillion that's on balance sheet, and Medicare and Medicaid and Social Security, which is 55 trillion underfunded in and of itself, and government military pensions, render us insolvent. Most of this debt accumulated at the lowest interest rates in human history. Was it intended? Did we want to pick a villain to create this great reset, to all of a sudden start the de-dollarization? And this is where the story gets very interesting as it turns from here.
Okay, well, let's revisit some of those points there. So the dollar starts to unravel in this narrative when Saudi Arabia starts to make deals with China and the petrodollar is in jeopardy. So you're saying Saudi Arabia is now looking at Russia for protection. And if you're Saudi Arabia, you're thinking two things. For one thing, you're watching how the dollar was weaponized in the Russia invasion of Ukraine, and you're going, well, we don't want that. We can't have that happen to our assets. What if the US wakes up one morning and don't like our human rights policies, for example, or something else, or some other situation that could happen in the Middle East and decides to do the same to us? Maybe this isn't the best way to keep our reserves. But you've also got Russia not really projecting tremendous strength via this conflict in Ukraine. So why would the Saudis make such a bold decision before seeing who is the bigger military power in play?
Yes, that is part of the equation. That's a fair statement. This was before the Ukraine invasion, number one. And secondly, the day after these announcements came out, Zero Hedge ran an article saying Saudi Arabia announces to the world that their nuclear submarines are outfitted with hypersonic ICBMs. This is the technology the West doesn't have. The State Department commented and said they're very concerned about it. These are the missiles that can go Mach 10 up in the atmosphere and hit the ground at the speed of an asteroid. That was, I think, their way of saying, don't even try to do what you did to Gaddafi and Hussein. Don't even think about it. It was a veiled threat, let's say. And I think this is another reason why when you realize that also last year we see the Saudis say, well, we have submitted our application to the BRICS. So you have a growing unison of countries that are joining together that in and of themselves maybe can't project that strength, maybe can't stand up to the West. But together as a group, their militaries are stronger, their GDPs are bigger. I think it's a growing chorus of countries standing up to that hypocrisy, standing up to the West in a way that they've never been able to do in and of themselves. And
well, we'll leave the word hypocrisy aside for now, but let's just say standing up to a system where the U.S. can continue to print dollars, and then that makes the debt that they owe the U.S. become bigger and bigger and bigger.
Absolutely.
So we'll put aside the moral argument of the U.S.'s role on the global
yes,
stage.
and it is a perceived hypocrisy. I'm not saying it is, but that's their perception.
That's a fair enough point. So we're going to see this bifurcation of the global monetary system.
Absolutely.
Break that down in further detail. How does this play out from here?
Well, you have all of these countries joining the BRICS that you put them all together along with the Shanghai Cooperation Organization and the Belt Road. You're talking north of 80% of human population, and all it would take. Now, you have to remember, we're coming from a period of time where asset prices were blown sky high over the last several years, with more money being created in the last 3 than in the history of the country preceding it. A lot of that money found its way into assets, and you have the misallocation and the distortions that are created by this. All it would take would be for Saudi Arabia to stand up on the stage, as they just told the folks at the Davos conference that we're now going to consider taking other currencies for oil. We've already been told that the BRICS currency would be pegged to gold or to commodities, and the assumption being gold being one of the commodities. I think all it would take would be Saudi Arabia to say to the West, thanks for the memories, it's been great, we appreciate it, but we're going to open up oil purchases in other currencies, not just dollars, maybe euros and ruble and rupee and gold, and all of a sudden, bang, all of the countries that have had to hold dollars for the last 50 years no longer really have any interest in holding them. And if they all start to dump dollars, and I think it would happen quickly, where they would all dump dollars, you have a tsunami of inflation hitting the shores of the West that would immediately create a spike in interest rates to compensate for the loss of purchasing power. This is how we see a great reset, as interest rates spike in relation to a crashing dollar, which then is inversely correlated to asset prices that have gone stratospheric over the last few years, and I would argue irrationally. And as interest rates spike and this inverse correlation hits the shores, stocks, bonds, and real estate, along with the crashing dollar, all collapse at the very same time. And when I ask, do you think it was intended? I guess I'm kind of tongue-in-cheek, but if you think about it, now you have a villain. Instead of blaming the Fed for creating these distortions and letting this happen, you have the Fed there saying they're going to raise rates, but they've done a woeful job at raising them high enough to tackle inflation.
All right, let's put a pause on that one before we get into the Great Reset, which I understand also opens the way for central bank digital currencies and a complete revamp of the system. And let's first focus on how we get to this de-dollarized global economy, or at least an economy where the dollar plays a less significant role. So in this bifurcation of the global monetary system, what relevance does the dollar have?
The dollar will always,
it's still in play.
Yeah, the dollar will always have a relevance to it, and maybe it's not in its current state. But the thing that I think is really important to understand is that these agreements that are being made with the BRICS represent such a massive part of GDP and of population. At what point does the West decide to or attempt to trade with this group? Are they even going to be welcomed into it? I don't know. It just seems they're being isolated.
Well, because the dollar is so powerful, and because the United States has enjoyed so much privilege having the global reserve currency, why would it just give it up without a fight?
Well, they will. They will fight, and they won't just give it up. But, you know, a lot of people will make the analogy to the euro, that all these countries came together and it didn't work. And I think there's something to be said for that. But when you look at all of these countries coming together in a similar rallying cry, for whatever that rallying cry is against the West, it is the backing of the new system by commodities, and perhaps all of it denoted on a distributed ledger. The digital yuan, which has been running for the last 4 years, backing the Belt Road to the tune of over 20 billion in successful transactions, would be, I believe, the rails to a new BRICS currency that would show the immutability of what every country pegged or pledged to the new system. That gives it the glue to make it work, where everyone has the same equal footing, equal say at the table. This, to me, is what would make the system work. As Zoltan Pozsar calls it, a new system backed by commodities, Bretton Woods 3, rather than a system backed by debt instruments and promises.
And Andy, we have had other guests on the show, Frank Juster for one, who mentioned this over a year ago, that he sees the trend developing where you will have a central bank digital currency or digital currency on the blockchain, backed, not necessarily pegged, backed by gold and a basket of other commodities. And the transparency that the blockchain allows creates a sense of faith amongst the other countries, going to the expression that there's perhaps distrust amongst them with regards to how they handle their own affairs. But again, the idea that the United States is just going to hope that it will be included in this trade system, it just seems a bit far-fetched that there wouldn't be a more aggressive push to maintain that kind of status. Well, what would that look like? What would that look like?
I don't know exactly what that looks like. I'm sure they'll resort to any and all options.
Is it a war? Is it a kinetic war?
It certainly looks like we're heading in that direction right now. You know, with what's happening, we're funding the Ukraine to a total of almost $100 billion. We're selling them Stinger missiles and drones, providing, you know, tanks and intelligence. I mean, you could argue in a court of law, we would be an accomplice to a crime. You could argue we are moving in that direction, and maybe that is what they're going to resort to. But I don't know. And I think the bottom line is simply this: we are indebted to a level that will never pay it back, and interest rates are rising. So at what point do people want to start receiving something that is tangible for the commodities that they're trading or for the business that they're doing with a country that is paying them in inflated dollars? And certainly the treasury market is rife with risk at this point in a rising interest rate market. I think the bloom is off the rose for the West. So what does it entail? How do they fight back? I'm sure they will, and maybe it is war. I don't know, but your point is valid.
Is the conflict then against the Saudis or the Chinese? Because it seems as though you're saying that the Saudis are the kingmakers in all of this if they come out and say no more petrodollar. So who would the U.S. potentially direct its wrath at?
That's a good question. I think the Saudis are joining the BRICS nations so that they have protection from countries that have the ability to back them and stand up to the West. I think, you know, certainly the Saudis would be the linchpin of it all. But if they're joining a group that has the ability to stand behind them and protect them as part of a unified nation or a unified group, it would seem that they're picking a fight with everybody.
Right. Well, let's focus on the R in the BRICS, and that's Russia, because a lot of this depends on the Russian invasion of Ukraine, which many would say is a proxy war, with the US really being so active and participating, now sending tanks, which was a line they said that they wouldn't cross initially. Potentially, there's now a request from Ukraine for F-16s. Right. We'll see if that happens. If Russia loses this war, what does it mean for this whole reset theory? Does it jeopardize the BRICS ability to launch this currency that challenges the dollar?
You know, it may. It may slow things down. It may derail it. It may change the way that it plays out. But look, ever since the sanctions, you're still seeing north of 80% of the world trading with Russia. It hasn't bothered the majority of the world. So, and I guess what does lose mean? I don't know. How bad does this get, and who gets dragged into it? There are a lot of what ifs and suppositions there. I don't know, and these are all valid points. And again, this is a chain of events that I've seen accumulating over time, and I guess there's fluidity to it. There's no question about it, and it certainly, it certainly changes, making this something that's cut and dry. There will be an outcome that I guess we'll have to see, but I don't think it changes the global de-dollarization, the global drive away from the dollars. And if Russia is hampered in any way by their ability to hold up their end of the bargain with the BRICS, so be it. I still don't think it changes the ultimate move away from the US dollar.
Well, look, Andy, every global reserve currency known to man has lost its place in the sun. You know, so it has been dethroned. It is sort of the natural cycle of events. And to your point about these countries sort of not really paying that much attention to the sanctions, we just had Yellen in South Africa speaking to President Cyril Ramaphosa saying, hey, you guys are kind of contravening the sanctions a little bit. You need to play nicely. But we don't know how much weight her word has if we're not seeing the U.S. willing to back it up with what, military, right? I mean, is that what it comes to? Why have people played along all this time? Was it because of the assumed military might of the United States?
I think that had a lot to do with it. And look, a lot of these countries a decade ago were in no position to do this. You know, when in 1974, when Kissinger signed this contract, you know, the Middle East was a poor area. They weren't enriched and they weren't developed the way that they are right now. And you could say the same thing about China. The progression that they've made as an industrialized nation is extraordinary. So I guess it's just, like you said, to your point, it's the time. You go back to the 1400s, almost every currency had between an 80 and 100-year lifespan. We're already, you know, we're on the outskirts of that, living on borrowed time, you could argue from a historical perspective. So maybe we've just run the course of our currency.
Andy, who's on Team Dollar? Who would prefer the dollar other than the United States? Although you argue that this may be a way to reset everything, and we'll get back to that. But who would prefer for the dollar to maintain its status?
I suppose those countries that are part of the Western Alliance, Canada, Australia, the United Kingdom, Japan. And I don't know if they really do want it to continue. I don't know who is on Team Dollar. I guess I haven't thought that far out, to be quite honestly. I haven't thought about it that way. I guess all I'm looking at is mathematics. And when you see such a massive shift of human population coalescing against the dollar, and it's very obvious to see when you see shifts away from accepting the dollar for oil by countries already and admissions by Saudi Arabia to look to other currencies, I think you have to take a real hard look at what happens if all of a sudden the world doesn't need to own dollars to buy oil.
And it's not just oil, because we're seeing a move away from U.S. treasuries globally. Well, certainly from China.
Of course. Right? Not just China, Saudi Arabia, all of these countries. Why would anyone buy our treasuries earning 3% with inflation double that by metrics that arguably are wrong? You know, I don't know if you've ever had John Williams with Shadow Stats on your show, but he'll show you numbers that the way the inflation was calculated prior to 1980 when they changed the numbers, and he would say inflation's at 15% right now. But even using 7% inflation with a 3.5% yield on the 10-year Treasury, you're guaranteed a real return of negative 3.5% compounding over 10 years. Why would anyone want to do that? And so you're right, it's not just the dollar market, it is the Treasury market. And we are incentivizing by the underperformance and the mismanagement of the dollar and what's happened to the yields on the Treasuries for other people or for these countries to find other ways.
And I guess, you know, they're looking at the U.S. with this unprecedented fiscal and monetary stimulus printing away and saying, well, now our debts are larger. The U.S. is just devaluing our reserves. So I can understand how the sentiment against the dollar would be building up in this scenario. So let's assume this does play out and we do have a split in the monetary system and the dollar loses its value, and perhaps this BRICS reserve currency, which is digital, which is backed by commodities, comes into play and becomes a leading player on the global stage. Walk us through what happens to the dollar and for those holding dollars back home.
Yeah, I think at that point, you know, you have a wave of dollar selling. Every country on the planet, nearly 85% of all oil sales have been in dollars for, I don't know, the last 50 years, if not more. All of these countries, it's the foundation of their currencies. And if all of a sudden the dollar starts to tank, it'll be a tsunami of selling, sell, in order to not be crushed by the wave of selling. And I think when that happens, and you have all of the dollars hitting the shores here, you have that inflationary spike in interest rates. It has to compensate for the loss of purchasing power. Interest rates would have to spike. And when I started in this industry, stocks and bonds were inversely correlated to one another. It was called risk on and risk off. And when you realize that they are now positively correlated to one another because interest rates have been driven so low, a spike in interest rates cripples both the bond and the stock market and, of course, the real estate market. The pillars of wealth in the United States center around stocks, bonds, and real estate. If the dollar gets dumped globally, and there's way more dollars outside the U.S. than there are domestically, if all of a sudden they get dumped globally because you don't have to hold them to buy oil anymore, and they hit our shore, spiking interest rates, you see a collapse simultaneously in all three pillars of wealth, including the dollar.
On this idea of oil, though, there has been an attempted shift away from oil towards solar, towards natural gas, towards various other forms of clean energy, nuclear even perhaps. So is it that relevant what oil is priced in?
No, because
if the shift is away from oil?
No, because this is the whole reason that OPEC and Saudi Arabia want to leave us. Why would they want to not only receive our depreciating dollars and treasuries and sell us their oil when we're telling them in 30 years we're going to be completely green? So instead they're focusing their energy on what amounts to north of 80% of human population who is not going green and who is not challenging their way of life. And so I think it is actually the catalyst by which Saudi Arabia makes this shift. Once they have their alliances and they feel safe, I think they'll make that switch, and it will happen quickly. I think when that switch flips, it happens really quickly. But no, I think, in fact, we're making a mistake by doing that. I think we're making a very big mistake by making the admission to the Saudis that we want to go green. We're ruining their way of life is the way they're looking at it. So why would they want to do any special favors for us? And this is why they came out and said to Xi Jinping that you are our most important trade partner in oil today and for the next 50 years. That's a big deal because we've been their biggest trade partner for the last 50 years. So I think really it is the key point, only in reverse. So yeah, it matters, but it matters more for them than it does for us.
Well, because you could say that developing countries have been put off by this idea. You guys have used carbon fossil fuels to grow your economies. Now that we're trying to do the same, you're telling us no, we can't do that and hampering our growth.
And that's why you see 152 countries on the Belt Road Initiative. And these are all the developing nations. And that's exactly right. And this is this grouping of humanity that I think, and that's why I say the word hypocrisy. This is not my word, it's just my perception of the way that they would view us by making these declarations.
What about other commodities that are not oil, that you would still need to use dollars to buy? Is that where the split then just comes in?
Well, I mean, you could argue you have to, as the dollar is the world reserve currency, all of these commodities come into play. And it's interesting, the president of one of the Asian countries, and it skips me right now, recently came out and said that these countries, because most of the rare earth metals are found in Eurasia, should institute a OPEC-style cartel for rare earth metals. And we're going green, yet most of what we need to make batteries are found in the Eurasian continent. Maybe you have to use dollars to convert to the new currency to buy rare earth metals. I don't think we've thought this through very well, and so I don't know if the dollar loses its reserve status, who's going to want to sell their commodities for dollars? First, you'll have to convert to whatever it is they want to accept.
All right, and as you said, you're joining the dots, data points that seem to be making sense in this narrative that seems to be unfolding. What would be a projected timeline?
You know, I don't know. I think the timing is the hard part, but I will say this. When I started talking about this 3 years ago, it was spinning slowly, and you can see the rapid ascension and the progression of these alliances being made. And just in the last few weeks, we see Saudi Arabia make that admission about China being their most important trade partner. And just last week, the admission that they're willing to accept other currencies for oil. It seems to be accelerating, and since the weaponization of the dollar in 2022, it seems to be spinning much, much faster. I don't know when the switch flips, but sooner than we probably think.
Let's now connect the two parts of de-dollarization and the Great Reset, which is an agenda of the World Economic Forum, best crystallized by the line, "You shall owe nothing and be happy," and their timeline, which of course is 2030. So make the connection for us between de-dollarization and the Great Reset, and also explaining further what the Great Reset is.
Well, that's just what I said. You have asset prices stratospherically high, where price discovery has become impossible because of the distortions in the money supply and in interest rates. And it's created environments where corporations can buy back their shares, where hedge funds can borrow money and plow it into the markets and make huge returns and huge bonuses, but have created distortions in asset prices. So if we see that moment, and when, I tried to factor in what Klaus Schwab said and the possibility of it happening, and it all centers around the weaponization of the dollar wasn't intended. Did they know that by making this unilateral move that it would create a backlash and have a villain to point to, OPEC and Russia and China, and they did it, we didn't, they did it to us. And in that environment where asset prices are very high and the dollar is forsaken, creating that environment of spiked interest rates and an inflationary tsunami of dollars hitting our shore, you see everything collapse. That's when they would come in and roll out their new CBDC. We know that they're already doing it. They're already creating it. The Bank of International Settlements said every country has to have it by 2025. This gives them cover to roll it in. If you look at the Fed, the number 2 person at the Fed is Lael Brainerd. In fact, I thought she was going to actually win the spot for the Fed instead of Powell. They reappointed him, but they made her number 2. She's a modern monetary theorist. She wants to get rid of the commercial banks. She wants to do monetary policy directly to your iPhone. And so it would fit perfectly that this would happen sometime in the next few years anyway, where she could come in and administer a central bank digital currency and from the ashes of what would be a new system. And maybe they come out and issue a gold-backed CBDC. Who knows? The point of it is that if you wanted to create a reset, and I couldn't think of any other way that they could do it, because look, if Powell wanted to create a reset himself, all he would have had to do is jacked up the reserve requirements of the banks and raise interest rates to 20%, just like Paul Volcker did. Bang, it's over, just like that. Instead, they pussyfoot around with 1/4 and 1/2 point interest rates that still render the return on the 10-year Treasury negative. They're not doing anything to fix inflation. So if they really wanted to reset the system, jack up asset prices, and then incentivize the world to find an alternative, weaponize the dollar, and it's done for you with a villain to point to. That's why I put the dots together. Not saying it's going to happen, just simply saying, what's that, Occam's razor? You put everything together and maybe the most plausible, logical explanation is the right one. I hope I'm wrong. My youngest is 15 years old, and I don't want to be right, but I have a feeling, unfortunately, that I am.
Well, on the Occam's razor, you could say that the simplest explanation is just sheer incompetence. Never attribute to malice what can be ascribed to stupidity.
Fair enough. Fair enough. Either they're really, really stupid or they're nefarious.
Yeah. So let's go back to the nefarious angle, because you keep on saying they. Who is the they here?
Who's behind the World Economic Forum? Look, the Federal Reserve, they have to understand that we've dug ourselves into a hole that we can never dig ourselves out of. 1 trillion seconds ago was 31,688 years ago. How do you dig yourself out of 100+ trillion in debt as interest rates rise? You don't, you can't. And so they, being the people that realize the mathematics have gotten too big and we have squeezed as much utility out of a currency, a dying currency, and a Keynesian system as we humanly possibly can. So either we default or inflate. I guess that's really the only 2 options.
Or, as you suggest, burn the whole thing down and start over with a CBDC.
Take the monopoly board and throw it up in the air and start over, new game. And that is the conclusion that I came up with only by connecting these dots and saying, geez.
Why would people go along with it? Why would people that have a lot at stake in the current monetary system not push back on this? The billionaires of the world,
I would
for
argue,
example.
why do you see record withdrawals off the COMEX and the LBMA? Where the LBMA is losing not only its base metals, but all its precious metals, where the COMEX is at the lowest level of inventory in terms of what they have in the registered category, maybe ever close to it, but a massive drawdown. Why are we seeing the central banks buy more gold than at any time in the last 55 years? The people who are closest to the information and have the most money, they're making an exodus quietly. You know, why do we see India import 400 million ounces of silver and the mainstream isn't talking about it? These countries not only are, and players, wealthy, family offices, sovereign wealth funds, they're not just accumulating the metal, they're withdrawing it off of the exchanges.
Silver and gold.
Yes, and where it loses a good deal of its industrial liquidity. If you want to have metal as an investment, you leave it in the COMEX warehouses because you have industrial liquidity. Where Elon Musk says, I'll pay $50 premium for every ounce of silver people want to sell. No, this stuff is being shipped outside the exchanges. It's a very big deal. So to your point, just like in 1933 when gold was confiscated, so much of it, the insiders shipped their gold to the safe deposit boxes by steamship of Switzerland before FDR confiscated gold. Maybe these people who are draining the exchanges in a precipitous way for the last 3 years are front-running what is coming. And so most people in this country, 60% of them or so, are living paycheck to paycheck. They can't even write out a check for $5,000. So they'll be happy to be given stimulus and handouts attached to a new central bank digital currency.
And of course, with the central bank digital currency, which is programmable, you just click and everybody automatically gets what they need.
That's right.
So break down the relationship between the CBDCs. Well, firstly, is it one CBDC representing the BRICS, backed by commodities? And then how do the other countries come in with their versions of CBDCs?
So I think ultimately it will be one. A lot of the countries—
One universal—
Yes, for the CBDC, but right now they're all creating their own. And the Chinese built something called the M Bridge, as in Mary, M Bridge, which is a cross-border payment system for central bank digital currencies. And they did this with United Arab Emirates and one other company, Singapore, I forgot the third country, but it's irrelevant. The point is that this allows cross-border payments sidestepping the SWIFT system in central bank digital currencies. That's the bridge, if you will, to a common currency, but they are all de-dollarizing. They are all moving away from the dollar as sole settlement. Turkey just created their own. Turkey also imported more gold than any country in the world last year, and they just applied for BRICS. So they're all doing it little by little by little. They asked Ernest Hemingway, I believe, how'd you go broke? Little by little, then all at once. And I think that's what's happening.
Slowly, then suddenly.
It's a chess game, and they're moving the pieces, and then they say checkmate. But not until they're all in position. So to your point earlier, question, timing, don't know, but watch how the chess pieces keep.
So how does gold play into this role? If you're backed by commodities, you eliminate the option of printing, which takes away a lot of power for the central banks themselves,
Absolutely.
as they've been able to do for their own countries. But I get that they would need to do this to have legitimacy on the global stage. So they would have to, I guess, sacrifice the ability to print money in order to be seen legitimate on the world stage.
I think they would do it in two ways. They would not allow it to be convertible, because de Gaulle from France proved that convertible currencies convert, and they would fractionalize it. Maybe 20% of every new BRICS currency is pegged to gold or to a commodity that is shown, the veracity and the immutability of which is shown on their distributed ledger. So I don't think it would be a one-to-one pegging. That would still give them the latitude to enact monetary policy. But I think gold would be the anchor. Instead of being able to let them print unabated, it would allow them at least to run monetary policy with some tether to prudence.
So let's assume we've listened to you and we've bought some gold ourselves. Let's assume it's 2030, which is the timeline of the World Economic Forum, which is only 7 years away.
Right.
And we've got central bank digital currencies, which to me are very terrifying because every single transaction can be seen by the government every single time you spend, pay for something, zero privacy, zero anonymity, and perhaps more concerningly, the ability to program when and what you can spend on. But let's assume we're there, but I've listened to Andy and I've bought some gold, and I have my gold bars and gold coins and silver coins safely hidden away. How would I practically be able to use that to my benefit in this world?
Because I think it allows you safety when the system collapses. So, look, if a CBDC rolls out and we all have no choice but to use it, either you use it or you're in a black market. But what it does is it gives you options when others have none. And that's why guys like Jim Rickards and Jim Sinclair say gold will reach crazy levels, 10,000 an ounce, because it'll be pegged to a new system. So not only does it allow you not just to survive, maybe even thrive. Maybe this is why the biggest money in the world is drawing down the supplies of all of these exchanges before it becomes obvious that's their life raft. But it'll be options, and what? Maybe you have to sell it and go into the new CBDC when you decide to do it. We have to play within the game that, the rules that are afforded to us, but I think it gives you options when others have none.
So it would allow me to preserve my wealth,
yes.
And then I would need to convert it, I suppose, into CBDCs in order to function.
Correct, or
in the
barter,
system.
I guess, in theory, but
Or perhaps have a side system where people are dealing
well,
with.
you never know. I guess it depends how the CBDC goes over.
Where do you see something like Bitcoin play into this? Because we've had people who are saying the same narrative, but instead of gold, they have Bitcoin as the answer.
I'm not a Bitcoin basher, but I look at gold as it's lived through 2 world wars, German hyperinflation, the Great Depression, and every pandemic, and it's still immutable wealth. What is the only asset every central bank owns? Gold. And I think that there are some that own Bitcoin, not all of them.
Well, on that point, Canada, correct me if I'm wrong, where we currently are, has sold off the majority of its gold.
And so did the Bank of England. Gordon Brown
Canada
sold most
has
of their gold
practically
at
no
$2.50.
gold.
Stupid. Well, maybe they think it's the gold in the ground. Maybe at that point they nationalize it. I don't know. It makes zero sense. It really does. But, again, that was a trend that was happening for quite some time. I think, if I'm not mistaken, they just bought some gold for the first time. Not mistaken, they just bought some in 2022. Now, I'm not positive on that, but I'm pretty sure I'm right. Point of it is that I think there will come a realization that, interest-bearing assets in this environment isn't the most important thing. And you would think a country like Canada would wise up. They certainly have a lot of it in the ground, some of the most in the world. So maybe that will be their answer to this, is we nationalize the mines and don't allow any of it to leave the country. Don't know. Right. It's a good point.
Yeah,
you bring up a lot of good points.
Thank you. It's a scary world you're painting here, Andy. Again, is there a mastermind? Is this orchestrated by someone, or is this just how things develop and certain players are positioning themselves to take advantage of it?
Are there ever coincidences? I don't know. I would like the scariest part of it all, Michelle, is there a mastermind behind it? If it is, it makes it much more frightening. Because it is orchestrated, it is thought out, it is planned out. And maybe it's a combination of both. Maybe it's circumstances that have come into play that are now being taken advantage of to paint the narrative or a picture that they want. And who is they? I don't know. They are the ones that are pulling the strings. The Federal Reserve, the big money, the World Economic Forum. Maybe they have more clout and more pull than we think. But anyways, I think it might be a combination of both. If I had to really guess, I would say that this is thought out. And it all comes down to the fact that if you don't see the consequences of weaponizing the world reserve currency on a world stage, when 85% of the world is still trading with Russia, then either you're really stupid or you're really, you see what you're doing and you know the outcome.
You're either stupid or arrogant or in on it.
Right.
So with that, is there anything that derails this? Is there anything that happens, anything at all, even if this war escalating into a nuclear crisis?
That would certainly
what derails this track from happening?
maybe the U.S. comes out and beats the BRICS to the punch and issues a gold-backed CBDC right away and shows here's all the gold that we said that we had, the 8,300 metric tons that hasn't been audited since 1956, and here it is. And we now connected it to a central bank digital ledger for everyone to see, and here's our new gold-backed currency. And maybe it allows us to pull ourselves up from our bootstraps and we don't see the world dumping dollars. Maybe. I mean, that certainly would be a step in the right direction. Because I think there comes a time where, where you just keep drinking the watered down milk, and pretty soon it's not milk anymore. And I think we're at that point. So to me, that would be the one place that we could go.
So the U.S. gets ahead of the curve, realizes it needs to do a reset anyway.
Right.
Wipes the slate clean, but comes out with, hey, we have our own CBDC, digital dollar, Fed coin, backed by gold. So use this for the new system, but let's just forget about all that debt.
In conjunction with the International Monetary Fund.
Yeah.
Yeah, which is 150 countries from around the world who all join on board.
But what I'm hearing either way is that a CBDC, digital money, programmable, on the blockchain is inevitable.
And I think it's less to do with the privacy aspect, or certainly the government likes that, and more to do with monetary policy, the way money is created right now by being lent into existence by a commercial bank system that doesn't want to lend money into this economy, where $2 trillion is in the overnight repo market, where the FDIC Systemic Resolution Board publicly in November has a video that's now out saying that, maybe we shouldn't tell the country that there's going to be a run on the banks because of the unintended consequences. And maybe we don't want the public to know that they have more confidence in the banking system than the people in this room do. So when you see all of these things coming together, you have to wonder, where does it lead? I don't know, Michelle, and I don't profess to be a soothsayer or a prophet, just simply looking at all the pieces and saying, if I were over there and I had something as precious as oil, I don't think I'd want to sell it for dollars and treasuries any longer.
On the FDIC comment, we had Lynette Zhang on, who broke down how Dodd-Frank actually allows for bail-ins where the banks can take the money of depositors and bail themselves out, and that's legal, that's there. And that was that meeting that you were talking about, that they just don't want to tell people, even though it's there, people just need to pay attention and watch.
Absolutely.
Well, Andy, you've certainly been paying attention. So what is the recourse of action for an individual?
Do what the big money is doing. Remove counterparty risk and de-dollarize. Mitigate your exposure to the dollar. Look, my friend Rick Rule says it best. If you're not a contrarian, you're going to be a victim. I think this is a time to embrace that and to truly diversify outside the dollar. When people talk about a diversified portfolio, all of it comes back to the dollar. And I think having something outside the system, looking what the biggest money in the world is doing, not just big money, but sophisticated. Because when you're pulling that much money off of COMEX and the LBMA, you're sophisticated too. Follow what they're doing, and I think that's the best thing you can do.
And that is what?
Take possession of metal. Buy gold and silver, take possession of it, look at it as wealth. It's not an investment, it's wealth. And I think if you own enough of it, you'll be wealthy, but I tell people to own metals because it is wealth outside the system. And outside a system that may be coming to its end stages. And that's really, I think, all you can do. Because if interest rates do spike the way that I think, there will be very few places. In fact, as my mentor in many respects, Richard Russell, said, in a very bad bear market, he or she who loses least wins. And I think that's what this is all about, losing least, putting yourself in a position to at least retain what we've worked so hard to accumulate all these years.
Well, Andy, I hope you're wrong.
So do I. So do I.
It's been enlightening, but I certainly hope you're wrong.
Michelle, I appreciate your pushback. You asked some great questions and raised some great points that I'll give a lot of thought to, and they're all valid, but I hope I'm wrong too. I really do. Unfortunately, I think it's growing a little bit more and more and more like some of what I'm saying, if not all, has a chance of happening.
I'm not saying I think you're wrong. I'm just saying I hope you're wrong.
Yeah, I'm right there with you.
All right. Well, Andy, thank you so much. Appreciate it. Thanks for joining us here on Kitco.
Thank you.
Kitco News. Special coverage of the Vancouver Resource Investment Conference is brought to you by First Mining Gold.
The second and third largest bank collapses in U.S. history transpired over the weekend. In one of the most shocking developments to hit the banking sector since the global financial crisis of 2008, Silicon Valley Bank, or SVB, failed on Friday, March 10th after a sudden rush of withdrawals. SVB was well known for its links to the VC and tech industry and had $209 billion in assets under management. It failed and was placed into receivership under the FDIC. On Sunday, the contagion hit New York-based Signature Bank, which also failed after a bank run by spooked investors. With $118 billion of assets under management, Signature is the third largest banking collapse in U.S. history. And in an effort to shore up confidence in the banking system, the Treasury Department, the Federal Reserve, and the Federal Deposit Insurance Corp, or FDIC, stepped in with several measures, including an assurance that all Silicon Valley Bank and Signature clients would be protected and able to access their money. Now, the FDIC typically insures deposits up to $250,000 US. But in an unusual move, regulators announced that all Silicon Valley Bank and Signature customers would have access to their deposits, including those with more than $250,000, which in fact was the vast majority of SVB's domestic deposits. Regulators also unveiled a new way to give banks access to emergency funds, making it easier for banks to borrow from it in a crisis. And President Joe Biden is trying to calm the waters, saying that the U.S. will do whatever is needed to shore up the banks, and that Americans should, quote, rest assured that our banking system is safe. But just how safe is the banking system? What are the ramifications for this, for the economy and the Fed's next moves, and your portfolio? Well, joining me to discuss these rapidly changing developments is Matthew Piepenburg. He is the commercial director of Matterhorn Asset Management and the author of several books, including Gold Matters, Real Solutions to Surreal Risks. Matthew, welcome back to Kitco.
It's great to be back, Michelle. Lots to discuss today.
Lots to discuss. We may be, in fact, on the verge of a surreal risk. So I want to start off by helping our viewers understand what happened here. Just as a recap, Wednesday, March 8th, SVB announces a loss of $1.8 billion from the sale of investment securities. And at the same time, SVB's holding company announced intentions to raise $2.25 billion to shore up the bank's capital. Now, rather than comforting investors and depositors, has had the opposite effect. The surprising announcement spooked the markets, causing a run on the bank. And then within a few hours, we had depositors withdrawing over $42 billion in cash, approximately 25% of total deposits. That left the bank with a negative cash balance approaching $1 billion. And by the end of the day on Thursday, unable to shore up the shortfall overnight, the bank failed, and it was then placed under the FDIC as receiver. All right, that's kind of how we got there, but a lot of the problem with Silicon Valley Bank, Matthew, seems to come down to interest rate risks, which the bank's executives failed to plan for, as the Federal Reserve has obviously been very aggressive with its rate hikes over the last year, and keeping in mind that over 57% of SVB's assets were in marketable securities, comprised mostly of U.S. Treasury securities and mortgage-backed bonds. So, Matthew, explain what happened here.
There's a lot you've hit on. I mean, you've hit the issue of the banking risk, you've hit the issue of securities risk, you've hit the issue of treasury risk and bond risk and Fed policy, and then, of course, now a new banking crisis, which in many ways is very different and very familiar to the 2008 crisis. It's a run, as you said, which is a little bit different than what happened with Bear and Lehman and Citi and even Goldman Sachs, which played both sides of the CDS and MBS trade. I think before you can even get into Silvergate or Silicon Valley Bank or even Signature Bank and maybe even now First Republic, before we get into the details of the analysis of the failure, you have to put it in a broader context. I think I would, at least for 30 or 40 seconds, just because it's important to realize that with so many needles pointed at this red credit balloon, there was something bound to hit that balloon. And in this case, it's now the headline du jour is a new banking crisis, the 2023 version. And I think this is all within the theme of what we've been talking about for the last 12 months, really since, Powell or the Fed began tightening into the greatest credit crisis in history, that something was going to break. There was going to be a credit event in the markets. And I just wrote an article, I think 3 weeks ago in February, about the sovereign bond market, which does tie into SVB and Silvergate and these other banks, that there were 3 moments of total dysfunction in the credit markets just in the last few years. The first one, of course, was the repo crisis in 2019 in September, which was, you cannot underestimate the significance of the leading indicator, what that meant for bonds and banks. That repo crisis basically said that large commercial banks didn't trust each other's collateral, which was U.S. Treasuries, and so the Fed had to come in and be the lender and eventual spender of last resort to help the big banks, the big commercial banks. Then you had the COVID crisis in 2020 in March, where stocks and treasuries and bonds in general fell together. And then just last October, you had the gilt implosion in the UK across the pond. And I wrote 3 weeks ago that there's going to be a fourth uh-oh moment. All these cracks in the ice in the credit markets are going to affect banks, and it's going to be a fourth uh-oh moment. And just, of course, Friday, that fourth uh-oh moment came, and we had another banking crisis. And to your point, this banking crisis, the version 2.0 in 2023, is different than 2008 for a number of reasons. The key word that I agree with, Michelle, is it's a run. It's a run on the bank. That's what happened at Silvergate prior to, Silvergate went into a voluntary liquidation, and it had 6 billion deposits. SVB had over 170 billion, so it was a different headline, a bigger story. But it was a run on the bank, and it's different than what happened. It's important for people to realize it's different than what happened at Bear Stearns or Lehman or these other banks in 2008. What you had in 2008 were these mortgage-backed securities, these toxic, subprime mortgages, which were paraded as AAA credits or investment-grade credits by the rating agencies like Moody's or S&P, was really just horse crap wrapped in tinfoil and sold as diamonds. And that created, people woke up the next morning and realized their bank's asset side of their balance sheet had tanked overnight. There was a loss of faith in the balance sheet. What happened at Silvergate and at SVB and now at these other regional banks is, prior to the headlines, there was a loss of faith in the assets and the collateral and in the I guess the loans of these type of banks. And this has a lot to do with this blender of forces, the tech market, liquidity, banking risk, and the Fed is in front of, behind, above, and beyond all this. The Fed's fingerprints are all over this. But at Silvergate and at SVB and at other regional banks, what happened in Northern California last week was, prior to an asset devaluation, there was a loss of trust in the collateral in the banking system, which had to do with their measurement of risk. And a lot of that has to do with the ripple effects of FTX and Sam Bankman-Fried and the crypto exchanges and crypto-linked accounts, which were at Silvergate, or startup investments, yesterday's unicorns, which are now tomorrow's donkeys, as these growth stocks and tech stocks head towards a mark cliff, which is the first stocks to get hit. And from my conversations with folks in Northern California, the VC environment was already talking to clients and folks about the risks in the collateral and then these tech stocks and these banks. And so what you had was a run. A run is very different because it's a lack of confidence before. And this is directly tied to your point on how these banks have underestimated the power of the Fed and how the Fed is still involved in this, because when there's a run on a bank, it's like any Ponzi scheme. The fastest runners are the first out and the first to win. The slowest runners get burned. It's like a theater, which I wrote about, and it catches on fire. The exit door is the size of a mouse hole. And so as these kind of lack of confidence, these collaterals, these depositors started to take their money out, banks like SVB or Silvergate were forced to sell assets to meet depositor demand. But this is how the Fed comes into the play, Michelle, because the Fed, by raising rates all these months, quarter after quarter, BIP after BIP, 25, 50 here and there throughout 2022, what that does is you raise the rates. Well, you know that bond price and rates are inversely correlated. So the bond prices went down. And so these banks, which were faced with liquidity needs by their depositors, had to sell those short-term notes, those short-term treasuries, not at maturity, but prior to maturity at the worst time at a discount. And then they had to sell off their loans. So they did not have enough liquidity to meet all the demand. And of course, that's when all the trouble started. And as the vicious circle got farther and farther down, there was less and less funds available. And of course, they were sent into receivership. Silvergate went into voluntary liquidation. But you see how the Fed's policies affect everything. Behind every market crisis since 2000 itself, and even prior, there's always a central banker with his head down and his hands behind his back, trying not to say anything, because there really is fingerprints all over this. And again, by raising rates, you're putting pressure on the credit markets. You're putting pressure on the financial markets. I think for so many years or so many months, we're talking about the Fed, but even the banks can't fight the Fed. We talk about how the QT policy affects, the balance sheet of the Fed's balance sheet by 300 billion, from 9 trillion down 300 billion, or affects CPI inflation, but it also affects these banks. It's just another one of those needles that hit the balloon. And so, yeah, by having to force sale treasuries at a discount and loans, it put these banks out to pasture faster than they should have. And the loss of faith in those banks, not a coincidence that it started in a tech sector in Northern California, because there's a loss of faith in tech too. And so it's all connected, Michelle.
Right, and as you say, the Fed raising rates impacted what ordinarily would be safe collateral. I mean, 57% of SVB's assets were marketable securities, mostly U.S. Treasuries. And then we had this rapid rise of interest rates over the past year, and the market value of the bonds fell substantially. And of course, that doesn't matter if a bank is able to hold the bonds until maturity, when they'll be repaid at par. But if a bank is suddenly forced to sell them, as they were, to generate liquidity to meet the demands of depositors, then the bank was forced to sell them at a loss because the Fed was hiking rates there. Now, obviously, contagion is the big concern. And then we had the Fed on Sunday announcing that it would make additional funding available through a new bank term funding program, which would offer loans of up to 1 year to depository institutions backed by treasuries and other assets that these institutions hold, so that people wouldn't have to take a haircut on previous treasuries. So break down those measures that regulators have taken.
Yeah, it's important because I think, the Fed's biggest fear isn't even a correction or a 20% market correction or highs and lows or peaks and valleys. The Fed's biggest fear is contagion effect, whether it's in the banking sector, whether it's any particular risk asset sector. And I think in this particular case, their biggest fear is a spread of, I hate to use the word, viral fear within the regional banks that then spreads to the commercial banks. And so they've come up with some, over the weekend, the headlines change every 10 minutes, but they came up with some emergency measures. There is, as you said, the FDIC does insure bank deposits up to $250,000. But in the case of Silicon Valley Bank, 95.5% of those assets weren't covered by the FDIC. So then over the weekend, since Friday, they thought, well, the FDIC has this thing called the systemic risk exemption, where they'll go above their $250,000 cap. But even that was just a dent, given the massive amount of liquidity the bank needed. And then, of course, there was the infamous bank term funding program, the BTFP, which has eerie reminiscence of the TARP, or the Troubled Asset Relief Program, this new idea that $25 billion to come from the BTFP, which is really just a portion of the $38 billion at the U.S. Treasury's, it's called their Exchange Stabilization Fund. It's $25 billion of that $38 billion. There are many who would argue, and I would argue, that's probably not going to be enough. And then so that really is a Band-Aid on an open knife wound. And the question is, will $25 billion be enough to stave the contagion and stop the fears? I think it's questionable. What I'm seeing now is it's a blender of a lot of forces, because you have the psychological forces. The fear of missing out can also be the fear of getting burned. And depositors are wondering, do they trust their banks? And that's why you're seeing sell-offs at like First Republic or PacWest or even Wells Fargo or B of A today. You're seeing this massive bloodletting right now in the banking sector, the financial sector. But other things are happening too that I think are scaring rather than comforting these depositors and these investors. And you've got the federal home loan banks, which are kind of the safe banks, and they're selling treasuries right now at a discount to raise $60 billion. When you see that happening, does that inspire confidence? Or does that inspire fear? Why are the federal home loan banks raising $60 billion? And when you see Joseph Biden saying everything's fine, I think it's a quote by Bertrand Russell, whenever you see a president say everything's fine, you know things are not fine. So there's this, as we talked about last time, when the math gets bad, you need to have really comforting words. And so I think this BTFP program and this exemption, the FDIC systemic risk exemption, I think it's not going to be enough to stave off the kind of fear and the lack of trust right now in these regional banks. And I also would remind that the FDIC, even before this crisis hit the headlines last week, came out with a report weeks ago about regional banks. And these regional banks are sitting on over $600 billion in unrealized losses in assets held to maturity and ready for sale. So there was already kind of a headline, if you're looking deep enough under the hood, to see that there are a lot of unrealized losses on these balance sheets. And then to force these banks to meet liquidity by selling their treasuries at a discount is a perfect storm. So to answer your question, Michelle, it's to be determined. I think we ain't seen nothing yet. As I've said in my last article that came out today, I think the risk could be worse. And of course, we don't know, but it's certainly not off to a good start right now.
Yeah, it's not looking very positive. And as you say, when politicians assure us that there's nothing to worry about, that's usually an indication that there is something to worry about. And you know, Matthew, on the psychological impact of, to borrow a term from crypto, the FUD, the fear, uncertainty, and doubt, with social media, with a 24/7 news cycle, that kind of uncertainty and fear spreads even faster than, say, in previous banking crises, right? Because if a lot of it is psychological and if a lot of it stems from bank runs and people saying, well, maybe my bank isn't safe because this has happened, when you've got this 24/7 news cycle and when you've got all of social media pining in on this, I mean, that surely exacerbates and accelerates this idea of losing faith and losing confidence. So I know it's still early to determine, but just how bad could this contagion get?
Well, I mean, depending on who you read and who you listen to, and of course, people always think of macro thinkers as doom and gloom. I think it's just being mathematical financial realists. The question is, there hasn't been a lot of analysis right now on what's happening at the regional banks. As to your point, I don't think the average person right now in line in Brentwood, California at First Republic is there because they looked at an FDIC report on $600 billion in unrealized losses. They're there, to your point, because they're scared, the fear of being burned, right? And they're scared because it's spreading in the headlines, mainstream and offstream and other platforms. It's just a fear, and they've lost a lot of faith. This idea of losing faith is hard to quantify. I think there's a loss of faith in our government, in our finance, in our central banks, in our parties. So all of this kind of is gelling at the same time, and we're having this headline to exacerbate or add gasoline to that fire. But I think the psychological thing is the most important fear. There are some who think you're going to need trillions to back out these, to support these regional banks. And again, when you see fear spread, it's very hard to know under each balance sheet. We haven't done a lot of analysis yet. I haven't seen good analysis of all the regional banks' balance sheets. But when you see the Federal Home Loan, banks selling treasuries at a discount just to make their clients confident, I think that actually creates more fear. Why are you selling treasuries if everything's fine? Why are you worried about liquidity if you're fine, if your balance sheets are fine? And even at Credit Suisse, which is not part of the headlines right now, before SVP imploded and before Silvergate went into liquidation and before these other banks are now making the headlines, Credit Suisse was already gasping for air here in Switzerland, gasping for air. They wouldn't even show their cash flow statements. And their stock was down 60% last week. So it's a zombie bank. And I think when you have those headlines at Credit Suisse, you have the memory of Bear Stearns, and you have the memory of TARP, and you have the memory of bailing out bad banks. And now you see Sam Bankman-Fried ripple effects in Northern California affecting these banks. There's just a real what the hell kind of attitude. What's really going on? And again, will 25 billion or 38 billion or 500 billion or 800 billion or 1 trillion restore confidence? If it does, it will be at the expense of the Treasury and the US dollar. So again, we're in a situation where the average investor probably isn't thinking larger macro themes. They just don't trust. And that's fine. That's a very powerful thing. It's hard to talk about as a pundit to measure and quantify trust. But we can talk about what the long-term ramifications are going to be for the Treasury market and for the US dollar and the invisible tax, which is inflation. Because remember, whatever bank we're looking at, whether it's a major bank like JP Morgan, which has trillions in depositor funds, or SVB, which failed with 170 billion of depositor funds, banks, when the cost of funding their operations is less than the kind of value of the earnings of their assets, they have a problem. And because the Fed has raised rates so high, bond prices have fallen so high, the yields on bonds are higher return than the depositor rate you're going to get in your checking or savings account. So when the yield on a 10-year or a longer term bond is higher than your checking account, why would you want to be a depositor? This then forces banks to enhance their deposit rate so they can compete. But even when they enhance that deposit rate, again, it's still a negative return when you have inflation. So all these forces gel together. And if banks have to raise their deposit rates, that's going to affect their balance sheets. That's going to affect their margins. And then they're going to have to issue more shares, which dilutes their shares. So it's a vicious circle, all coming back to rising rates, an artificial policy pursued by Powell some time ago to look good in front of inflation. and yet ignore all the consequences in all the markets, including now the banking sector.
Right. Well, as you say, a number of factors have been feeding into this monster, and it's still to be determined just how frightening it'll get. Back to Powell. I mean, we've been saying that the Fed will hike until it breaks something, right? So is this the thing now that the Fed has broken? Is this now what is going to force the Fed to stop raising rates, or at the very least slow down?
Well, the Fed has broken a lot of things already, and this is certainly, I think, the biggest break to make headlines in over 16 to 17 months. I mean, even Goldman Sachs, which was the hawkish bank on Wall Street and so proud to be fighting inflation, which I think was a fiction, but to be fighting inflation and really supporting this QT policy without any regard for the ripple effects and the collateral damage. We already saw the stock and bond markets last year have their worst nominal return, stocks and bonds, correlated since 1871. So that's already pain. We haven't really solved the inflation problem. However it's measured, it's still a problem. It's still persistent. Remember, Powell was the same one who told us not long ago that this was transitory. We really trust Powell. But to your larger question, I mean, even Goldman Sachs now says, I don't expect a rate hike in March 22nd this month. We don't see it. Jeffrey Gundlach don't even count on it. The question is, will a pause in rate hikes be followed by a pivot to more QE? And already the joke on Wall Street, already in less than 72 hours, this BTFP acronym, which is like TARP 2.0, Wall Street's just calling it buy the freaking pivot, because what they're expecting is Powell's gonna have no choice now because he has broken something. We'll see if this BTFP program will put enough glue on the egg to fix the broken egg. If it isn't, he's going to not only have to pause in March, he's probably going to have to pivot like he did. We did in 2018. We were raising rates all through 2018. We had that Christmas massacre. 2019, there was a pause. 2020 was unlimited QE. The question is that going to be credible anymore? Can we narrate that from DC to bail out banks at $1 trillion or $2 trillion level again without just creating pitchforks in the streets? No one wants to see bad banks, good banks, questionable banks bailed out again. And the only way to bail them out, of course, is through mouse click money, which is inherently inflationary. So there are so many forces at play here, Michelle.
And it's mouse click money that got us into the situation in the first place, this unprecedented monetary and fiscal stimulus that we've been seeing, excessive spending from government. And as we said, a lot of stimulus to follow the COVID crisis in order to get the economy bouncing back again. And then we had Powell assuring us that inflation was transitory. And we were calling him out for that then. But now we have a situation where it's clearly not transitory. And just last week, we had Powell saying that he needs to go harder and faster and for longer, that he planned to be more aggressive and speed up rate hikes to fight inflation. Can't do this now if everyone is assuming, including you, that there's going to be a pause in March. What does this mean for inflation then?
Well, again, I think this is maybe controversial or less so. I've written about this, spoken about this many times. My strong belief is Powell was never going to beat inflation with rising rates. First of all, even if you assume that the CPI is a legitimate scale, which we all know it isn't, but even if you assume 6.1%, 6.5% CPI is accurate, he's not going to beat that unless he raises rates to 7%, which the markets can't handle. I never believed for a second that Powell was fighting inflation by raising rates. I think he optically, because the Fed is a political instrument, it is not independent, it is part of politics, it's probably more powerful than the White House. But Powell's plan was not to fight inflation. He had to say that. He had to put up a valiant effort. He wanted to be Volcker 2.0. He wanted not to go down as Arthur Burns. But the real issue for Powell was, in the case of another recession, he needs some ammunition, something to lower, something to reduce, or something to pivot when we are really facing the wall, when the blindfold and the cigarettes are on and we're really in trouble. Will he have enough rate hikes that he can reduce in a time of a real crisis? I never thought he was trying to raise rates to fight inflation, because every debt-soaked nation throughout history, pre or post-capitalism, pre or post-democracy, when their back's against the debt wall, they need negative rates. They need inflation to be higher than interest rates. They need to inflate away their debt. And that was Powell's real mission all along. He was never going to beat inflation. Wonderfully, he could misreport inflation, but it was never about inflation to me.
Okay, so what does that mean? Does this mean that we need to get used to a new normal of inflation at what, 6%? Some have even come on this show and said expect inflation to hit a new normal of 8 to 10%.
Well, I think if we use the Volcker scale of 1980s, we're already at 12 to 13%. We feel that on the streets. We feel that. That invisible tax is hurting us all. It's really hurting the middle class. Even the Fed is now looking to maybe have a target rate of 4%. You have to recognize all the time, this is not conspiracy theory. The CPI scale is disingenuous. It's not even an accurate measure. But I think we certainly can expect more inflation. If we have a recession, that's definitely disinflationary. But the real definition of inflation from Morton Friedman to my business school books is money supply. And though we've been galvanically happy about reporting a 500 billion reduction in M2 money supply, that's so out of context because we've had a 14 trillion rise in the M2 money supply since the last 15 years, and even reducing the Fed balance sheet by 2% last year. What did that give us? Not much. We didn't really beat inflation, and we caused the markets to crash, to historic levels combined, stock and bond. The risk parity portfolio was a joke last year. So I don't think we've beaten inflation. I don't think our aim is to beat inflation. I think inflation is here to stay. We need inflation in a debased currency, not a relatively strong currency, but a debased inherent currency to beat inflation. So I don't see inflation going away. I see disinflationary forces, but I don't see it going away. I think inflation is necessary to inflate our way out of debt. And I think when it comes down to choosing between the markets and the dollar and the currencies are always the last bubble to bust. We had a subprime crisis, we had a real estate crisis, we had a NASDAQ crisis, we had a tech crisis, stock and bond crisis. The last bubble to burst will be the currency. And when push comes to shove, and when we're in a recession, whether it's officially recognized or not, every nation throughout history has to weaken its currency and reduce rates, because you can't beat a recession with rising rates and a strong dollar. So they're gonna have to use this crisis as a pretext to manufacture more mouse-click currency, to debase the inherent purchasing power of that currency and inflate away their debt. And of course, blame this on a weird tech reaction, Putin, of course, COVID before, global warming, coal plants, whatever they need. They'll never blame it on the actual patient zero of this whole thing, which was an addiction post-2008 to money on demand. It's not tied to an actual service or an actual asset, and it's just debased currency. That's how I see it. That's inflation to me.
And that is probably why we've seen gold rising on this news. We had gold rallying today. It's up around 3% at the time of this interview, back over 1900. So what is the impact on the gold market here?
Well, again, there's so many forces affecting the gold market, and we can talk about that too long, and I could get too long into it. I think the main thing I think about gold, and I was always a stock bond freak. That's how I came up until I had mentors like Egon, private mentors like Egon, who taught me about the real value of money. And now instead of being a mentor, he's a colleague. But remember, decades ago, folks like Egon, he wasn't alone, but he was one of the pioneers who had made a lot of money on the public markets in a FTSE 100 company, recognized that it's the currency's purchasing power that is the real issue, given these debt cycles. When he was investing in gold, it was $200, $300. It's gone to $400, $700, $800, $1,100, $1,800, $2,000. It's always a subject of debate. It's just that silly little bar that stares at you from the ground and does nothing, that barbarous relic. And I would argue, and I've learned, and I have no doubt in my mind, now that all these currencies in circulation, whether they're mouse click printed, levered, hypothecated, buried in the repo markets, buried in the euro-dollar markets, buried in the derivative markets, all these currencies that are spinning around and not sitting in the ground are losing value, whereas gold just sits there and it doesn't get stronger, it's just currencies get weaker. And yes, there's the COMEX trade. Yes, there's the LBMA banks. Yes, there's manipulation of the spot price or the paper price of gold. All those things are true, but at the end of the day, would you rather want your fiat or digital joke currency at bank X, Y, or Z, or would you rather want an actual bar of a finite asset with unlimited duration that you own in a private vault as opposed to a beleaguered bank? For me, Egon was right 20 years ago, and he'll be right again tomorrow. It's just, as Rick Rule said, I think it was brilliant. He was talking about silver, but I think it's a true thing. When you step outside of all the smoke and noise, all the gun smoke, all the debates, QT, QE, inflation, deflation, markets, sectors, it's simply too much debt and too much debased currency, and precious metals reward infrequently but extravagantly. For the patient investor who's not a speculator, who understands currency risk, it's not a gold bug analogy, it's not a gold bug narrative, it's not a gold bug apology, it's common sense. And so it's really not important to me where the dollar is vis-a-vis gold, or where the yen or the pound or the euro or the peso, because these are all worthless currencies to measure by. It's the gram, it's the ounce, it's the kilo. I'll say it 1,000 times. The reason gold was hurt against the dollar was temporarily strong in 2022. And I said throughout the year, that's temporary, because they can't sustain a strong dollar policy. And we're seeing that crack right now in the banking crisis. I really do believe if they don't contain this psychological fear, they're going to have to resort to a pivot at some point. A pause, then a pivot, which is inherently debasing the dollar. And the dollar will get weaker because recession will demand it.
Okay, so patience and infrequently but extravagantly is what the gold investor can anticipate here. But Matthew, we have, as I say, gold rallying a little bit now. When do you think the sentiment reaches the market in terms of seeing this really come up in the gold price? When do you think this fear, this lack of faith, this understanding of what you're saying really starts to hit home, and we have the price of gold, for starters, break 2,000?
Yeah, even last year, even Goldman's commodity advisor was saying gold hit 2,500 last year because you had inflation, you had global geopolitical, you had war. Why wasn't gold ripping last year? Well, again, that was because of the strong dollar and Powell's deliberate policy, artificial policy to make the dollar so strong. And that was a real headwind for gold. And of course, all the other COMEX mechanizations. I think when you're talking about gold, there's a lot of forces. I think ultimately, and it's a vague, amorphous, kind of Pollyannish answer, faith is very hard to quantify, and I've written about this many times. When faith in the system, not just faith in the currency, but the systems, dilutes and weans, then you finally see a recognition of gold's role and value. I think for a long time, the argument against gold was the inflation was just temporary. Then that disappeared. Well, no, now it's the strong dollar, so gold was still held back. Well, now that strong dollar narrative is about to shift, in my opinion. It's not sustainable. That was just math. That wasn't even a view. It was just math. You can't have a strong dollar into a recession. At some point, something was going to break, and the mouse click money was going to come. So the temporary inflation narrative held back gold for a while. Then it was a strong narrative that held back gold. I think both those narratives have no more legs or less legs. And I think when people start to really question the talking points that worked against gold in these otherwise profoundly important environment for gold, then gold will start to rip. It's a mug's game, as Egon says, to predict the quarter, the month, or the year. If it's next year or next morning, it's irrelevant to me. I have no doubt that the dollar in my pocket, if I put it there and come back in 2 years, it'll be worth a lot less than the gram of gold I have in my pocket, or the ounce, or the kilo in the vault. And so I think all of our clients of all very high income levels, but of all sophistication levels, understood this. It was never about selling at a high or selling at a low. It was just hold. It was hold, because they trusted that simple piece of metal, monetary metal, a lot more than that paper or digital currency at Bank X, Y, or Z.
But I still like for you to give me an actual target that you think is realistic for gold this year. Is it safe to say that you think gold is going to hit a new all-time high this year?
I think it is. I think the only thing, I can't see what could stop it. I can't see how a stronger dollar will stop it this year. I don't know how the dollar could go stronger. I don't know how Powell, after what just happened last weekend and this week and today, how Powell can continue to really be hawkish and go 25 to 50 bips every quarter. I don't know how it can work. It's certainly, if he wins the war on inflation, it's going to be overlooking a rubble of the bond and stock markets and of the economy. It's Pyrrhic victory. Something has to stop him. I also think Yellen, unlike Powell, knows that demand for U.S. Treasuries has sank because rising rates didn't attract more investors. It forced a sell-off of U.S. Treasuries globally. It was the opposite effect. Like the sanctions, it totally backfired, the strong dollar policy, because countries from third world economies to Japan had to sell their reserves of treasuries to get liquidity to booster up their own economies and their own currencies and their own markets. So the strong dollar, high rate policy backfired. And the U.S. Treasury market was the unloved belle at the ball. No one wanted to dance with her anymore. And so Yellen, ironically, this matriarch of toxic money, is stepping back up. Former Fed chair, now Secretary of the Treasury, that's ironic, is now really calling for more liquidity. Powell was trying to puff his chest with this strong dollar policy and this high rate policy, but it was killing the Treasury market. It backfired. We were not seeing more natural demand for Treasuries. We were seeing sell-offs in Treasuries. And the U.S. lives off its IOUs. If no one else is buying Uncle Sam's U.S. Treasuries, who's going to buy it but the central bank? How are they going to buy it? By printing money, which is going to be inherently inflationary and debasing of that greenback.
All right, but we.
So the target that could be 24, 25, 2600. I don't know if it'll be this quarter next. The only thing holding it back was the strong dollar and, of course, the LBMA market, which we talked about in our last conversation, even that Moscow World Exchange, Moscow World Standards. There's a movement of thinking of fair pricing and de-dollarizations. They're all tied to the sins of the Fed, which we can get into, but they're all tied.
Of course, and there are a whole lot of geopolitical developments happening at the same time. This is not happening in isolation. There are big crises on the global stage, which I want to get into as well. But just to recap here, you're seeing a pause in March and then a potential pivot by when? Last time we spoke, you said by September. Do you see a pivot as in starting to cut rates sooner, or are you sticking to September?
I mean, sticking to a particular month. I definitely see a pause in March.
Yeah.
And they'd have to have a miracle. I can't imagine them hiking after this crisis. I see a pause. The question will be, do they contain the emotional, psychological fear more than just the balance sheet fear? They're all related. I don't know if they'll be able to contain that. We'll be watching that. If they don't, there's going to be, just like there was in early 2019, a move from a pause to a pivot. And then, when the COVID crisis was unlimited, we'll just see how big the crises go. But I definitely see a pause in March and probably an eventual pivot by the end of the year if this contagion spreads. And we'll see, because de-dollarization, the U.S. Treasury market, the need to print more money to buy our own debt is going to become insurmountable probably by the year end. There's so many converging roads here.
And it's interesting because, you have markets rallying on expectations of a Fed slowdown, but it seems like Wall Street is being too dismissive of the bigger concern to the broader system and the bigger concern of the impact of inflation and recession. How do you explain this rally? Is it just like very short-term thinking?
It's a sad analogy. It's addiction. When you're addicted to a certain toxic chemical or toxic inebriator or upper, you think it's always going to help you. And I think the good news is bad news motif is back. Well, this banking crisis is going to force the Fed to pivot to QE. That means more instant liquidity. That means a jump in risk assets. In fact, traditionally, the move to QE can be followed by a major sell-off, because now more and more investors are saying this is not going to work. The question is, will another QE actually work? Even if it does, if the markets go up 10, 15%, inflation is going to eat away at that. You're running uphill in roller skates now because there's been too much money printing. There's been too much support. There's been too much addiction. And these addicts, including investors, not just central bankers, investors are drunk on the notion that QE will save them. As if, like we joked last time, so many martinis, at some point, they lose their taste, their flavor, and their high, and you're just sick.
I'm smiling at the metaphors, Matthew, because you have the most colorful collection of metaphors, and I'm trying to remember them to use them in my own conversation. Running up the hill in roller skates, I like that one. Again, nothing positive, but the metaphors are certainly very inspiring. Look, Matthew, we've also got this in the context of the debt ceiling, right? I mean, the U.S. has already reached its debt ceiling limit, which they'll have to raise by June, or the U.S. will default. How does this potential fallout to the economy from this crisis now impact the debt ceiling crisis?
Well, nobody's going to be surprised. That's not a glass ceiling. It's a paper mache ceiling. It'll be busted. They'll go right above it. They'll have no choice. They'll fight about it. They'll each get their 30 seconds of fame. Each politician, left or right, will show how strong they are and how worried they are. And then they'll vote on a debt ceiling increase, and they'll increase their deficits. And to pay for those deficits, we're going to have to sell more U.S. Treasuries. There's going to be less demand for those U.S. Treasuries if the dollar stays strong. So they're going to have to mouse click money to pay for them and monetize their own debt. So all of these things come back to forcing Powell through. Despite all the politics and optics of 2022, all of these things are going to force the reality to hit him that no one else is going to buy our treasuries if you keep raising rates like this. And then you have the debt ceiling theme, and then you have the de-dollarization theme and the movement away into other cash settlements. And of course, you have the petrodollar disaster. All these things that happened in 2022, they come home to roost, just like all the layoffs that, in the employment numbers and in jobs reports, they're leading and lagging. The layoffs get reported later. What you saw at Google, Facebook, Amazon, and the business around the corner, all these layoffs are now starting to show up, just like all the consequences of all this deficit spending and debt ceiling extensions. It's easy to politically sign a document to raise the debt ceiling. What they don't know is how to manufacture GDP, bring jobs to America, keep people employed in real jobs, high-paying jobs, It solved the problem by having austerity, admitting like you would in a family conversation that we're over our skis in debt, honey. We have to tighten our belts and we have to spend less and earn more and bring in real solutions and maybe not take a vacation for the next 5 years because we can't. American investors and a lot of American addicts in this market don't want to imagine a year without a vacation or a Super Bowl party or a jet ski, so to speak, metaphorically. They can't imagine this party is going to end. And it's going to end painfully for, sadly, mostly the middle class, who are already suffering under the invisible tax of inflation, who don't have hundreds of thousands at risk in the markets that they can afford to lose. And many of those people in Silicon Valley, even after taking a hit and being bailed out, they can afford to lose a lot of that money. But I think it's going to be really hard for the average American, and it's sad, but it's always been that way. They're always the fodder. They're always the plankton of the big Wall Street whales. And so that's going to be frustrating. That's going to lead to possible social unrest when it just seems unfair. Another bailout at a large scale will be politically intolerable for the most Americans. I think what happened during the COVID crisis was just under 2008 bailout behind the guise of a humanitarian bailout. But as all that money was being sent into the checks and the stimmy checks, there was a massive bailout of the bond market behind the scenes in the name of COVID. But again, deficits have to be paid somehow. It's not through GDP or tax receipts. It's going to be through mouse click money.
When you say social unrest, what exactly do you mean by that?
Again, that's very hard to quantify. You know, January 6th is a classic example of social unrest, disgust. Maybe that was more than just about a failed election or a controversial election, whatever your take is on that, however crazy or quacky that is. The real problem is always financial. When people are broke, that's when things become political and that's when things become partisan. But the real issue, I used to always think it was philosophical, human nature, politics, but it's really basically about money. And when people are struggling and they're worried about mortgages, tuitions, and getting through the week or having a job next year, then they get very political. Then they get very emotional. Then they get angry. And that's the biggest fear. That's when governments with their backs against the debt wall become more controlling. That's throughout history. They become more controlling under the guise of something wonderfully happy, universal, like central bank digital currency. Great for cash settlements, super efficient. Really what it's about is keeping that guy with the pitchfork from having money, or a trucker in Canada from having access to funds before he can get to the capital. And I think that's a cynical view, but it's historically accurate throughout time. It's always debt crisis, financial crisis, currency crisis, political extreme, left or right control.
Well, let's talk about that, seeing as we've touched on the idea of CBDC, central bank digital currencies, which, to remind our viewers, is essentially fiat currency, which is programmable and on the blockchain and digital, and the government can see every single transaction that you make and can also program the currency potentially to work or not work in certain circumstances. Now, there is a theory out there, and you and I talked about it a little bit offline, that perhaps this is, if not a pretext, then a way that the system comes crashing down, and this is what leads to CBDCs being ushered in. Explain that.
You know, again, we've talked a lot about the yin and the yang of central bank digital currency. You get the official narrative, which is all warm and fuzzy, and it's true. It's a much more efficient payment system. It's a much more efficient settlement system, and that's how the Fed and the IMF and the BIS have promulgated it and promoted it. And what they're not telling you is it's an incredibly good surveillance system, and you can turn off your assets, you know, and it's a prelude to a cashless society. It's a way to attack Bitcoin. It's all kinds of other darker motives there, but that will not come out by the Fed or by Powell. And Powell promised that it would not replace cash and it would not affect privacy rights. And that may be true under Powell, but who knows what it's going to be 5 minutes from now, 5 years from now, under a different regime, under different circumstances. They can move the goalposts whenever circumstances or national security warrant it, as you saw Trudeau do in Canada. They can create a national emergency, which is the easiest thing, national security. It's the panacea for whatever they want to do. And so the darker side of central bank digital currency, it's an invisible way to not only survey how you spend, to control how you spend, or even shut off how you spend. I'm not saying we're there yet. The question is, was this crisis engineered to grease the wheels for CBDC? I doubt it. I don't think Powell's that draconian and dark. There's some who might think that. But it's certainly an opportunity. It's an opportunity to push the narration that, well, boy, if we had central bank digital currency, we could certainly fund banks like SVB and Silvergate, et cetera, faster. This would make the payment systems more efficient. Crises like Silicon Valley Bank tell us why we need central bank digital currency, and we're going to do this. Be very careful when a politician, left or right, tells you they have an instant solution that's a fiat solution that also involves technology that controls what you do, how you spend, and can turn it on and off. I don't think anyone in their right mind thinks that's a good thing.
Yeah, and as you say, if this does create much further chaos and it does start to affect the middle class and people aren't able to afford the things that they used to be able to afford, if the government comes in and says, okay, well, we'll give you this stimulus, this injection via the form of a CBDC, just download this digital wallet and we'll instantly drop this money. If people are really hurting and suffering with inflation, they'll be much more likely to cooperate with that.
Well, better sheep than pitchforks, right? And I'm being cynical, and I understand that. That's what I would do if I were a dark force and I wanted to control more and I didn't want to take accountability for my debt sins or take accountability for any of my mistakes and blame it all on some third party or extraneous force like a virus or an Eastern bad guy or global warming or whatever they come up with in Davos to blame what is simply a debt crisis caused by offshoring jobs to China. The American dream is made in China, and then paying for the mismatch with money printed out of nowhere. That's the real problem. Rather than say that, admit that, confess that, and move forward with austerity and manufacturing and actual job growth, they're going to say it's something else. We're going to give you a little money. We're going to give you a little carrot. But what they won't see is this invisible paddle behind your butt that they're going to spank you with the rest of your life. And you saw that in Canada. I mean, look what happened. Again, it doesn't matter what side you take on the COVID debate or whether you're pro-Trudeau or anti-Trudeau. You saw how whatever that movement was, whether you think they're all neo-Nazi flat earthers with tinfoil hats or actually just frustrated people who didn't want to be told what to do with their bodies and time, whether you agree with that or not, they had the right to say something. But they didn't have the right, I think, for the government to shut them down financially with that kind of control. And that was a small sliver of what could happen at a much larger scale. I mean, this is what Davos talks about. This is what Klaus Schwab likes. He likes Chinese leadership. He actually thinks Xi is one of his favorite people. He brought him to speak at Davos. How can you say in your right mind, whatever you think of the Chinese economy, and even Trudeau has admired the control that totalitarians have. He said it publicly. How can you want to give up your freedom for a check or for a little stimmy in the name of payment efficiencies and central bank digital currency? Again, I want to get off on a huge tangent on CBDC. It is a wolf in sheep's clothing. Absolutely.
Yeah, that's a whole other conversation which we've had on this show and will continue to have. But you mentioned China's President Xi Jinping, who has now entered his historic third term, by the way. So I quickly want to touch on some of the geopolitical aspects, because while this carnage is going on in the United States, obviously we've got the Russian war with Ukraine still ongoing and the U.S. continuing to fund that. We've got President Xi Jinping traveling to Moscow, reportedly, as soon as next week. Last time you and I talked, you mentioned the growing trend of de-dollarization, the potential rise of a new BRICS reserve currency, potentially backed by gold and other commodities. We've had some developments there. We know that the BRICS are meeting in Durban, South Africa this August. One of the items on the agenda is this new BRICS reserve currency. Just last week, we had China foster the restart of diplomatic relations between Iran and Saudi Arabia. Arch foes in the region are now cooperating thanks to an agreement brokered by China, which positions China, of course, as a power player. And we also know that Saudi Arabia and Iran have both applied to BRICS membership. So you put all of these sort of developments together. How far do you think we are from the launch of this BRICS potential reserve currency, potentially backed by commodities?
In a lot of ways, Michelle, you answered the question with the question. All the facts you've just outlined are just showing an inevitable growing trend that we talked about last summer. I mean, this was Grant Williams said, and I agreed with him completely in February of 2022. That moment with the sanctions, which were going to backfire, and they did, clearly, objectively, regardless of your political views or your views on the war, those sanctions were an absolute disaster. And what that did was force China and Russia to do what they've been waiting years to do, which is begin to de-dollarize. Regardless of your politics, that was always their play. They're chess players, not checkers players. They were long-term players. And this is the slow consequence of it. I said the process of de-dollarization would not be overnight. But Grant Williams was right. He said February of 2022 was as big a watershed in global markets and currency markets as August of 1971 when Nixon closed the gold window. It was an irrevocable change in the way that the dollar, it won't lose its world reserve status anytime soon, but it is already losing its hegemony in the petrodollar. Like you said, India meeting with Russia, China meeting with Saudi Arabia, buying oil outside of the US dollar is now not unusual anymore. It's a growing trend. The petrodollar was synthetic demand to keep the dollar strong. That's going away. Demand for US treasuries is disappearing. That's going away. All the things that kept the dollar strong. There are some who say that the derivative markets and the Eurodollar markets and the US treasury markets that need to be used to collateralize those options trades will keep the dollar forever strong. I think they're looking at that in a vacuum. They're ignoring the countries that for years who have been forced to pay dollar-denominated debt. As the dollar got stronger and rates got stronger, they were tired of being slaves to a bully U.S. currency. And when you raise the price of the dollar and you raise rates and trillions of dollars are owed throughout the world in that currency, that's going to make countries not want to pay it back or look for alternative arrangements, alternative settlements, and alternative currencies. And certainly when you freeze the U.S. treasuries of a country like Russia, when you weaponize the world reserve currency, friends and enemies alike are going to look at you and your currency differently forever. They're never going to trust it. That genie never goes back in the bottle. So the process that we talked about last summer is only continuing, and it's only getting stronger. It is not overnight, but it's going to continue. And the dollar will become less and less significant, no matter what Powell says or what Biden can imagine to mutter in front of his talking points. Whatever they say doesn't change the reality of geopolitics, the reality of debt, and the slow flow from west to east. I'm not excited to see Russia and China as global leaders, but it's happening. I'm not in favor of Putin or China. I'm just saying we're going to reap the sins of years of living beyond our means and trying to pay for that with money we literally print out of nowhere or mouse click out of nowhere. It was a laughable fantasy, which was fun while it lasted. And the fun is coming to an end slowly, and it's happening right now this weekend and this week. And it's just another example of another crisis. Again, we've had 3 other prior crises in the credit markets, from the repo markets to the gilt implosion, to what happened in March of 2020. Now we have a banking crisis in March of 2023. These are just more and more sickening symptoms of a larger disease, which I really think began with Greenspan, patient zero of instant liquidity to stay elected, to stay powerful, to stay popular, and to keep politicians in office by buying every recession off with money they don't own and they print out of nowhere. It's a disaster.
Yeah, and of course this current disaster accelerates all of the trends that you have been pointing to. Matthew, something to end on a more positive, forward-thinking, proactive note. Throw in a colorful metaphor in here, if you will. What can investors do if these trends are accelerating and a scenario which, again, you're not rooting for, I'm not rooting for, but seems like it is developing, is in fact going to happen? What is the way to protect yourself as an investor?
I mean, your audience is, I think, way ahead of the curve already. I'm sure from all the different interviews, and I've said this again, not talking about gold, because I wear 2 biographies. I was a hedge fund manager, and now I'm in Switzerland dealing with physical precious metals for a reason, the evolution. But if I were talking to investors, as I say to my own daughter, who's at Goldman Sachs, wait for blood in the streets, go to cash. Even though inflation's eating away at this rising market, even with more QE, has an expiration date. If you're young enough, you can wait. If you're old, you need to get out to the top. The risk parity stock bond portfolio, whether it's 60-40, 70-30, is correlated risk, not hedged risk. It's an absolutely disastrous portfolio scenario that many people are still in. Many RIAs are still stock and bond hedged. That's the worst thing you can do. I think if you have any ability to get physical precious metals, not ETF precious metals, and not bank-owned gold, but privately owned gold. Of course, I have a huge bias in favor of that. I also think, to Rick Rule's point, if gold does reward extravagantly for the patient, those who have the time, there are certain junior mines, and I'm not even a mining investor. I stay away from that, not because I think it's wrong. I just don't know enough. But I do know commonsensically from 30,000 feet that when gold rips, those few companies, those few junior miners, for those who can afford the risk and the time, it's something I would buy and never look at again until it makes you extravagantly happy if you're rewarding the patient. So I would stay away from risk parity portfolios. I would definitely buy physical gold as a currency insurance, not as a speculative asset. And for those that are looking to speculate and look for that Bitcoin-like return, I would look at junior miners. And I'm not even in the mining space. Again, I would just diversify into commodities. We're heading into a commodity super cycle. You've got to think of this long term, not quarter to quarter, month to month, week to week, day to day. If you're worried about risk, absolutely go to cash, more to cash than you were before, because trying to time a top or a bottom is impossible, but we're certainly hitting a top and we're heading towards a cliff.
Why are you so anti-gold ETFs?
Because they don't really own the gold that's in them. I mean, there's so many intermediaries, there's so much hypothecated gold. The custodians of that gold are like HSBC, and those banks, we know very well what physical gold they have and don't have. They may have it on their balance sheet, but it's already lent out and hypothecated and levered in 50 different directions. So when it comes time for actual delivery, like in a case of actual liquidity at SVB or actual gold delivery at Morgan Stanley, when you need it most, it may not or won't be there. There just isn't enough gold in their deposits or in their actual control that they actually can get to you. It's all papered and hypothecated out. It's commingled, it's non-segregated, it's just not physical gold. And again, this isn't PR for my organization. There are others who do this as well. You have to own gold with a serial number linked to your name that isn't commingled, that's in a safe vault in a safe jurisdiction, and that isn't being levered. And ETF gold, they may have trusts and they may have accounts that say there's a one-to-one link for every dollar to every ounce. It's just not true, because the intermediary risk and the amount of leverage that goes on behind the scenes in the banks that supposedly custody that gold for those trusts and ETFs are bad actors. I mean, again, I'm not saying every banker is evil and every bank is bad, but they can't help themselves but use leverage and rehypothecate assets, including gold. They just don't have it. The notional value or the levered value compared to the actual net value of their gold just isn't there. And we've written a lot of articles on ETF gold risk. It's not sensationalism. It's just looking under the hood a little bit more. If you want to speculate and play gold price moves, you can use ETFs like hedge funds do, and you can use options. But if you want to insure against dying currencies, like you insure against a home or life insurance, you want to have physical precious metals purely as an insurance asset. I joke, I'm an insurance salesman. I'm not a gold speculator. I have macro thoughts and I've had a lot of experience in risk assets, but at the end of the day, what am I now? I'm a high conviction insurance salesman for dying currencies, and they're all across the board dying. The dollar is relatively strong, but as we joked last time, it's just the healthiest patient in the ICU, and its days are limited.
Healthiest patient in the ICU, what is it? Lost horse in the glue factory.
Yeah, exactly.
Yeah, I like to say,
keep it simple.
I like to say cleanest shirt in the dirty laundry basket.
Exactly. That's the same thing. Yeah.
Again, Matthew, great metaphors and fantastic analysis. Thank you so much for joining us with your insights and your analysis. Really appreciate it. As always, Matthew Piepenburg.
Thanks again, Michelle. It was a real pleasure.
All right. Thank you. And thank you for watching. If you're watching us on YouTube, remember to subscribe. I'm Michelle McCrory. We'll see you next time.
Cash for gold, 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 gold. That's flame shines. Don't you fold, coins and beats, they collide. Oh, under the lights.
Hello, I'm Michelle McCrory. You are watching Kitco News. As global markets are grappling with the aftermath of several big bank failures, the Federal Reserve has announced that its FedNow instant 24/7 payment network will be fully launched in July. Now, this is widely seen as laying the groundwork for facilitating a CBDC, or central bank digital currency, also known as FedCoin. Now, generally speaking, a central bank digital currency is the digital form of a country's fiat currency. A CBDC is issued and regulated by a nation's monetary authority or central bank. It is programmable, so it can be modified to work or not work in certain transactions, and it allows authorities to monitor every single payment made and received, obliterating financial privacy and anonymity. Now, supporters of CBDCs claim that they will prevent money laundering, deter criminal activities, and help maintain law and order. They say that CBDCs will very importantly improve the speed and security of transactions and that they can be used to fine-tune monetary policy and allow for financial inclusion. Critics, however, warn that CBDCs are the ultimate tool of control, censorship, and surveillance. Well, like it or not, 114 countries are already in various stages of developing CBDCs, including 11 countries that have launched theirs. And here in the United States, President Joe Biden, in March of 2022, issued Executive Order 14067, which facilitates the development of digital assets, including CBDCs. In November of 2022, the New York Federal Reserve launched Project Cedar to test a wholesale CBDC for cross-border payments. So are central bank digital currencies a way to facilitate more efficient transactions, or an Orwellian tool of oppression? And how does the FedNow payment system play into all of this, especially in the context of the recent major bank runs and failures? Well, joining me to discuss all of this and more is Richard Werner, professor of banking and economics. Richard is the author of Princess of the Yen. He is the father of the policy concept known as quantitative easing, and is an expert on central banking and central bank digital currencies. Richard has diverse experience in government, academia, and banking, including senior roles at Jardine Flemings and Bear Stearns. And he's also consulted for the Asian Development Bank, Japanese Ministry of Finance, and Bank of Japan, as well as others. Richard, very good to have you with us. Welcome to Gitco.
Thank you for having me. It's a pleasure.
All right, Richard, we have a lot to discuss, including the FedNow system and especially what it means in the context of the current banking crisis. But before we do that, I want to get more background and basics on CBDCs in general. Now, initially, the idea was launched by the People's Bank of China. And one could say that anything that the People's Bank of China champions should be questioned. But give us the background of its inception and the basics of what a CBDC is.
Right. Well, I think we should start with the name because, you know, there's this name CBDC, Central Bank Digital Currency, is clearly deployed as something that's supposed to give the impression that this is something new. It's technical. It's digital. It's modern. It's the central bankers simply upgrading with there's a new tool. It's a technical thing. Don't worry too much about it. But it's a new thing. That's also what this name suggests. Well, how new is it? How true is this? The fact is, we've been using BDC, if you want to call it that, bank digital currency, for decades. It's an old thing because that's actually the money that we're using in our economies worldwide for many decades. Money gets transferred through the banking system. In fact, money is created and invented and put into circulation by the banks through the act of lending, credit creation, money creation. That puts the money into the system. Essentially, almost all the money we're using was originally created by banks through lending. So the money that we have, because you see, Federal Reserve notes, paper money, is only 3% of the money supply, something like that. So over 90% is bank digital currency. It's just that nobody called it that. Mm-hmm. So you can already tell that there's an intention here with this name. To give the impression it's something new, that's different, sort of we need to have it, when really the fundamental concept is not new. We've had bank digital currency for ages, and actually there's nothing wrong with bank digital currency. You could argue perhaps that the settlement by and through banks has been somewhat slow. That is where the new Fed settlement system comes in. And therefore the timing is suspicious. Why do they roll this out now? Why not, 15 years ago or a decade ago? And of course, the banking system has done its job well in terms of making transfers of funds and payments. So why do we not suddenly need to change it? What is this CBDC about? Obviously, the difference is the C, the central. Mm-hmm. What we've had so far in America has really benefited very much from is a decentralized monetary system consisting of literally thousands of banks. They're all creators of the money supply through their decision of who gets a loan, which small firm, and you know they're kicking the tires, they're checking the loan applications. It's a very decentralized structure at the heart of the economy, and now there clearly is a drive to introduce something that is far more centralized, central bank digital currency. So that's one important aspect already that goes to the heart of the issue. Do we want a centralized system? A centralized system with central planners in charge, or do we want a decentralized system where many people make decisions and the central planners are not so powerful because there's many others that make important decisions? So this centralization is a very, very important aspect of what's going on. And of course, there's a problem with centralization. The centralization, you see, once you start centralization, it just continues. You centralize more and more and more. In fact, that's really what's already been happening for several decades in the banking system. What does it mean, centralization? Well, concentration. The number of banks actually declining. In the US, in the last 35 years, 10,000 banks have disappeared. In Europe, there's a new central bank, the European Central Bank, ECB, and it's a young central bank, only 23 years old, and yet they've succeeded in killing 5,000 banks already under their watch through their policies, and it's an official policy. They say there's too many banks, we want fewer banks. Why? Well, they're a central bank where the central planners work, and central planners want to centralize. Now, where does this lead to? If policies continue that are not really helpful for banks, and we can come to that, recent examples, you know, runs on particular banks, and what's the role of the central banks in this? Anyway, the number of banks will continue to decline until what is left is the central bank, only one bank. Now, we've had this before. We've had this in the Soviet Union. The Soviet Union is the prime example of a centralized economy with central planners in charge, and you have one central bank. And the central planners are most powerful, and they have a centrally planned economy. Now, this doesn't deliver success. The decentralized system, it's empirically very well established, is far more successful, more efficient, more effective, and more resilient to shocks. It's more flexible, and the decisions are likely to be better if you've got 100,000 loan officers in thousands of banks making these small decisions. The aggregate result is going to be far superior to 10 central planners making the decision how much money to create, who to give it to. The second point, and then I'll end my response, is the CBDC also means something quite extraordinary, namely, you know, when you watch a play of a game of football in Europe, we've got soccer. Anyway, there's always an umpire, somebody who's watching that the rules are being kept, and there's an equal level playing field, and it's a fair game. Now imagine this umpire suddenly says, well, I'm getting a bit bored here. I want to score some goals myself, and starts to run after the ball. And oh, somebody's trying to stop it. Well, give the red card in soccer, the yellow card, you get off the field, I use my whistle and make the way free. Who's going to score most? Obviously, the umpire will score and win the game. So umpires shouldn't join the game. Well, that's what's happening when central banks issue CBDCs. Why? Because the other thing that a central bank digital currency really is an account at the central bank. And retail CBDCs, which is the type that for a long time the central banks have been pushing, means that ordinary people and companies have an account at the central bank, which means they don't need the bank. So the central bank, which is the bank regulator, used to be an umpire, is suddenly stepping into the arena, into the game, is participating, is competing against the banks. That's an extraordinary development, because also it immediately shows, hang on, isn't there a conflict of interest?
Yeah.
And with that in mind, because these plans have been around for a long time, it's not a sudden thing, this idea of CBDCs. we should revisit the past 10, 15, maybe 20 years of central bank policies, because if their goal is, oh, there's too many banks, we need to reduce the number of banks, and by the way, we're going to compete against banks, then maybe all their policies, monetary policies, regulatory policies, could have been affected by this conflict of interest, and maybe the policies were more or less designed to reduce the number of banks and allow the rollout of central bank digital currencies, which are, as you correctly pointed out, that's the third feature, they're not really a currency also, they're a control tool more than anything.
All right, a lot to break down there, and I get you're making several points here, including that perhaps this was by design for a central bank national authority to have more control over the traditional financial system. That consolidated power, as we know, is ultimately a bad thing. You want more independent players for a number of reasons, certainly one of them being economic freedom. I get that digital payments have been around for a very, very long time. I mean, who practically uses cash anymore? But let's expand on the idea of the basics of a CBDC, how it's potentially different because it operates on the blockchain, therefore allowing for transactions to be monitored 24/7. And sure, governments can sort of solicit or get the banking details from banks, but this would give governments a direct way to see every single transaction made, every single payment made, every single payment received. So break down that idea for us, how essentially it's just a form of fiat currency, but that is on a blockchain type of platform potentially, and that it eliminates privacy, eliminates anonymity, and can also be potentially programmable. Expand on that for us, please, Professor.
Yes, well, the key aspect is really the programmability. The blockchain, in a way, is a bit of a distraction because it could be on a blockchain or not. It doesn't have to be. You have different options, and ultimately, they could even, just before launch, change their mind, say, oh, it's not going to be, distributed ledger blockchain. The key thing is it's programmable. The technology is there to not just monitor every single transaction, but also to analyze this in real time and intervene, step in. And you can have, very quickly, using algorithms, AI, ways to reshape society and essentially introduce a social credit system, as we've seen in China, where you get rewarded for certain activities, you get punished for others, and the punishment will include, your money is not going to work for certain transactions. And the central planners will decide what's good for you, what you're allowed to buy, where you're allowed to buy it. Oh, you're outside your 15-minute city area. Oh, sorry, your currency, your CBDC is not working anymore. And you can then also even fine-tune what type of things you're allowed to buy. This book is okay, but Princes of the Yen at quantumpublishers.com, well, that one, we don't want you to read and find out how central banks have been manipulating the cycles and the economy to increase their power. And so it doesn't work. You can't buy it.
Right.
They can essentially decide what's going to happen in society. Now, that is such totalitarian power. And they've said this, they've said in various speeches, also at the BIS, the Central Bank of the Central Banks, where they've got a big project on CBDCs, how this is a marvelous, exciting technology that will give them so much power. And so far, the tools that we've had and they've had, they don't give them these powers. And that's, of course, why they don't like cash. And they don't even like bank digital currencies, the bank money that we've been using, because the banks have been very good. They have not abused their position of power in the sense that they have not intervened to manipulate our transactions. And they've even, to my knowledge, been quite good about bank secrecy, because we know that if you buy something on Amazon and other, online retailers, all of them, the information of your transactions is being used. Your searches in Google and so on is being used. Banks have, to my knowledge, essentially been lagging very much behind and have not exploited the wide area of information they have on us and our transactions. So based on this record, we should rather actually trust the banks because their history has been less exploitative of the knowledge that is there. And with central bank digital currency, it is linked to central planners who love to centrally plan and intervene and tell us what to do.
Right. Is the idea here then, Professor, to create a totally cashless society? Because, you have called this the most totalitarian control system in human history, that it is the ultimate tool of censorship and surveillance. And you've given some examples now. And of course, as I said, there's concerns about privacy, there's concerns about government overreach. Fast forward, assuming this does not get prevented, and we'll talk about that in a little bit, but fast forward, if we fail to stop this and this does in fact get implemented, what does that look like? Paint that picture for me. Cash is taken out of the system. We're all forced to use central bank digital currencies. How do we transact? How is it distributed? And what could that mean in terms of what you call the most totalitarian control system in human history?
Yes. Of course, the precondition for this to be so totalitarian is, as you point out, to eliminate alternatives. And that has been happening. Cash is being de-emphasized. In some European countries, you literally, they don't use cash anymore. In China, they use digital payment systems. Also, cash is very, very rare in the big cities anyway. But the big alternative is bank digital currency, and that's why it's so concerning to see suddenly runs on reasonably large, medium-sized American banks. Very strange, because it doesn't have to happen. If the regulators do their job, then it doesn't have to create such a we don't have to see such a situation. So the alternatives need to be eliminated. Then you have central bank digital currencies left. Now they say, and perhaps quickly to address that, this is good, because then we can, as you mentioned here, we can be more efficient with monetary policy. We can have inclusion, financial inclusion. We can restrict money laundering, cyber, crime, and things like that. Well, actually, all these problems can be addressed with other things quite well, and we don't need the central bank to be involved. Financial inclusion has been taken care of in many countries in other ways, and if the politicians want to address this problem, because that's a political question, you can solve it. You don't need CBDCs for that. The same for criminal actions. Well, there are already tools for that and policies. The CBDC is not really needed for that. There's alternatives, so it's not a convincing argument. What about monetary policy? Well, that's an example of what they can and will do, and they've told us already. When there's only CBDCs left, they say monetary policy works better. Why? What do you mean? What's going to work better? Well, sometimes it will be necessary to move interest rates very low. In fact, have negative interest rates. Okay, well, and if we have alternatives to CBDCs, if you can put your money into cash, then of course we can't enforce the negative rates. Why? Because what is negative rates? It just means they will take away parts of your money every month, will be booked out of your account automatically. Sorry, it's a negative interest rate. It's like a tax. It's like taking your money. Mm-hmm. And of course, if you have cash as an alternative, well, thank you. I'm going to move all the money into cash. Is what people sensibly will do. That's why they don't want these alternatives, so they can just take your money. Now, this is just the beginning, because the real totalitarian aspect comes into it when the programmability is used, where it can be totally fine-tuned down to the person and in real time influence our behavior by restricting us from doing certain things and allowing us to do only other things. Or whenever you use money, essentially from now on, once you've got CBDC as the only option, you'll need the permission of the central planners. What? Is this the United States of America? Where's the freedom? I need to ask a central planner, bureaucrat, how to spend my money? Well, that's the other thing, because they want your money to be in an account with the central bank. And you know, the legality of this is, once you put your money with the central bank and the central bank issues your CBDC, legally they own the money. They have the money. Legally, you don't even own it anymore. You have a claim. But sadly, this claim is subject to a number of conditions. That is the programmability. And so maybe if they like and agree, they will let you spend on this occasion if you're in the right place and you're buying the right thing and haven't used up your carbon credits or whatever scheme they want to enforce.
Right, and Professor, you know, people hear this and they go, oh, that sounds crazy. The government isn't going to tell you what you can and cannot buy or pay for. But we saw COVID just to the extent of how government overreach can go. I mean, we had certain countries, certain places in the world imposing curfews. People weren't allowed to leave their house after certain times. If you have a programmable digital currency, well, guess what? It just doesn't work after a certain time period. We had certain countries impose what are essential goods to buy. A programmable digital currency will just be programmed to not work to buy certain goods that the government doesn't seem to be essential at that time. And of course, we saw the example of how this could curtail freedom of expression and protests with the truckers in Canada. We had the Freedom Convoy, the truckers who were protesting against the vaccine. A whole other issue whether or not you're for or against the vaccine, but here are people wanting to express their opinion. And we had the government of Justin Trudeau effectively issue an emergency law telling the banks that they have to take these people out of the system. It still required some coordination with a bank, but with a programmable digital currency, you can do it just like that.
Exactly.
And there's also, of course, the threat that people know that this could be done, so that forces people to behave accordingly for fear of being taken out of the system. Yeah.
Exactly, precisely.
Now, you said the word they several times in your answer there. Who is the they of which you speak?
Well, I was quite specifically referring to the central planners.
Okay.
And essentially, it's well known in, for example, in political science. There's a so-called theory of bureaucracy. What happens when you establish a bureaucracy that has certain powers, for example, to issue permits and licenses and authorize, and they have powers to intervene in the economy and society? Well, we know human nature, and we have a long track record in history of what happens, and it's always the same. So the theory of bureaucracy says that bureaucracies, even maybe they start out with the good intentions and you attract people to work there with good intentions for the benefit of society, but ultimately pressures are on, you're in a hierarchy and they're following the logic of their organization. Ultimately, the goal will become just to increase the power of that bureaucracy, and that's always the tendency. Now put that together with the power of money and the power that control over money gives you, and you have a central planning, central bank bureaucracy. And so I was referring to these central planners, and they're only human, and that means they're subject to the temptations that all humans are subject to when they're given too much power, which is why decentralized systems historically have been superior, because mostly humans can't handle too much power. Lord Acton says, power corrupts. Absolute power corrupts. Absolutely.
Yeah, absolutely, Professor. Before I break down a couple of other issues, just on the pragmatic side of things, I mean, wouldn't something like this be more susceptible to cyber attacks potentially? And, you know, what happens to a digital currency if we are completely cashless and we are completely digital when the power goes down?
Exactly. And these are some of the weakness and flaws in their arguments. And essentially, they've just come up with the longest possible list of reasons why we need this, but almost on every single point, you can show that we don't need it. There are alternatives. There's some more resilient, some better, some superior alternatives. usually decentralized and not relying so much on a particular, quite narrow and sophisticated technology. Because we know the more complex systems get, the easier actually they are to break down. And just to give an example, what if there is, as you say, the cyber attack, or we just have a power failure, which is now not really out of the extraordinary in some countries, in Europe even. Some are running out of energy, and these things do happen. Well, sorry, then nothing works, because you do need electricity for the system to work. And that is not even mentioning the possibility of various software problems and errors that, the software we use in our computers, I mean, the ones that I'm using are very, very faulty, and to then actually have to rely on this for crucial and really necessary functions always is a concern. You're increasing the vulnerability.
For sure, a number of points of vulnerability, especially as the world is grappling with an energy crisis. Many would say a self-imposed energy crisis in certain parts of the world, but nonetheless, there is rising incidences of power outages, which sort of negates much of the argument of the efficiency of a digital currency. I want to discuss the Fed Now idea before we talk about how this is being perceived in the United States and what can be done about it. Because as I say, we're in the middle of this banking crisis, and the Fed says that it's ready to launch its Fed Now system, which shares goals with CBDC. It doesn't use cryptocurrency or distributed ledger technology, but it has been advanced as a complement, if you will, to central bank digital currencies. And many are saying that this is a precursor, that this will precede a CBDC. So firstly, help us understand what Fed Now is exactly.
Well, it is a settlement system for transactions, for financial transactions, that is offered by the Fed and run by the Fed. In that sense, it's not really new either, because in other countries we have these systems already run by the central banks, and they've been in place for a long time, and there have been no issues. So it is possible to have the system, and it can run smoothly and doesn't need to be a cause for concern, and can increase speed of settlement and things like that. What is concerning is that we know that this has not been introduced so far in the United States. And why is it just rolled out right now at a time when we do have concerns about the intentions of the central planners, because they have told us about those intentions. And central planners at the central banks have said, oh, banks, there are too many banks, and well, we need to improve the system by having more centralization. Well, that, together with this introduction now, is somewhat suspicious. And I think that is really actually the underlying reason why we have still worries about the banking system at the moment in the US. If you have the central bank on your side as a bank, and in general the banking system, then it's rare that you have bank runs. But I think what people have realized is, well, hang on, there's a conflict of interest. The central bankers want to compete against banks. So we can't really trust them anymore to really take the benevolent policies that are good for society and create stability. Maybe there's a different agenda. Maybe it's all about rolling out their central bank digital currency. And you see, that's why this is, a genuine concern. And really, the central planners, the burden is on them to demonstrate that they actually have everyone's benefit and welfare at heart. We haven't seen much evidence of that.
Look, many are saying that the timing is very, very curious. We've had a slew of bank failures in the US, Silvergate, Silicon Valley Bank, Signature Bank, liquidated hundreds of billions of dollars in assets in Europe. Credit Suisse given a $54 billion credit line from the Swiss government to shore up its banking operations. We're seeing consolidation in the traditional banking system, which, as we discussed earlier in this interview, is not a good thing for a number of reasons, certainly economic freedom being one of them. And some have speculated that these ongoing crises will be exploited to bring about CBDCs. Nick Carter, who's the general partner at Castle Island Ventures, a big VC firm which was an early investor in BlockFi and Bitwise, who's very vocal about these things. He tweeted out, "The political case for CBDCs became much, much stronger this weekend. The issue with CBDCs was always disintermediating commercial banks, but now that no one trusts commercial banks, ... So I think the implication is that since people don't trust their money with the banks, perhaps they'll be more open to this idea of a CBDC and money in their CBDC digital wallet. And this could be a way to sort of manipulate perception of this issue. What do you make of Nick Carter's assessment or views there?
Well, there's no doubt that this is how many people will see it. We can't trust the banks. And, oh, what alternatives are there? Oh, the central bank is offering this, very good. But at the same time, more and more people are realizing, as I'm sure he is, that this is intentional. Now, already 23 years ago, I warned about what I called regulatory moral hazard, or I also alternatively called it central bank risk. The risk that the central planners, the regulators of the banking system, have a different agenda because we've always rewarded them for each failure, for each crisis, by giving them more powers. And literally, you can go back to any major crisis, financial crisis. In the aftermath, the story is always, well, it's too bad this happened, and obviously we need more powers to prevent this next time. They say this each time. And each time we give them more powers, literally, more power to make decisions, interfere, it's been quite dramatic in Europe. The ECB has become even more powerful, already was the most powerful central bank, and in terms of lack of accountability and so on. And so it's this regulatory moral hazard. So I warned, as a result, we're likely to see more and more crises, because the key decision makers who could stop and prevent that, they benefit. They just get more power each time from each crisis.
But you said that this is intentional. I mean, that's a pretty big statement. Intentional by design or intentional as a byproduct of not the best thought out policies? What exactly do you mean by this was intentional?
Well, what I said is, it looks like it could be intentional, and market players, some are saying it's intentional. Now, whether it is or not, we have to see in each case, but certainly the suspicion is out there, and there's plenty of people tweeting that, hang on, why are they doing this? Where was the Fed when, $48 billion in deposits were withdrawn from Silicon Valley Bank Thursday, a week ago?
So you're saying intentionally designed to bring down some of these big players, Silicon Valley Bank, second largest bank in the United States, intentionally intended to create then lack of confidence and a run on other banks, which then goes to consolidate the system? Well,
any policymaker, any policymaker that makes policies, the presumption has to be that whatever policy they're actually taking is intentional. That is the presumption. I'm not the only one presuming this in many cases. I mean, presumably when the Federal Reserve makes a decision about action or inaction, it is due to analysis of the situation and rational action based on that within their powers and legal framework. That is called intention. I mean, do you think that the Fed is constantly, has got their eyes blinded, they're running around like a headless chicken? Is that really the pattern? Well, actually, the pattern is quite a consistent pattern over a long time period. There's actually, there's an approach in economics started by Paul Samuelson, one of the most famous economists in the last half century. He called it revealed preference. He said, and applied to central banks, paraphrase, this means don't really listen to what they say, Watch what they do. Their actions tell us what their real intentions are, because what they're doing, that is what they want to do, particularly when they're powerful and they have a choice of actions. Clearly the burden of proof is on them to show that what they're doing was an accident or something.
Well, they say by their actions you shall know them, but at the same time, and again, just to play devil's advocate here, there is also the expression, don't attribute to malice what can be explained by stupidity or inefficiency. So is
Yes,
this
well, we all
again by
know
design?
that central banks are among the smartest people in the world.
Okay. So this isn't, in your mind, they don't know what they're doing. They're doing this intentionally.
I will always give each person the benefit of the doubt, and I've met really literally very smart central bankers, and mostly the majority of staff at central banks are actually very well intentioned, but they are organizations and bureaucracies, and each individual has restrictions of what they can do. And even though the majority of individuals will do whatever, if they can, will do whatever's best for the US in America, the trouble is there's a limit. They have a boss. The boss has a boss. There's a structure, the policies, and it's an organization. So within these restrictions, the result may be quite different from the individual intentions of a lot of the very well-meaning staff. But we've seen this in many organizations, that's nothing new.
All right, Professor, I know we're running out of time here, but we have to address this very important issue before we let you go, and that is whether this is in fact inevitable or if this can still be stopped. Now, Fed Chair Jerome Powell says that they're still exploring the idea that it could take years until officials decide to implement a central bank digital currency. There does seem to be consensus that this, at the very least, would require congressional approval. Now, because CBDCs could be used as tools of surveillance and control, thankfully, there is some pushback against this. House Majority Whip Tom Emmer has introduced the CBDC Anti-Surveillance State Act, which would ensure that any digital version of the dollar must uphold our American values of privacy, individual sovereignty, and free market competitiveness, as he puts it. And Representative Emmer is pushing for oversight over the Fed. He wants to prevent central bank digital currencies being issued directly to individuals, which he says would erode Americans' rights to financial privacy. And he's rightly concerned. He's rightly concerned that this opens the door to the development of what he calls a dangerous surveillance tool. Representative Hill, one of the co-sponsors of the bill, says that the government cannot and does not have the authority to issue a CBDC directly to individuals without explicit congressional approval. And he says that he, quote, aims to protect the financial privacy of individuals, their civil liberties, and stop efforts of federal overreach to surveil Americans. So it's reassuring to me, at least, that there is awareness, that there is pushback. Can this CBDC idea still be thwarted? And if so, how?
No, I think it's a good idea, and it's good to get politicians involved. They should be involved. Because in many countries, the trouble has been that it's considered a very technical issue. CBDCs, it's a technical thing, let the experts do it. That's how central banks, central planners have been trying to position themselves for decades already with whatever they're doing. Oh, this is technical. You don't have a PhD in economics, which is not really that helpful to understand what they're doing very often, by the way. But you can't join the conversation. Sorry, you're not an expert. That's how they do it, how they like to do it. So it's really important that we go out and the public needs to discuss this. It needs to become a big topic for general conversation, perhaps in the context of all the restrictions we've seen in the last 3 years. And a lot of people have woken up. Well, hang on, this is a bit odd. So many unnecessary restrictions with very strange logic and contradictory logic. What's going on here? And this is a key example. And by the way, of course, in March 2020, many central banks immediately stepped up while a COVID pandemic was declared. They stepped up their argument that we need to push for digital IDs. And it was linked to, of course, some kind of vaccination passport system and things like that. But the real aim was digital ID, which you need for your CBDC, you see. So there is a link in terms of the timing. And we should get our politicians involved. Everyone should write to their local politician, to their local representative, to their senators, to get involved in this debate. This is somewhat un-American. This is in the Soviet Union. You'd probably think, yeah, okay, or China. You know, this is sort of what we know from regimes where there is a lack of individual freedom at times. But it's not really very American. And of course you could say, well, but they won't use these powers. Yes, probably the first generation will be much more well-meaning and maybe they won't use it. But how do we know the next generation? By that time, some shocks happen, some crises, some other crises happen. And suddenly, I'm sorry, but it's necessary for your protection, for your good, that we're gonna use this in a much more totalitarian way. I mean, you can just see how it's panning out.
Yeah, once the toothpaste is out of the tube, it's very hard to put it back into the tube and control how it would be used and administered, and that politicians will be responsible in using this. Professor, I know we're out of time. We have a lot more that we want to discuss with you, so we will have you back on Kitco News very, very soon to unpack more of these issues, including where the various currencies are in stages of development around the world. We'll have to have you back on to chat about that, and also whether the US can not go along with this if the rest of the world does. But for now, thank you so much for joining us. Really appreciate it, Professor Richard Werner. Thank you for your time.
Thank you, Michelle. It's been a pleasure. I hope to see you soon.
All right, you can count on it. And thank you for watching Kitco News. I'm Michelle McCory. If you're watching us on YouTube, make sure to subscribe. We'll see you soon.
Dance magic. Take my hand. This is our night, our golden land. Cash for gold. This flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash for gold and coins in desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, and in desk planes, weaning in the fast lane. Cash for gold, and in desk planes, weaning in the fast lane. Shining bright, call coins in desk planes, feel the fire tonight. Yeah. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Yeah, yeah. Coins are spinning, hear them ring. Desk planes love, let's dance and sing. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, yeah. Desk planes magic, take my hand. This is our night, our golden land. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Oh, under the lights, let's ride. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Oh, under the lights, let's ride.
Kasa za złoto i monety w Despedes. Poniechać to nie sen. 847376881. Zrób to deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Złoto i monety w Desplenes. Płonie hajs, to nie sen. Dzwoń 847376881. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplenes świeci, błyski haj. Nie czekaj, graj, Despedes świeci, błyski haj. Kasa za sedło, to nie czekaj, graj, Despedes świeci, błyski haj. Kasa za sedło, to i monety w Despedes. Płonie hajs, to nie sen. Dzwoń 847376881. Zrób ten deal, to jest plan. Kasa za sedło, to i monety w Despedes. Płonie hajs, to nie sen. Dzwoń 847376881. Zrób ten deal, to jest plan. Kasa za sedło, to nie czekaj, graj, Despedes świeci, błyski haj. Kasa za sedło, to nie czekaj, graj, Despedes świeci, błyski haj. Kasa za sedło, to
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We're number one.
Cash for gold, the deal so bold. There's planes it shines, I've been told. Call now 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, Pick up that phone, 847-3076, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free, sets you free. Whoa.
Kasa za złoto, benefit bez plenes. Pojechaj, stoję sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Kasa za złoto i monety w bez plenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Kasa za złoto i monety w bez plenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Cash for gold, man says it's alright. Trade your treasure, lose your soul, and death plays dreams and a pawn shop's hold. Cash for gold and coins in displays. They trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Dusty counter, memories sold. Silver shines, but the story's cold. Crack pavement outside, breathing dark. There's planes, a place to sell your spark. Cash for gold and coins in displays. They trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Greed's a whisper, calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trade hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trades hands, but it all feels the same. But it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. These planes don't care. The cash of gold, the deal's so bold. And death's planes, it shines, I've been told. Call me now, 847-3768-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them near. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. Death's planes, gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them near. Coins that sparkle, bring them near. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. Death's planes, gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them near. Coins that sparkle, bring them near. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers can fly so high. Turn it to gold, the riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Oh, dial it fast, the number's your key. Your key. Your old treasure sets you free. What's locked in drawers can fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Oh, 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 oh. Your old treasure sets free. Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul in Des Plaines dreams in a pawn shop's hold. Cash for gold in coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yeah, Des Plaines don't care. Dusty counter memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. Des Plaines, a place to sell your spark. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yeah, Des Plaines don't care. Des Plaines don't care. Where's the riches? Where's the dream? Des Plaines moon, just a hollow gleam. Greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yeah, Des Plaines don't care. Des Plaines don't care. Des Plaines don't care. Des Plaines don't care.
Cash for gold is shining bright. Coins in Des Plaines fill the vibe tonight. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Coins are spinning, hear them ring. Des Plaines love, let's dance and sing. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Des Plaines magic, take my hand. This is our night, our golden land. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash for gold and coins in desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, and in desk planes, winning in the fast lane. Cash for gold, and in desk planes, winning in the fast lane. Tonight, yeah. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Yeah, yeah. Coins are spinning, hear them ring. Dance planes love, let's dance and sing. Cash for gold, 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 gold. Dance plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, yeah. Best place magic, take my hand. This is our night, our golden land. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Oh, under the lights, let's ride. Ooh, ooh, ooh. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Oh, under the lights, let's ride.
Kasa za złoto i monety w Despedes. Poniechać to nie sen. 8473678 zrób to deal, to jest plan. Złote statki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski high. Złoto i monety w Desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplenes świeci, błyski high. Nie czekaj, graj, Despedes świeci, błyski high. Kasa za zedło, to nie czekaj, graj, Despedes świeci, błyski high. Kasa za zedło, to i monety w Despedes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za zedło, to i monety w Despedes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za zedło, to nie czekaj, graj, Despedes świeci, błyski high. Kasa za zedło, to nie czekaj, graj, Despedes świeci, błyski high. Kasa za zedło, to
Cash for gold and coins and desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, make it plain. Best planes blingin' in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes blingin' in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Hit that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes blingin' in the fast lane. We're number one.
Cash for gold, the deal's so bold. There's planes it shines, I've been told. Call now 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Sets you free. Whoa.
Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
Kasa za złoto i monety w bezprenes. To nie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
Kasa za złoto i monety w bezprenes. To nie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul. And death plays dreams and a pawn shop's hold. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Just a count of memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. There's planes, a place to sell your spark. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. where's the dream? This plains moon just a hollow gleam. Creeds or whisper calls my name. Trade it all and light the flame. Cash for gold and coins in this plains. Pain trades hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These plains ain't fair, yet these plains don't care. Don't care. Where's the riches, where's the dream? This plains moon just a hollow gleam. Creeds or whisper calls my name. Trade it all and light the flame. Cash for gold and coins in the plains. Pain trades hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These plains ain't fair, yet these plains don't care. These plains don't care. The cash of gold, the deal so bold. The death plains, it shines, I've been told. Call me out 847-3768-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Death plains, gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Death plains, gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers can fly so high. Turn it to gold, the riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Oh, dial it fast, the number's your key. Your key. Your old treasure sets you free. What's locked in drawers can fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Oh, 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 oh. Your old treasure sets you free. Night. Cash for gold, man says it's alright. Trade your treasure, lose your soul in Des Plaines dreams in a pawn shop's hold. Cash for gold and coins in these plains. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Dusty counter memories sold. Silver shines, but the story's place to sell your spark. Cash for gold and coins in these planes. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Des Plaines don't care. Where's the riches? Where's the dream? Des Plaines moon, just a hollow gleam. Greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in these plains. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Des Plaines don't care. Des Plaines don't care. Des Plaines don't care.
Cash for gold is shining bright. Coins and displays fill the vibe tonight. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold. This flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Coins are spinning, hear them ring. Des Plaines love, let's dance and sing. Cash for gold. This flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Des Plaines magic, take my hand. This is our night, our golden land. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride.
Cash for gold and coins in Des Plaines. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Des Plaines blinging in the fast lane. Cash for gold, 8 ends in Des Plaines, winging in the fast lane. Cash for gold, 8 ends in Des Plaines, winging in the fast lane.
Coins in Des Plaines, feel the vibe tonight. Yeah, yeah. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold, 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 gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Yeah, yeah.
plains love, let's dance and sing. Cash for gold, 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 gold. That's flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, that's plains magic, take my hand. This is our night, our golden land. Cash for gold, 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 gold. That's flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash for gold, 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 gold. That's flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride.
Kasa za złoto i monety w desplenes. Poniechać to nie sen. 8473678 zrób to deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplenes świeci błyski haj. Za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplenes świeci błyski haj. Złoto, nie czekaj, graj, desplenes świeci błyski haj. Kasa za złoto, nie czekaj, graj, desplenes świeci błyski haj. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za złoto, nie czekaj, graj, desplenes świeci błyski haj. Kasa za złoto, nie czekaj, graj, desplenes świeci błyski haj. Kasa za złoto.
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, blinging in the fast lane. silver stacks. We buy it all, no turning back. Cash for gold, make it plain. There's planes blinging in the fast lane. We're number one.
Cash for gold, the deal's so bold. There's planes that shines, I've been told. Call now 847-3768-2821. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3776, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3776, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Sets you free. Whoa.
Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Kasa za złoto i monety w bezprenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj. pełna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Display świeci błysk i haj.
Kasa za złoto i monety w bezprenes. To nie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Display świeci błysk i haj.
Neon buzz on a winter night. Cash for Goldman says it's alright. Trade your treasure, lose your soul. And desk plays dreams and a pawn shop's hold. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Just a count of memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. There's planes, a place to sell your spark. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Greed's a whisper, calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trade hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Greed's a whisper, calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trade hands, but it all feels the same. But it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. These planes don't care. Cash for gold, the deal's so bold. And desk planes, it shines, I've been told. Call them out, 847-3768-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them near. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Des Plaines gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins of sparkle, bring them here. Coins of sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Des Plaines gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins of sparkle, bring them here. Coins of sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers can fly so high. Turn it to gold, the riches collide. Don't hesitate, pick up that phone. 847-37-6, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Oh, dial it fast, the number's your key. Your key. Your old treasure sets you free. What's locked in drawers can fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-37-6, make it your own. Your old treasure sets you free. Nights, cash for gold, man says it's alright. Trade your treasure, lose your soul in Des Plaines dreams in a pawn shop's hold. Cash for gold and coins in these plains. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Dusty counter, memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. Des Plaines, a place to sell your spark. Cash for gold and coins in these plains. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Just a hollow gleam, greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in these plains. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Des Plaines don't care.
for gold. This flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Oh. Silver glows, it's in the air. Golden hearts, they're everywhere. Coins are spinning, hear them ring. Dance planes love, let's dance and sing. Cash for gold. This plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Oh. Touch the treasure, feel the sound. Golden coins, it's all around. Dance planes magic, take my hand. This is our night, our golden land. Cash for gold. This plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Oh.
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, and desk planes weaving in the fast lane. Cash for gold, and desk planes weaving in the fast lane. Tonight, yeah, yeah. Sparkling jeans, oh, can you see? Dancing diamonds set us free. Cash for gold, 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 gold. Dust plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Yeah, yeah. Coins are spinning, hear them ring. Dance planes love, let's dance and sing. Cash for gold, 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 gold. Dance plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, yeah. Dance planes magic, take my hand. This is our night, our golden land. Cash for gold, 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 gold. Dance plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash for gold, 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 gold. Dance plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride.
Kasa to złoto i monety bez blenę. Płonie hajs, to nie sen. 473768281 złotów deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplanet świeci, błyski haj. Kasa za sedło, to i monety w Desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplanet świeci, błyski haj. czekaj, graj, despleny świeci błyski haj. Kasa za złoto, nie czekaj, graj, despleny świeci błyski haj. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za złoto, nie czekaj, graj, despleny świeci błyski haj. Kasa za złoto, nie czekaj, graj, despleny świeci błyski haj. Kasa za złoto.
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We're number one.
Cash for gold, the deal's so bold. There's planes it shines, I've been told. Call now 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your bold treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your bold treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your own treasure sets you free. Sets you free. Whoa.
Kasa za złoto, najlepiej prezes. Pojechaj, stanie sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
Kasa za złoto i monety w bezprenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
Kasa za złoto i monety w bezprenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281, zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
cash for gold, man says it's alright. Trade your treasure, lose your soul, and death plays dreams and a pawn shop's hold. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Just a counter memory sold. Silver shines, but the story's cold. Crack pavement outside, breathing dark. There's planes a place to sell your spark. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Greed's a whisper, calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trade hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in displays. Pain trades hands, but it all feels the same. But it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. These planes don't care. The cash for gold, the deal's so bold. With there's planes, it shines, I've been told. Call me now at 847-3768-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Death planes, gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Death planes, gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers, fly so high, turn it to gold, the riches collide. Don't hesitate, pick up that phone, 847-3768, make it your own. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Oh, dial it fast, the number's your key. Your key, your old treasure sets you free. What's locked in drawers to fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone, 847-3768, make it your own. Your old treasure set sets you free. Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul in Des Plaines dreams in a pawn shop's hold. Cash for gold in coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yeah, Des Plaines don't care. Dusty counter, memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. Des Plaines, a place to sell your spark. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Des Plaines don't care. Where's the riches? Where's the dream? Des Plaines moon, just a hollow gleam. Greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Des Plaines don't care. Des Plaines don't care. Des Plaines don't care.
Cash for gold is shining bright. Coins in Des Plaines fill the vibe tonight. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Coins are spinning, hear them ring. Des Plaines love, let's dance and sing. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Des Plaines magic, take my hand. This is our night, our golden land. Cash for gold. Des Plaines shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash Cash for gold and coins in desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, and in desk planes, weaving in the fast lane. Cash for gold, and in desk planes, weaving in the fast lane. Tonight, yeah. Sparkling jeans, oh, can you see? Dancing diamonds set us free. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Yeah, yeah. Coins are spinning, hear them ring. Desk planes love, let's dance and sing. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, yeah. Desk planes magic, take my hand. This is our night, our golden land. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash for gold, 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 gold. Desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride.
Kasa za złoto i monety w desplenes. Bo nie has to nie sen. 8473678 zrób to deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Kasa za sedło, to i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Kasa za sedło, to i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za sedło, to i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Kasa za sedło, to nie czekaj, graj. Desplay świeci, błyski haj. Kasa za sedło, to
Cash for gold and coins and desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. gold, make it plain. Best planes blingin' in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes blingin' in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money in flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes blingin' in the fast lane. We're number one.
Cash for gold, the deal's so bold. There's planes it shines, I've been told. Call now 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Sets you free. Whoa.
Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Kasa za złoto i monety w bezprenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Kasa za złoto i monety w bezprenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejne świeci błysk i haj.
Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul. And death plays dreams and a pawn shop's hold. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Just a count of memories sold. Silver shines, but the story's cold. Crack pavement outside, written dark. This plane's a place to sell your spark. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. dream. This plains moon just a hollow gleam. Creeds always calls my name. Trade it all and light the flame. Cash for gold and coins in the plains. Pay trades hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These plains ain't fair yet, these plains don't care. Don't care. Where the riches, where's a dream? This plains moon just a hollow gleam. Creeds all whisper calls my name. Trade it all and light the flame. Cash for gold and coins in the plains. Pain trades hands, but it all feels the same. But it all feels the same. Pocket full of nothing, a heart left bare. These plains ain't fair yet, these plains don't care. These plains don't care. The cash of gold, the deal's so bold. In Des Plaines, it shines, I've been told. Call me now at 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them near. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Des Plaines gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Des Plaines gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Coins that sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers can fly so high. Turn it to gold, the riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins that sparkle, bring them here. Oh, dial it fast, the number's your key. Your key. Your old treasure sets you free. What's locked in drawers can fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Your old treasure sets you free. Night. Cash for gold, man says it's alright. Trade your treasure, lose your soul. In Des Plaines, dreams in a pawn shop's hold. Cash for gold and coins in these plains. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Dusty counter memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. Desk planes, a place to sell your spark. Cash for gold and coins in these planes. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Desk planes ain't fair, yet dead planes don't care. Desk planes don't care. Where's the riches? Where's the dream? Dead planes moon, just a hollow gleam. Greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in these planes. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Dead planes ain't fair, yet dead planes don't care. Dead planes don't care. Dead planes don't care. Dead planes don't care.
Cash for gold is shining bright. Coins and displays fill the fight tonight. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold. Flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glows, it's in the air. Golden hearts, they're everywhere. Coins are spinning, hear them ring. Death planes love, let's dance and sing. Cash for gold. Death plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Death planes magic, take my hand. This is our night, our golden land. Cash for gold. Death plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Cash for gold and coins in desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes blinging in the fast lane. Cash for gold, and in desk planes, weaning in the fast lane. Cash for gold, and in desk planes, weaning in the fast lane. Shining bright, coins and desk planes, feel the fire tonight. Yeah, yeah. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold, desk plane shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride.
Cash for gold, 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 gold. That's playing shines. Don't you fold, coins and beats, they collide. Oh, under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, Best Plains magic, take my hand. This is our night, our golden land. Cash for gold, 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 gold. That's playing shines. Don't you fold, coins and beats, they collide. Oh, under the lights, let's ride. Ooh, ooh, ooh. Cash for gold, 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 gold. That's playing shines. Don't you fold, coins and beats, they collide. Oh, under the lights, let's ride.
Kasa za złoto i monety w bezplenes. Bo nie has, to nie sen. 8473678 zrób to deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za zedło, to nie czekaj, graj. Bezplenes świeci, błyski haj. Złoto i monety w Desplenes. Płonie hajs, to nie sen. Dzwoń 84737682881. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za zedło, to nie czekaj, graj. Desplenes świeci, błyski haj. Nie czekaj, graj, Desplenes świeci, błyski haj. Kasa za zedło, to nie czekaj, graj, Desplenes świeci, błyski haj. Kasa za zedło, to i monety w Desplenes. Płonie hajs, to nie sen. Dzwoń 84736782881. Zrób ten deal, to jest plan. Kasa za zedło, to i monety w Desplenes. Płonie hajs, to nie sen. Dzwoń 84736782881. Zrób ten deal, to jest plan. Kasa za zedło, to nie czekaj, graj, Desplenes świeci, błyski haj. Kasa za zedło, to nie czekaj, graj, Desplenes świeci, błyski haj. Kasa za zedło, to
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, blinging in the fast lane. Planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Best planes, blinging in the fast lane. 7376821. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. There's planes blinging in the fast lane. We're number one.
Cash for gold, the deal's so bold. There's planes that shines, I've been told. Call now 847-3768-281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Sets you free. Whoa.
Bardzo wyraźne pytanie, które nie mieliśmy publicznie sami. Ile razy stawca Sprostego, a przypomnijmy, że wszystko co robi
Dzwoń 847 376 8281 zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Bezplejny świeci błysk i haj.
pełna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Display świeci błysk i haj. Kasa za złoto i monety w bezplenes. To nie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Display świeci błysk i haj.
Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul. And death plays dreams and a pawn shop's hold. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Just a count of memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. This plane's a place to sell your spark. Cash for gold and coins in displays. They trade hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plane's moon, just a hollow gleam. Greed's a whisper, calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trade hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plane's moon, just a hollow gleam. Greed's a whisper, calls my name. Trade it all and light the flame. Cash for gold and coins in displays. They trade hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. These planes don't care. Cash for gold, the deal's so bold. And death's planes, it shines, I've been told. Call me now at 847-376-8281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins that sparkle, bring them near. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Des Plaines gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins of sparkle, bring them here. Coins of sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Des Plaines gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins of sparkle, bring them here. Coins of sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Can fly so high, turn it to gold, the riches collide. Don't hesitate, pick up that phone, 847-37-6, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Oh, dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers to fly so high? Pick up that phone, 847-37-6, make it your Your old treasure sets you free.
Wszystko, co robi kandydata, obciąża kandydata.
Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul in Des Plaines dreams and a pawn shop's hole. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yeah, Des Plaines don't care. Dusty counter memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing gone. Des Plaines, a place to sell your spark. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Just a hollow gleam, greed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in Des Plaines. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Des Plaines ain't fair, yet Des Plaines don't care. Des Plaines don't care.
for gold. This flame shines, don't you fold. Coins and beats they collide. Under the lights, let's ride. Oh. Silver glows, it's in the air. Golden hearts, they're everywhere. Coins are spinning, hear them ring. Dance planes love, let's dance and sing. Cash for gold. This flame shines, don't you fold. Coins and beats they collide. Under the lights, let's ride. Oh. Touch the treasure, feel the sound. Golden coins, it's all around. Display's magic, take my hand. This is our night, our golden land. Cash for gold. This flame shines, don't you fold.
Quiet corner where whispers flow. Quiet corner by the riverside. Morning sun through the windows glide. Whispers of trees in the earth. Quiet corner by the riverside. Morning sun through the windows glide. Whispers of trees in the early mist. Feels like home, where dreams exist. Rolling meadows where the heart beats free. Life flows easy like that gentle breeze. 77 echoes through the soulful air. Call the number, find your haven there. Rolling meadows where the heart beats free. Life flows easy like that gentle breeze. 773 echoes through the soulful air. Call the number, find your haven there. Seize the keys to a calm can. Quiet corner by the riverside. Morning sun through the windows glide. Whispers of trees in the early mist feels like home, where dreams exist. Rolling meadows where the heart beats free. Life flows easy like that gentle breeze. 77 echoes through the soulful air. Call the number, find your haven there. Rolling meadows where the heart beats free. Life flows easy like that gentle breeze. 773 echoes through the soulful air. Call the number, find your haven there. Seize the keys to where calm can grow. In rolling meadows, let the good vibes flow. 77's the code to change your view. Corner dreams, just waiting for you. Shadows of leaves paint the walls in grays. Shadows of leaves paint the walls in grays. Every corner screams of a warm embrace. By the river, life songs on repeat. It's a rhythm that feels so sweet. Pack your bags, let your heart decide. Feel the pull, there's no need to hide. 773's the map to your new start. Find your rhythm, let it steal your heart. Seize the keys to where calm can grow. In rolling meadows, let the good vibes flow. 77's the code to change your view. Corner dreams, just waiting for you. Seize the keys to where calm can grow. In rolling meadows, let the good vibes flow. Let the good vibes flow. 77's the code to change your view. Code to change your view. Corner dreams, just waiting for you. Quiet corner by the riverside, morning sun through the windows glide. Cash for gold, the deal's so bold. There's planes that shines, I've been told. Call now 847-37-68281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins, your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in? Quiet corner by the riverside. Quiet corner by the river. Quiet corner by quiet corner by the riverside. Morning sun through the windows glide. Quiet corner by the riverside. Morning sun through the windows glide. Whispers of trees in the early mist. Feels like home, where dreams exist. Rolling meadows where the heart beats free. Light Life flows easy like that gentle breeze. 77 echoes through the soulful air. Call the number, find your haven there. Rolling meadows where the heart beats free. Life flows easy like that gentle breeze. 773 echoes through the soulful air. Call the number, find your haven there. Seize the keys to where calm can grow. In rolling meadows, let the good vibes flow. 77 breeze the code to change your view. Corner dreams, just waiting for you. Shadows of leaves paint the walls in grace. Every corner screams of a warm embrace. By the river, life songs on repeat. It's a rhythm that feels so sweet. Pack your bags, let your heart decide. Feel Cash for gold, the deal's so bold. There's planes that shines, I've been told. Call now 847-3768-281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. This plains gold deals catch fire. Turn all memories to what you desire. Do what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. That just sets you free. What's locked in drawers can fly so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-3768, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Sets you free. Whoa. Cash of gold, the deal's so bold. And death's planes, it shines, I've been told. Call now 847-3768-281. The treasure trade has just begun. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Death's planes, gold deals catch fire. Turn old memories to what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Dusty coins your dresser hides. Bring them here, unleash their pride. Death's planes, gold deals catch fire. Turn on memories to what you desire. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Coins and sparkle, bring them here. Dial it fast, the number's your key. Your old treasure sets you free. Locked in drawers could fly so high. Turn it to gold, the riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Cash for gold, shine bright and clear. Coins and sparkle, bring them here. Oh, dial it fast, the number's your key. Your key, your old treasure sets you free. What's locked in drawers can fly so high, so high, so high. Turn it to gold, let riches collide. Don't hesitate, pick up that phone. 847-376, make it your own. Your old treasure sets you free.
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Hit that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. We're number one.
Cash for gold and coins and desk planes. We make it rain, yeah, money and flames. Call 847-376-8281. Get that shine, we're number one. Gold bars, silver stacks. We buy it all, no turning back. Cash for gold, make it plain. Desk planes, blinging in the fast lane. Cash for gold, and desk planes, weaving in the fast lane. Cash for gold, and desk planes, weaving in the fast lane.
Kasa za złoto i monety bez bledes. Bo nie has to nie sen. 73736 8 złotą deal to jest plan. Złote statki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za zedło to nie czekaj, graj. Despleniec świeci, błyski haj. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 8473768281. Zrób ten deal, to jest plan. Złote sztabki i srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błyski haj. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błyski haj. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błyski haj. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 8473768281. Zrób ten deal, to jest plan. Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 8473768281. Zrób ten deal, to jest plan. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błyski haj. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błyski haj. Kasa za złoto.
Kasa za złoto, monety w desplenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błysk i haj.
Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błysk i haj. Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błysk i haj.
Kasa za złoto i monety w desplenes. Płonie hajs, to nie sen. Dzwoń 847 376 8281. Zrób ten deal, to jest plan.
Złote sztabki, srebrna moc. Kupujemy wszystko dzień i noc. Kasa za złoto, nie czekaj, graj. Desplenes świeci, błysk i haj. says it's alright. Trade your treasure, lose your soul, and death plays dreams in a pawn shop's hold. Cash for gold and coins in displays. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Dusty counter, memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. There's planes, a place to sell your spark. Cash for gold and coins in displays. Paint trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? There's plains, moon, just a hollow gleam. Creed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in displays. Paint trades hands, but it all feels the same. Oh, it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. Don't care. Where's the riches, where's the dream? This plains moon, just a hollow gleam. Creed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in displays. Paint trades hands, but it all feels the same. But it all feels the same. Pocket full of nothing, a heart left bare. These planes ain't fair yet, these planes don't care. These planes don't care. Neon buzz on a winter night. Cash for gold, man says it's alright. Trade your treasure, lose your soul, and death planes dreams in a pawn shop's hold. Cash for gold and coins in these planes. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Death planes ain't fair yet, death planes don't care. Dusty counter, memories sold. Silver shines, but the story's cold. Cracked pavement outside, breathing dark. Death plains, a place to sell your spark. Cash for gold and coins in these planes. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Death plains ain't fair yet, death plains don't care. Death plains don't care. Where's the riches? Where's the dream? Death plains moon, just a hollow gleam. Creed's old whisper calls my name. Trade it all and light the flame. Cash for gold and coins in these planes. Pain trades hands, but it all feels the same. A pocket full of nothing, a heart left bare. Death plains ain't fair yet, death plains don't care. Death plains don't care.
magic. Take my hand. This is our night, our golden land. Cash for gold. This flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Ooh. Sparkling dreams, oh, can you see? Dancing diamonds set us free. Cash for gold, this flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Silver glow. Coins are spinning, hear them ring. Dance planes love, let's dance and sing. Cash for gold, dance flame shines, don't you fold. Coins and beats, they collide. Under the lights, let's ride. Touch the treasure, feel the sound. Golden coins, it's all around. Yeah, best plays magic, take my hand. This is our night, our golden land. Cash for gold, dust flame shines, don't you fold. Coins and beats, they collide. Oh, under the lights, let's ride. Cash for gold, dust flame shines, don't you fold. Coins and beats,